All right, buddies. So before the break, we were discussing the other areas, that was that 35 AD, 35 ABB and all those things. Now let us go to the other sections, 36, 37 and 40, 40 small a, 40 capital A, all those things. We will have to try and finish as much as possible. Of course, these are all very important areas again. So we'll check it out. So coming to, first of all, section 36. Other deductions. In the notes, let's come to 36. Yeah. Other deductions. First and foremost, we have deduction on insurance premium. So insurance premium deduction, is it allowed on online? People, are you there? Okay. So insurance premium, on what? I can pay insurance on stock, I can pay key man insurance, which we have discussed, or I can pay insurance on the health of the employees through an approved insurer. So interesting to know, in insurance on stock, it is allowed under 36(1) specifically. Keyman insurance is allowed specifically under 37(1), and on the health of the employees, if it is an approved insurer, it is also allowed. But interestingly, they have one point they have raised there. There should be no cash payment with respect to what? Health of the employees. So if they ask you a question in the one of the adjustments in the exam is like this: insurance premium 7,000 paid in cash. If it is for stock, allowed or what? Yes. But if it's for health insurance, not allowed. Even though you have paid less than 10,000 rupees, I'm just saying that 40A3 on less than 10,000, more than 10,000 per person per day is there, right? So even though I've paid less than 10,000, I've just paid 7,000 rupees health insurance in cash for the health of the employees. Allowed or not allowed? Not allowed. That will be disallowed. So that is one extra point here, hidden point. Which one? Which deduction? So if you see, whatever GST, how is it, mapped in the Income Tax Act? So is it like any GST for that matter? Is it like 10,000 plus GST? How will I show it? Should I show it as, let's say, including GST it's 12,000 and without GST it's 10,000? That's an argument's sake. So will I take it as 10,000 or 12,000 as the expenses? How should I report it in income tax books? Should I show 12,000 and then separately say that the GST payable is 2,000 rupees in that, or should I record it at 10,000 and then show 2,000 as GST payable? As per the method of accounting, you will be shocked to know that you have to record all inclusive. So you should say expense 12,000 to the P&L 12,000. I mean expense to the basically payable, and then, or whatever, even if I paid bank, so basically expense to bank 12,000, and then later I should credit that expense and then use the GST thing. So GST expense to that particular expense has to be reduced by 2,000. This is as per the tax books. But then again, we should see whether input is available or not. For keyman insurance, do you think any input is available? For buying a vehicle, do you get any input credit? No, that's a block credit. So keyman insurance policy also, what is the input that you will take? I mean, will you take this as an input? Will you get any credit? Generally, no. Hence, you should take all inclusive, right? Anyway, in income tax, everything should be taken all inclusive. That's as per the method of accounting. So what books you follow for tax is way different from what you follow for Companies Act. So Companies Act, you will show GST separately. Here you should show GST all inclusive actually, right? Yes. Next, bonus and commission payable to employees allowed. So guys, if I pass this entry like this, where bonus expenditure 1 lakh to bonus payable 1 lakh, it is still outstanding, and then one more expenditure P&L account to bonus expenditure. If the bonus is still outstanding, very simple, 43B section will come, because earlier what they were doing, they were simply passing an entry, bonus expenditure to bonus payable, then next year P&L account to bonus expenditure. They should knock it off, and only that bonus payable also always used to be in outstanding. Hence, to change that from happening, they have now inserted bonus in which section? 43B. Under 43B, it is allowed only on payment basis. So, it should be paid before the due date of filing the return. Should be paid before due date of filing the return. So, what do you think? 1 lakh, bonus payable 1 lakh, P&L account? Yes, it is 1 lakh. Done. Next, most important thing is your other funds. Let's come to that now. Funds. Funds can be approved or unapproved, right? If it is approved, we have 4 things. I'll just explain, then I'll give you time to write down this. Approved funds, because lot of adjustments will come from these funds. So, point number 1, funds, whether it's approved or unapproved. First one, 3614 and 3615A. 3614 talks about, because there's a hidden adjustment here which I want to tell you. 3614 speaks about employer's contribution to what? Recognized provident fund and approved superannuation fund. Employer's contribution, right? So, what would be the journal entry? Employer's contribution account debtor to bank, and then I will say salary 1 crore to bank to employees contribution, that is also there. Then employees contribution to bank, that's what separately. So, what first I should clear cut give a arrangement with respect to employer's contribution to bank. But when I am paying salary, I will pay to the bank to the employee 90 lakhs, but I will also deduct employees contribution of 10 lakh, as you know. Both will generally be equal. Now, first questions first. Employer's contribution of 10 lakh, will it be allowed as a deduction? Answer is yes, provided it is approved. Approved provident fund, approved superannuation fund. So, it is employer's contribution 10 lakh to bank 10 lakh allowed. What about employees contribution here? This 10 lakh employees contribution, not allowed or allowed? In income tax, where it's very interesting to know, under 22410, employees contribution is an income. Employees contribution is an income, because if you see here, salary to bank to employees contribution, and then that employees contribution also I will transfer to them. But how should I treat it in income tax books? Should be treated as a income. Since it's treated as an income, is it my actual income or only as per Income Tax Act it's income? Income Tax Act, it's not an income at all. I am just deducting from the employee and paying it to the authority. So, if 22410 says it's an income, I should have a corresponding debit, yes or no? Yes, only then the balance the balance is nullified. Otherwise, it will be an income and I have to pay tax on that. No. Hence, 3615A is there. Employees contribution is allowed under 3615A. Why? Because employees contribution is an income under 22410. 22410, right? So, yes. So, 3614 employer's contribution, recognized provident fund, approved superannuation fund, that's anyway an expense. Then 3615A employees contribution, definitely 220, it's obviously a income. Employees contribution is an income, hence employees contribution is also an expense. Next, 3614A pension fund, 80 CCD pension fund, it covers under 80 CCD. That to what extent is it allowed? Less than or equal to 10% of salary, that is basic plus DA, if it comes into the terms of the employment. So, to that extent it is allowed, right? On the other hand, any contribution made to an approved gratuity fund. That is 3615, approved gratuity fund. That would be valid. That would be an expense, correct? So, 4 things. We are speaking about pension fund. Pension fund, to what extent is it allowed? Up to 10% of salary, that is basic plus DA, if it coming part of the terms. Then 3615, gratuity fund. Then 3615A, employees contribution, and 3614, employers contribution. Recognized provident fund, approved superannuation fund, that is allowed. So, 3614, 3615A, 3614A and 3615. In section numbers are not needed. You can just remember as per section 36, that's it. So, employers contribution, employees contribution, gratuity fund and pension fund, these are allowed. Now, what about unapproved funds? Would it be allowed under 37? Definitely not allowed under 36, because 36 speaks about approved. Will unapproved be allowed under 37? What do you think? It was allowed as per Supreme Court. Government was not happy. So, in 1980, they inserted a clause 40A9. Under 40A9, it is disallowed. So, unapproved funds disallowed. Approved funds allowed. Right? So, 40A9, unapproved, it is disallowed. So, simply put, a simplified chart would be what? Anything which is approved is allowed, whether it is employer's contribution, employees contribution also. Approved gratuity fund, pension fund to the extent of 10% of basic is allowed. Anything unapproved, 40A9 not allowed. 40A9 is not allowed. Right? Yes. As far as gratuity is concerned, what about transfer to unapproved gratuity fund? Transfer to unapproved gratuity fund, allowed or disallowed? Allowed or disallowed? Guys, 40A9 does not cover gratuity fund. 40A9 does not cover gratuity fund. Why? Because any gratuity fund which is unapproved is merely a book entry. Think about it. Gratuity fund, is there a proper fund as such? The provident fund, there is a fund. Provident fund commissioner is there. Then your pension fund, separate fund it is. Gratuity fund as such, it is just to give gratitude to your employees. Is there a specialized fund or it's just a book entry? It's actually just a book entry in the books. Unless that liability is crystallized where you have to give to your employees, then it's allowed. But normally it is not allowed at all. So, 40A9, there is actually no disallowance only, because our gratuity fund is merely a book entry. But 40A7, they have disallowed any payment to gratuity fund except 2 things. So, 40A7 is a specific section. They have told any payment to gratuity fund is disallowed except 2 things. What is the first thing? Obviously, approved gratuity fund. So, payment to approved gratuity fund is allowed. Then, second one is where it is payable during the year and where I am actually paying gratuity and I am setting aside a certain amount where employees are actually retiring. In simple words, where it is not a mere book entry, and then it is definitely allowed. It is definitely allowed. Now, can you claim gratuity on accrual or payment basis? 43B, gratuity is on accrual or payment basis. I am talking about, any type of gratuity. Payment, what do you think, guys? So, these are some of the hidden points. That's why I am doing all these things. I'll just show you that since this is important because they have given it as an adjustment. Just want to show you. This is where, CA final students come in. All this they'll never give in the, CA inter level at all. So, I am just talking about 43B section. Correct. So, if you see, do we see anywhere with respect to, it says tax, you see here, any sum payable by the assessee as an employer by way of contribution to any provident fund or superannuation fund or gratuity fund. Correct? Since gratuity fund is there, or any other fund for the welfare of the employees. So this gratuity fund can be what? It can be approved or unapproved, doesn't matter. And even as I showed you in 40A9, that will not covered because it is only a book entry. That is exactly why, to protect everybody, they had inserted a separate section, that is 40A7. So if you just quickly check 40A9, it speaks about setting up of a trust company, etc. for all these things. It doesn't talk about anything with respect to gratuity. That's why 40A7 they added. Employees on the retirement. It says no deduction shall be allowed in respect of any provision made by the assessee for the payment of gratuity to his employees on their retirement, except two things. So 40A7 was inserted later to curb the practice from happening. So ultimately, guys, can you claim on accrual on payment basis? It should always be on payment basis. So to summarize, approved gratuity fund you can pay. One more, and which is allowed also. One more thing which will be allowed will be if it is actually payable during the year. Employees are actually there and they are retiring, and I am paying gratuity to them, which is not merely a book entry. These are the only two cases you can pay. Any other payment to any sort of gratuity fund which is not approved, or in which it is I am paying to the employees this year, that everything will be disallowed under 40A7, not 40A9. 40A9 covers merely provident fund, pension fund and other funds. It will not cover gratuity fund. Is this clear? So this is one more point that I want to tell you. So in simple words, all approved funds allowed, and in that also limits are there. For pension fund, how much is allowed? Up to 10% of salary. Then for gratuity fund, allowed. Employer's contribution, yes. Employee's contribution also is allowed, because employee's contribution is an income. That's why I have to set it off. On the other hand, unapproved provisions 40A9 is covering. Gratuity provisions 40A7 is covering. Ultimately, it's the same. That's about it. I think there's no need to write this down. It's fine. So that is regarding those funds. So that was regarding that particular section. So in simple terms, already discussed. Everything is allowed subject to 43B. So for pension scheme, actual contribution or 10% of salary, whichever is less, that is also subject to 43B. That is also subject to 43B. Employee's contribution is used as an income and it is debited to P&L account. This we have already discussed. Animals used in the business other than stock in trade, reduction is allowed in the year the animal dies or it becomes permanently useless. Reduction is cost of the animal minus scrap value, carcass, bone, skin, etc. The cost minus scrap value is deducted at that time, is what they are trying to tell. Coming next important area is bad debts. Bad debts. Two things in bad debts, guys. Actual bad debts, provision for bad debts. Provision for bad debts is not allowed at all. Only actual bad debts is allowed. And actual bad debts also I can divide into two types. One is bad debts on sales. Second one is bad debts on loan. I have given a loan, that fellow is not paying. Isn't it a bad debt? Yes. So bad debt on sales is one thing, bad debt on loan is the other thing. Bad debt on loan, it is not allowed in PGBP. Why? Because is it my business to give loans? No. Except where I am into money lending business, then it will be allowed. Otherwise, bad debts on loan is not covered under PGBP. So if there is any adjustment on bad debt on loan, you should ignore in the PGBP calculation. On the other hand, bad debts on sales, is it allowed? Yes. Two conditions are to be satisfied. Bad debts should be written off as irrecoverable in the books of accounts. Bad debts should be written off as irrecoverable in the books of accounts. In the books of accounts, if you have not written off the bad debts, in the sense you are still showing as outstanding in the bad debts, then you cannot claim bad debts. Bad debts should be completely written off as irrecoverable. And second one, it just has to be written off. No need to prove that the debt is bad. There is no need to prove that the debt is bad. These are all various decided case laws. When I wrote it off, the other fellow said, sir, how does he prove that it is bad? Nothing to prove. I have already sent notices, etc. I have followed the due process of law. So if it is written off as irrecoverable, that's it. No need to prove that the debt is bad. Two conditions: bad debt written off is irrecoverable. Second one, no need to prove that the debt is bad. On the other hand, loan not allowed, and provision for bad debts, it is definitely not allowed. So this is the entire thing with respect to bad debts. Sometimes I'll ask you, bad debt was there in loan. Please note that is nowhere linked to PGBP unless you are into business of lending. Unless you are a business of lending. Simple. Now, come to 37 in a while. So as discussed, bad debt should be written off as irrecoverable. Then it is taken into the books of accounts, or it represents the money lent in the ordinary course of business. That is the reason what we need to take into account. Now, it will not come under 36(1)(7). That should not be taken. Where will that come though? Debt represents money lent in the ordinary course of business. I am not talking about loan here. I am talking about advance paid to supplier. Advance paid to supplier to bank, and then that fellow ran away. It's not a loan. It's an advance paid to supplier. Which section will you claim bad debts? This is an exam question. Three things we told. One is normal bad debts. Second one is loan. I am giving loan. Then it will not come here. Third one I am saying now, in the ordinary course of business, I will have to pay advances. I paid advance to supplier. Advance paid to supplier account debtor to bank account. Then that fellow ran away. Bad debts. How will I write it off? Sales. So will it come under 36(1)(7)? No. In 36(1)(7) it's very clearly given. It should be bad debt written off as irrecoverable, and it should be taken into account. Debt should be taken into account in the books. Whereas debt represents money lent in the ordinary course of business. This is not any money lent as such. I am not giving a loan, right? So hence this entire thing, advance to supplier to bank and bad debt to advance, will not come under 36(1)(7). It is coming under 37. Comes under 37. So one thing we need to understand in CA final, not just debiting the P&L account or crediting, we should also write which section it comes under. Grouping is also important, right? Grouping is as important as recording the expense. So here, what grouping will it come under? 37 and not 36. Again, as far as any construction contract is concerned, just for your knowledge, in all construction contracts, you should take the percentage completion and all those things as per the books of accounts maintained or as per the tax books, ICDS. Because here in books of accounts, you may follow the construction contract standards, which is that AS7 it was now, which I don't know the Ind AS number, I don't know. So that is one thing. Here, for tax purposes, I should follow ICDS. So in ICDS, when I follow, there will be a different percentage given as per ICDS. For tax purposes, I should follow the books. When I say books, which books? Tax books or company law books? tax books. All these issues went to court. Amendment came. Books means your tax books only, not company law books. Bad debt recovery is given in 41.4. Bad debt recovery. Now I am talking about bad debts is debited to P&L account, already written off, chapter close. 3 years later, I received the money back. Is it deemed profit? Yes, it is deemed profit under section 41. 41.4. Deemed profit under section 41.4. So, but you know what happens? This happens, guys. Amalgamating company, successor amalgamated company. These questions can come in the exam. Father had a business, son has taken over, succession. Demerged company. So basically it was a bad debt in the amalgamating company, but the recovery happened in the amalgamated company. When the father ran the business, there was a bad debt. When it was succeeded by his son, he received the money. Demerged company, bad debt written off, resulting company, money came back. When I was a firm, there was a bad debt. When it converted to a company, money came back. All adjustments. When it was a partnership firm, there was a bad debt. Then the firm got dissolved. Partners are doing their own businesses. One of the partners got the money. So, will it be allowed or not? In any case, will it be allowed or not? This is CA final adjustments. Bad debts we know, it's easy, but they'll ask like this. Father, bad debt, son got the money. Is it taxable or it's a capital receipt, not taxable? So, two important Supreme Court judgments, PK Kaimal, we'll see that. So, guys, I'll allow you to write this 1 second. Predecessor company is A only. Successor company is A only, which means there is no succession, same SSE. Debt has been incurred by A, debt has been written off by A, debt has been recovered by A. 41.4 will come, even if the old business is discontinued by A, I don't care, SSE were the same. 41.4 SSE was the same. Second interesting thing, A was a partnership firm. Then succession happened by partners. Old partnership firm dissolved. One partner only is carrying on the same business is possible. Debt was incurred by A, written off by A, recovered by B. Deadly decision by Supreme Court in PK Kaimal, which is remaining even today. Since SSE is not the same, 41.4 will not apply. Amount received by B is a capital receipt, not taxable. Third case, predecessor company is a firm. These are all exam adjustments. Predecessor company is a firm. Successor is a company, B Limited. Debt incurred by A, written off by B Limited. Mind you, debt incurred by A, written off by somebody else, written off by the new guy. Amount has been recovered. All three conditions are, all three possibilities I have given. In the previous case, written off, incurred by another fellow, written off by the old fellow, written off by old fellow, incurred by old fellow, the amount recovered is by new guy. So obviously PK Kaimal says SSE must be same. But now, incurred by old guy, written off by new guy, and I am receiving money. What do you think? If it is recovered, it is taxable under 41.1b, not 41.4. 41.1 is what? Cessation of a liability, remission, we will see that. So it is covered under that section, 41.1, not 41.4. On the other hand, Veerabhadra Rao, Supreme Court judgment, 36.1.7 will apply if SSE changes. It will apply even if the SSE changes. it will still apply as per Veerabhadra Rao. So there you say it will be allowed under 36(1)(8)(7) only, because it is against PK Kaimal, and these are not different cases. PK Kaimal, it was very simple. Old guy only incurred it, old guy wrote it off, you recovered, hence it's a capital reset. In Veerabhadra Rao, old guy incurred, you wrote it off, and you are receiving. So I can definitely write off now under 36(1)(7), you can still, what do you say, write it off. But when you are receiving, it will be under 41(1). Got it, guys? This is the thing. So different things are there. 36(1)(7) will still apply even if the SSE changes, because it was written off by the same SSE. Written off by the same SSE. In PK Kaimal case, it's a totally different case. It was written off by somebody else. So in the exam, you should see who wrote it off, who incurred it, who wrote it off. Incurred and writing off by one guy, recovered by the other guy, capital reset, not taxable. Right? Incurred by some other guy, written off and recovered by one guy, then you can use that bad debts provision. And when you recover it though, was it your debt or somebody else's debt? Think about it. When you recover it, was it your debt or somebody else's debt? Was it the debt that you incurred or somebody else? Someone else has incurred. That is why 41(4) will not come. What will come? 41(1). It is definitely taxable, but under 41(1). This is CA final for you. Right? Are you understanding? It's all logical. Because if you see the wordings of the Bayer Act, it says very clearly, whatever has been incurred, if it is written off as irrecoverable, then in this case, Veerabhadra Rao case, have you incurred? No, you have just written it off. Basically, SSE is different, but still Veerabhadra Rao and PK Kaimal should go hand in hand. Two of the very, very good cases, right? So now you can copy. I will give you time. Hold on. Yes. This is about bad debts, guys. Interesting point. Then interest on loan. Interest on loan. Is it allowed or not allowed? Interest on loan. Interest on loan which is used for personal use. So you are a businessman, but you also take an interest when you take a loan for some personal purposes, personal loan. Can you pay interest using your business account? No. Even if you pay interest, it will be not allowed. Interest on loan. Interesting to note, I have taken interest on, I am paying interest on loan taken from a money lender. As on the date of filing the return, it is still outstanding. Can I claim it as an expense or not? I am reading 36 read with 43B. 43B talks about interest. Basically, all interest, etc., should be allowed only if it is paid before the due date. So, one of the adjustments in the question was not personal use. I took it for business use, but I took it from a money lender. Allowed or disallowed? It's on payable basis or paid basis. I said it's not paid even during the due date of filing the return. Allowed or disallowed? Allowed or disallowed? So these are the questions which interest on loan or borrowing from any financial institution, state financial corporation or state industrial investment corporation or deposit taking NBFC or systematically important non-deposit taking NBFC, scheduled bank, cooperative bank. Nowhere it says about others, money lender. So money lender, if I take a loan, if I debit interest in the P&L account, even if I have not paid interest, it's on payable basis. Is it allowed? Yes. Because guys, I don't care about what money lender does. Anyway, money lender will practically come and throw you out of the house anyway. So I am only worried about these banks, because in banks will give money and forget about it. That's why NPA happens. And many banks were restructured because of this only. Left, right, center. HDFC Bank, it has one of the shittiest services. If you go to HDFC Bank, still it is number one. Why? Because their credit rating is crazy. If you get a loan from HDFC, it means your credibility and credit rating is awesome. That's the only reason they are number one. Services wise, miserable. You also know. Those of you who dealt with HDFC, you can agree with what I am saying. But they are still number one bank in India. Why? Because of their credit rating and that they have very minimal NPAs. That's the reason. So, interest on loan. Personal use not allowed. Business, scheduled bank, cooperative society, PFI, SFC, SIDB, Small Industries Development Bank of India, NBFC. It is on what? Allowed only on paid before the due date. That's 43B. That is, for previous year 23-24, you should pay by 31st October 24. If paid on 1/12/24, reduction is allowed in 24-25, not in 23-24. On the other hand, loan from others other than scheduled bank, cooperative society, PFI, SFC, SIDB, NBFC, it is allowed both on paid and payable basis. It is allowed both on paid and payable basis. Why? Because in 43B, it is not covered. There is a combined return of 36 and 43B. So again, in the exam, kindly see, loan is given from whom. They will specifically tell, loan is taken from a money lender, from his friend they will tell. He took a loan from his friend on which interest is payable on the date of filing the return. You will directly say interest on loan 43B. There is the bane of reading from some summary book or some chart book. That's the problem, because their full thing is not given and those adjustments only they'll ask in the exam, right? That's why. So 43B. Then zero coupon bond. This is very simple. Zero coupon bond. Issue price will be 70. It is redeemed at 100 rupees. 30 rupees is the coupon or the discount. And that 30 rupees is to be repaid in 2 years. On a pro rata basis, you will have to take it. Is it allowed? Yes. But one hidden point in ZCB is what we can see in the notes itself. The period of the life of the bond shall be converted into number of calendar months. The calendar month in which the bond is issued or the bond matures contains a part thereof which is 15 days or more shall be increased to 1 calendar month. For example, A Limited issues 10,000 ZCBs at 200 rupees per bond on 14th August 2022. Amount paid on redemption of such bond is 300. ZCBs are redeemed after 1 year. Discount will be what? 300 minus 200, 100 rupees per ZCB. Total discount is 100 rupees per ZCB into 10,000 bonds, 10 lakh rupees. Step number 1, number of calendar months over which discount on ZCB is divided, 12 months. 14th August 2022 to 13th August 2023. 1 year. So my question is, I am computing for year 22-23. For the year 22-23, I should take August or I should not take August? I should take August. Why? More than 15 days. Yeah. So you see here, period shall be if the calendar month in which the bond is issued or the bond matures contains a part which is 15 days or more. Here it's more than 15 days, right? So I should take August. August, September, October, November, December, January, February, March, 8 months. August is considered because more than 15 days is there in that particular month. It's issued on 14. What is the remainder period? More than 15 days. So for that particular year, pro rata, discount per month will be what? 10 lakh rupees by 12, 83,333 every month. So ZCB can also come in the form of a MCQ. Yes. So you see here, what does it say? More than 15 days or what? 15 days or more. So the balance should be 15 days or more. So it's 16th August. What is how many days are left? 15 days. So take. Yes, it should be like including August or whatever month. So if you see here, bonus or commission paid to employees for services rendered, I told you that bonus, where such sum would not have been payable as profits or dividends to such employees. So earlier, if you remember, dividend tax I used to pay, and then dividend used to be fully exempt for the employees. So what I used to do, instead of dividend, instead of bonus, I used to pay dividend. So that used to be covered under, 36(1). To ensure that that should not happen, they clearly mentioned that such sum which would not have been payable as profits or dividends to such employees. So one question they can ask in the exam, you are a director, which can come in GST also, the GST part. Tarun sir and I created our first ever Jugalbandi on this particular video. This is linked to this only. So whereby we combine direct tax law and even this GST, obviously IDT. Now director has a lot of money power, and company X Limited is there. And there's one more company, Y Limited, in which the director also happens to be a director. It's a sister concern. Let's say Narayan Murthy, Infosys. Narayan Murthy has a very good name in Infosys. He started one more new company. That new company wants a loan from the bank. Bank says, boss, I will give you a loan only if you get me a personal guarantee from Narayan Murthy. So Narayan Murthy, on behalf of that new company, gives a personal guarantee to the bank. Because he gives that personal guarantee, bank gives a loan to that company, new company, 10 crore, solely by my personal guarantee. Because he was very happy, the new company is very happy with this decision, the new company pays Narayan Murthy guarantee commission. That's called guarantee commission. So now the guarantee commission paid by the new company to Narayan Murthy. First of all, is it deductible? And if yes, under which section? In law, the question was, is it part of remuneration? So let me not discuss law. In DT, only will stick to DT. GST, you can see that video. I'm not going to confuse there. I'm only talking about direct taxes. So when I am paying my guarantee commission 1 crore to you, Narayan Murthy, because of you only I got the loan. For you, is it taxable? If yes, under what? So for you, it may or may not be taxable. Is it a capital receipt, or is it a remuneration, or is it income from other sources? Right? It is taxable for sure. Is it income from other sources, or is it PGBP, or is it salary? Income from other sources. So that is also over. Now let's stick to the company. I am debiting my P&L account by whatever 1 CR. Now that, is it allowed or disallowed? If allowed, is it allowed under this bonus or commission? Or is it 37 or 36? Why not 36? Specific to employees. Okay. Now let's say you are an employee. You are a director and employee. Yes. Then Sorry, that's what I'm asking. Services rendered, that service that you rendered, is it a service rendered? Perfect. So there's a case here, check out. Delhi High Court, controls and contractors. When the directors gave a personal guarantee to the bank as a precondition for the grant of credit to the company for business purposes, commission paid to directors in this regard shall not be construed as payment in lieu of dividend. And unfortunately, they said under this section only it is allowed, because they are taking this to be one of the other services that you rendered. I don't agree with this, but this is how the law is. Now you have to follow this, that's all, right? It's not, is it an actual service? That's why I asked you this question. Is it a service? No, it's my money power. It's not a service. Ideally, it shouldn't come here. It should come in 37. But that is, it's a case which is still there. We have to follow that. Either way, it will come in 36 or 37. I am asking which section it will come. 36. 36. As per this case law, 36. They are telling it will not come as your profit in lieu of dividend, dividend in lieu of commission. No, I think it's commission. So as I told you, we have to take help of certain cases. No choice. But I like your interpretation. It is not a service rendered. But anyway, some of the points we don't agree, but we need to follow because that's how it is. So let's follow this point. Anything rendered will be this. Now the GST aspect, you can see that video, and from your point of view, will it be taxable? Yes. But is it remuneration of managerial remuneration under Companies Act? Leave that. That is company law. So one concept from all angles we can analyze. Right. So this is all done. ZCB done. Employee welfare funds, all that we did already, guys. Livestock did, bad debts we did. Provision for bad and doubtful debts, we have already discussed. Provision cannot be allowed, but for certain banks and financial institutions, they are allowing it. Right? For banks incorporated in India, what extent it is allowed? 8.5% of the total income computed before deduction under this section and Chapter 6A deductions, which means you can only give brought forward losses, unabsorbed depreciation, all those things. But it should not include deduction under this section or Chapter 6A deduction. This is for banks, public financial institutions. Or 10% of aggregate average advances made by rural branch. If you are a rural branch, 10% of the aggregate average advance made by rural branch. These are just memory techniques you need to remember, 8.5% and 10%. 8.5% of total income or plus 10% of aggregate of average advances made by rural branches. This was added later. 10% of the aggregate average advances made by rural branches. If you have rural branch, if they are making advance, add 10%. Because in rural areas, the bad debts are more. So that's why provision I will allow. To what extent? 10%. In all other cases, PFI, non-bank, NBFC, foreign banks, 5% of the total income. So in banks incorporated within India, it is 8.5% plus 10% of aggregate average. Total income. 8.5% of total income, 10% of aggregate advances. Whereas 5% on total income again. Yes, correct. After deducting, before deducting this section and Chapter 6A, correct. But you can also give the brought forward losses and unabsorbed depreciation, everything just before the deductions. That's all. GTI. Now the banks which are for whom provision for bad debts they are getting, can they claim bad debts also under 36(1)(7)? Two times. Provision, this again went. Bad debts is separate, provision is here. For provision also I will get, bad debts also I will get. Or isn't it like provision is made only to cover the bad debts? This is in the line of business only, they are in the business of lending only. Will it come? Not 37, I'm talking about 36(1)(7). 36(1)(7), it's in the line of business only I'm giving money. So let's say I had made a provision for 700. Actual bad debts is 500 crores. 700 crores I have made provision. So will I get 700 plus 500? That's what I am asking. I had made provision 700 crores after that same 10%, whatever, after taking all those things. But actual bad debts 500. So can I claim double? People who are doing it, banks are doing it, it's allowed, no? Your logic only, you are right. Provision is separate, bad debts is separate. Then why should I allow provision? So all these pointers came. See the second point here, note number 2. No deduction shall be allowed under 36(1)(7) in respect of actual bad debts. Two times you cannot claim. Actual bad debt shall be adjusted with the provision for bad debts. Where the actual bad debts exceed the provision, only then deduction will be allowed. Example, opening provision for bad debts is 150 lakhs. New provision created during the year was 750 lakhs. Actual bad debts was 1000 lakhs. In this case, actual bad debts exceed the provision by 100. Ideally speaking, I should debit 1000 lakhs. How will I debit 1000 lakhs? I will debit 900 as provision, 100 as 36(1)(7) actual bad debts. Makes sense? It can't be 1000 plus 900, right? That is what it is. Yes. Huh. If there is unabsorbed depreciation, if at all they have any, then they can do it. This is only for calculation purpose of this, not the actual total income calculation. Correct, but the thing is, that's why I am giving this here. For the banks, what is the exact amount of NPA? It is predominantly rural areas. If you see so many rural, the government has given a lot of loan waiver for so many rural, for farmers basically. So then they have understood that it should only come for the aggregate rural advance. That's why they have given a higher. That's why it's plus. It's not even like whichever is higher, whichever is lower. So here they have kept low. Then they have added this also. Only while computing this provision they will do it. Yes, they will. They have to do it. That's the law. They have to do it. It is not a. It's not some. It is not like you may do it. It is shall. This is the rule. You have to do it. No, when I say can be, it means that it is shall be. It's just a wording. So a good question. It is. You have to make this. It's not a that you may follow this or anything. It's not like a minimum amount. It is the calculation. You have to do it. There are some more hidden points since you asked this now. See the note number 1. Aggregate average advances, it says, rural advance, are the advances made by each rural branch as outstanding at the end of the last day of each month of the previous year and aggregated separately. The aggregate of each branch is then divided by the number of months for which those outstanding advances were taken into account. What they were doing is they did not want to do all this. They were merging all the branches and doing it. So they said, no, it should be done branch wise and then everything should be aggregated. Aggregate of the sums so arrived at in respect of each rural branch is the aggregate advance made by the rural branches of the bank. So guys, the more provision you keep for income tax purposes, okay, your profit may decrease, but the thing is, ultimately it shows that you have given loans left, right and center. So banks would always want to keep less provision only. That only shows their credibility of that bank. If you open HDFC Bank, the provision is very less because they don't give loans to anybody like that. So what these banks are doing, profit making banks, rural banks, merging everything and making an average balance. They said no, it should be per rural branch. Then you can know exactly which rural branch is performing well, which is not performing, right? That's the idea. Done. Then one more, guys, deduction for specified. These are all, we don't study this only, that's the problem. So please study this and go. One adjustment can come like that. So our banks, it is 8.5% plus 10%. The other fellows 5% of adjusted total income. Now next one, deduction for specified entities, 36(1)(8). In case of the following specified entities, amount transferred to special reserve account is deductible. What are those specified entities? No need to mug up anything. You can just remember it is ICICI, IFCI, IDBI, LIC, IDFC. If any of these companies come, they are in the business of providing long-term finance for industrial undertakings. Then HFC, Housing Finance Company, and any other financial corporation including a public company which is giving for infrastructure. Any financial corporation which could also be a non-banking financial institution or an alternative credit platform which is into all these things, then yes, for them special reserve account has to be created. All this has gained importance after 3-4 years after a very famous company, housing finance company, went into IBC. Housing finance companies and the non-banking financial corporations are the foundation of Indian economy. So if they only go for insolvency and bankruptcy, it's a huge loss. But you would have heard of DHFL, Diwan Housing Finance Limited, first ever housing finance company to go under IBC. Lot of scams, some 70,000 crore scam had happened. That's why they are now telling it is mandatory for them to create something called as a special reserve account, right? So that deduction, that all that came after that only, 36(1)(8). It was lying there, nobody touched this section. The moment DHFL scam happened, every time that, after that twice it has come already, this question. And examiners' comments are always been, these sections have never touched. Maybe you may have written many times here or 1 or 2 times, whatever. You may not have studied this also. In one of the attempts, you would have skipped. Because people think it's not very important. It may not be because too many things are there, but we need to touch upon everything. That's what my intention is. It's better to do everything in something than in a fast track, just do upper everything. And then, for example, I'll just tell in ZCB, this minus this divided by 2. But then they'll give you the dates now, calendar months. What will you do? So it should be such that, okay, when you're writing, you should know, okay, this was discussed, let us apply that. That's the objective of any class. Now, amount transferred to special reserve account or 20% of the profits from business activities computed under 28 to 44D before claiming deduction. So this here I will not allow you any other deductions. Proper total income into 20% or amount transferred or 200% of the PUC and general reserve. 2 times the net worth, basically. Paid up capital and general reserve, predominantly net worth. 2 times the net worth minus balance in the special reserve account on the first day of the previous year. Net worth should be computed on the last day of the previous year. Special reserve account should be computed first day of the previous year. So this is what they do. I tried understanding the logic of why they did. Nowhere I could find. Even the commentary I read. Why have they given twice the net worth minus balance? So they would have some logic for this. So anyway, so amount transferred into the special reserve account or 20% of the profits, normal profits, or 2 times the net worth, similar to net worth, minus the special reserve balance. So you will get of the lot whichever is less, obviously. They will not ask you any tough question in this. They'll ask a simple question, but we will not know this. That's the problem. They will not ask any question which is, what do you say, you won't be able to solve if you had known the provisions. So just have to remember these things. Couple of points more. We can take a short break in a while. See, example also I have given. And if you withdraw any amount from the special reserve account, be chargeable to tax. That should be set aside separately. Why? To prevent these scams from happening. In Diwan Housing Finance, they didn't have money only to pay. That's why I need a special reserve account. So, example, MB is an eligible business SSE to claim deduction under 3618. Income from business before deduction under this section is 1400 lakhs. Actual amount is 512 lakhs. Paid up capital and general reserve on 31st March is 810 lakhs. Opening balance of special reserve 1200 lakhs. Directly like this, they'll ask a question. Amount transferred 512 lakhs. 20% of income from business under this section. 20% of 1400 lakhs. 280 lakhs. 200% of PUC and general reserve minus opening balance. 200% of 810 minus 1200 is 420 lakhs. So, it's what? 280 lakhs shall be allowed as a deduction. It can be a very, very simple question like this. And we'll unnecessarily miss out because we don't remember we don't know that provision only. That's all. So, just keep in mind these small issues, then it will be a breeze. See, I am not joking. For example, this similar 36,117. Amount of expenditure incurred by a cooperative society engaged in the business of manufacture of sugar for the purchase of sugar cane at a price is equal to or less than the price fixed or approved by the government is allowed. Basically, this is your government will fix a price, and based on that price, if you are manufacturing sugar, no problem, equal to or less than that is allowed. But the moment you go above that, above the value, then what will happen? It will not be allowed as a deduction. So, anything with respect to sugar cane, whatever you do, it should be only with respect to the whatever government fixes the rate. This area, I'll just show you. There is one question. I was just reading this the other day. Hold on. I'll show you the adjustment. So, as I told you, every area they may ask. So, this is the sugar cane. Like this, same cotton is also there. In another section, I'll show you. And cotton, especially if you are purchasing from a related party. Tell me, you are purchasing more than this is one question. This is in there somewhere else. I'll show you. Similar to this question, you are buying cotton from a related party. FMV is 2000. You are purchasing at 2500. Is it allowed? Restricted to 2000. This is 40A2. 40 capital A2. Right? So, and if they now give sugar cane and a cooperative society and related party mixed, what will you write? 40A2 or this one? 36,117 is for allowability of expense. 40A2 is disallowance of additional expense. Right? So, if they say the price fixed by the government is 1000 rupees, you purchase from a related party, price fixed by the government is 1000 rupees. You purchase from a related party at 1100 rupees. Market value was 1200 rupees. This government special rate. This is related party rate. 1200 is market rate. Yeah, how much will you allow? 1000. That's all. You will allow only 1000. That extra 100 I will not allow, even though it is within the market value. So, 40A2 will never come here only in the picture. On the other hand, if this grows beyond 1300 or something, then excess 200 obviously is not allowed, because you will only allow 1000. That is because of this. If it is 900, you tell me. 9. What is the market value? 1200. And you have purchased at 900. Then 900. Because it says it is equal to or less than the price fixed or approved by the government. Clear? So these are the things. Which one? Rare cases where there is a demand supply mismatch. Sometimes, if you remember, I am not talking about this, tomatoes, etc. There will be a huge, crazy thing where you would have seen the farmers throwing the tomatoes on the road, right? Because there is no specific regulation by the government. But in sugarcane and other things, it's there. So now in sugarcane, they will regulate the price and they'll say this is the minimum price that you will take. That's one of the main reasons why the farm laws was not passed in India. Because they did not want government to regulate everything. It had to be regulated by the farmers themselves. That's why there was a lot of protests, because in that the government wanted regulation in prices of everything. But there is already a nexus between the farmers and the farmers associations. That's the reason why they were not there. That is a minimum price. Yes. Let me write down. One second. Let me write down. You tell me. Tell me what is your doubt. I'll write it down. Market price is 1200. You are 1300. You are buying from a related party. Okay. That's all. So market price is 1200. What is the government rate? Government rate is 1000. Okay. Government rate is 1000. Now you are buying at what? 1200. What is allowed as per this section? 1000. And what is disallowed? What part is disallowed? 300 is disallowed. Under which section? This says you can only claim 1000. Okay. And here price paid in excess of the approved price shall not be allowed as a deduction. Isn't it our what do you say, final conclusion of this, or is it in the section? Section only talks about this. Anything in excess is deemed to be unreasonable, right? So basically you can disallow it in which section? Actually, to be very honest with you, disallowance is only 100 rupees in 40A2. Disallowance is, yes, it will be split into two, because disallowance under 40A2 is only 100 rupees. Because why? 40A2 says excessive payments. Excessive than what? The market value. We'll discuss that, no problem. We'll discuss that section in a while. So like that they can mix and match and give, guys, anything for that matter. For instance, just check this page number 15, that question, one adjustment is there. Page number 14. Additional information, point number 4, November 21. Only that adjustment will do. Additional information, point number 4. Yes, it's an easy one. If a company had purchased 100 bales of cotton at 5000 per bale and 4600 same material is available outside, 400 extra I paid. So that 400 will be disallowed. Simple. Yes. Tell me. But I have specifically told related party. That's the reason why 48 also will come. Yes, otherwise no. If it's not a related party, some random guy I am purchasing from, friend is not a related party, then this section. So in litigation, all these will have a lot of impact. Under which section? So in GST also I was speaking to one of the most famous GST practitioners called Jatin Christopher sir, CA Jatin Christopher, one of the best in India. He was telling, I am very shocked to see the recent trend of CAs who will just say it's either taxable, not taxable. Tell me under which section, which HSN code. He said HSN code only they don't know, which is shocking. So actually that's true. So here I know disallowed, allowed. Which section? So that is the area that you guys should get into. Normal practice, useless. So let's get into litigation and opinions. That is the most important thing, because for each section there will be a consequence which is different, right? Yes. Okay. All right, last part, and then we'll take a short break. That's it, guys. This is all about it. And let me see if this family planning and all they don't give now. This was inserted in 1976 by Sanjay Gandhi that time. Actually, then they had a, just before emergency, he had a vasectomy program for all the men in India. True, I'm not joking. So it was the worst vasectomy program ever done, because it was done by doctors who were not qualified. But then the companies were encouraged to do this vasectomy program. So in 1976, they inserted this, is like irrelevant. But as that said, any capital expenditure for promoting family planning, 1976 he inserted. Today we are number 1 in family not planning, right? So yes, revenue expenditure 100% allowed as a deduction. Capital expenditure deduction shall be allowed over a period of 5 years in equal installment. Then unabsorbed depreciation shall be carried forward. I have not seen any question come in this area, but it's there. It's there. STT, etc., all that is allowed is a deduction in the normal course of business if you are into what? Buying and selling. Otherwise, it will come in capital gain anyway. So that's simple. That's about 36, guys. So I think we have finished everything in 36. Cool. That's about it. So cool. So after this, what we will do is we will go into 37. Again, very, very important section. Lot of discussion to be done in that, and then we'll move on to other areas. Take a break, 10-15 minutes. We'll come back. Please, let's begin. Let's finish off the last session for the day. Right. So we'll come to section 37. This is again a very interesting section, because all the miscellaneous portions are covered under section 37. So under section 37, it says it doesn't cover those expenses that are already covered under 32-36. Second, it doesn't cover capital expenses. Third, it doesn't cover personal expenses. Fourth, it should be wholly and exclusively for business or profession, which means personal expenses are anyway not covered. And it should be wholly and exclusively for PGBP. Lastly, it should not be illegal. So there was a case law. Dr. T.A. Qureshi had asked you yesterday as well. By day, he was a pharmacist. By night, drug dealer. Correct? So alternate profession. If you watch Breaking Bad, you know what I mean, right? So yes, that guy was. So morning professor, evening something else. So yeah. So if you see, same thing happened. So what happened was, expenses, he had 1 crore rupees of money they found in his pharmacy, which was actually related to illegal income. They confiscate. Now tell me, what is the difference between, you will see this word everywhere, seize, especially in assessment procedure, attachment, seize, confiscate. What's the difference? Impound. These are some words that we need to know. Impound is there definitely. Attachment is there. Seize is there. Confiscate is there. What's the difference? In seize, okay. Then confiscation, ownership. So in I don't know about here, how hard or tough is the implementation of helmet rule in Chennai? They started now. Okay. In Bangalore, they are very strict about it. So 1,000 rupees, 5,000 rupees and all they'll charge. Helmet only is 100 rupees, helmet. If you don't wear that, 1,000 rupees. It's strict here. Okay. So when you're going on the road and that fellow, mama suddenly jumps in front of you, right? And he will obviously stop you and then he will say, give me 1,000 rupees or whatever charges. He will take away the key if you have observed. Now that is seizure or confiscation? That is what. So impound, attachment, seize all mean the same. It means, as you rightly said, possession is transferred. When I use the word confiscation, then ownership is transferred. It cannot be used lightly. You cannot use interchangeably. You cannot say impound and confiscate. Both are different. So in assessment procedure, so many places you will see impound will be different, right? So if you see, confiscate is take ownership, seize is take possession. So in this case, they actually confiscated because PMLA, other things came here. Narcotic and Psychotropic Substances Act came where the confiscation directly. So he said, sir, you are not even seizing, you are confiscating, which means ownership is transferred to you. That you can use my drugs now, right? Whenever you want, on your rave parties, right? So if you see now for me, there's a 1 crore business loss. Can I claim that? Yes. It said expenses should not be illegal. 37 never speaks about losses. So losses you can do it, no problem. So yes, illegal expenses not allowed. Loss allowed. Explanation 1 was added in Finance Act 22 and 23. Both amendments came. They said, if you make an offence or anything that is prohibited under Indian law or foreign law, Finance Act 22, and prohibited to give benefit or perquisite against any guideline, they said. What guideline here? This predominantly was inserted because of the ICMR guidelines, medical representative guidelines. So there, Dolo also during COVID second wave, we have eaten Dolo like chocolate, right? Morning Dolo, night Dolo, and next day Dolo, morning, everything. So actually there's a thing, there's a 1,000 crore scam behind it. Because all the doctors were told to prescribe Dolo. And there's actually, if you just say Dolo scam, you will see 1,000 crore scam. Because these pharmacists, these medical practitioners, and of course the people who sell the drugs, pharma companies, had a nexus saying that you please give Dolo to everybody. You will get this, you will get that. It happens. And everything in kind. Now, is that taxed now? That also amendment came. No, it is taxed in cash, in kind, partly in cash, partly in kind, taxed for the doctor. Here, I am a pharma company. I have given, 1 crore worth of freebie to the doctor. I have booked a 7-star hotel for him. I have booked a fully included, all-inclusive package for some foreign destination. All that they used to claim as business development expenditure. Now, can it be claimed now? No. That is the next point. Prohibited to give benefit or perquisite against any guideline. Freebies given to doctors and all not allowed. Compounding of an offence in India, outside India. What do you mean by compoundable offence? What do you mean by compoundable offence? Any offence which says fine or imprisonment or both. It is a compoundable offence. You can escape imprisonment by paying fine because I have used the word fine or imprisonment or both. What is non-compoundable offence? If they use the word fine and imprisonment, when both are covered, fine and imprisonment, it's called as a non-compoundable offence. But if you use fine or imprisonment or both, then it is called as a compoundable offence. So for all compounding offences in India, outside India, they said whatever amount you pay, that is not at all allowed. Finance Act 22. Salary given to employees allowed. Salary given to working partners allowed. Salary paid to sleeping partners disallowed. Indian Partnership Act may allow salary to sleeping partner via the partnership deed, but Income Tax Act says not allowed. So they may confuse you by saying the Indian Partnership Act allows salary to sleeping partner. So here what do you think? It is not allowed. In the Income Tax Act, not allowed. Salary paid to directors in a contract of service where they are employees, allowed or not? Allowed. Leave salary, allowed, subject to 43B. Subject to 43B. Then advertisement expenses in any book, pamphlet, tract, pamphlet, whatever it is for a political party is not allowed. Penalty for breach of a contract, that would be allowed, because I am not committing breach of law. If I commit breach of law, that is not allowed. If the director's vehicle is involved in an accident, that's a breach of law. Any penalty paid, not allowed. On the other hand, if there is a contract between the company and somebody else, where they said if you don't follow this, you will have to pay a penalty of 10,000, that's just infraction of a contract, not a law. That is allowed. Then as regards taxes are concerned, I'll just show you a more in-depth chart quickly. As far as taxes are concerned, I need to go more in depth into taxes. What taxes are allowed, what taxes are not allowed. Yes. Tell me. Both mean is they will reject the compounding and they will say, no, your, what do you say, amount that you have, I mean, the infraction of law which you have done is so deadly that there is no way in hell I am going to give you a chance to escape punishment. So in that case only both will come. Yes, both you will get. You will get fine also, imprisonment also. Because it says fine or imprisonment or both. Or both means what? Fine, imprisonment together. Which one? So those things you don't even have an option. Whenever it says fine and imprisonment, there is no option only. There is an option. You can go and request them for compounding. But if they say it is such a deadly offense that even in this offense I cannot pardon you at all because you have not just done this offense, you have done multiple offenses, then it will become both. It will become like non-compoundable because it is both. Tell me guys, one by one. Income tax paid. Can you take deduction of income tax paid? No. 40A2 disallowed. Even DTA benefit you will pay in your country, you will also pay in some other country. And you will get a benefit, double tax avoidance agreement benefit. You will get a credit. That credit also can you take? No. There is no benefit, everything is disallowed. Other loss including interest. This is Income Tax Act. Other loss which is including interest. Something which is compensatory in nature, which means something which was not done willfully. Is it allowed? Yes. Something which is penal in nature, which is done willfully, that is not allowed. That's the difference between compensatory and penal. Even in the contract, we'll discuss the difference between compensatory and penal. Compensatory is done by inadvertence. Penal is done willfully. In many laws, even in Companies Act, you would have seen if inadvertence 20,000 rupees, otherwise 50,000 rupees. So inadvertence is compensatory in nature. Penal is penalty in nature. That is a willful default. That is punitive measure, it's called. It is punishment. GST and other taxes, is it allowed? Yes, under 37(1). That was your question that time. Will I add GST also? Yes. Which means if there is no, what do you say, credit allowed for me. So can I debit it to my P&L account? Can I take the full thing? Yes. But if credit is allowed, then no. Right? That same question now we are linking. Any demurrage, you would have seen it in GST, that is also allowed. Breach of contract, interesting part. If there is a breach of contract for delayed performance, allowed. Means I have to pay something for delayed. You had asked me to finalize the entire contract within 20th September. I took 1 month extra, 20th October, for which I had to pay 10,000 rupees extra. Is it allowed? Yes. Second, failure to perform. So I was supposed to enter into a contract. It did not, I entered also, but I was supposed to come and perform the contract. Did not happen. Failure to perform. For example, A.R. Rahman's contract got cancelled once because of the rain. It should have stayed cancelled only. He got a bad name because it turned out to be a very bad concert. Correct? Some of you may have gone, I'm not sure. So it turned out to be a very, very horribly organized concert, is what I heard. Right? Miserable. So before that, they failed to perform because of certain reasons. That was rain. Nothing can be done. There's no penalty. But then next time when it happened, did they fail to perform it according to whatever they had told? Yes. So definitely what? Breach of contract. Third one, penalty in the nature of compensation. Interesting. Penalty in the nature of compensation. This was there in Malwa Vanaspati and Chemical Supreme Court decision. So if you sell something in Maharashtra, you can do it at either 4%, at let's say 2%, that's all. You should do it at, you can charge only 2% rate, tax, charges, whatever. But earlier it actually is 4%, but I am giving a discount of 2%. So in Maharashtra, if you do, I will give it to you at 2%. And you have to supply only in Maharashtra. If you do it, so what is the actual rate in Maharashtra? 4%. But I am giving you a discount of 2% with a contract that you should supply that Vanaspati and other chemicals only in Maharashtra. That is why I am giving you a discounted rate of 2%. If I come to know that you are doing it elsewhere, I will charge you a penalty of 125% is what they said. 125%. So now, they breach the contract obviously. So they have to pay what? First of all, that 2% is coming up to 2 lakh, 4%, 4 lakh. So Maharashtra government was very clear. If you follow this rule, 2% you can pay 2 lakh. Otherwise, you have to pay 4 lakh also, plus 25% extra. Basically 125%. 2 lakh will become 2 into 125%. Correct? So now, I will pay 2 lakh anyway. That anyway I am paid. Apart from that, now 125% extra will be what? 2.5 lakh. Now the beauty is, this 2 lakh rupees was deemed to be compensatory in nature. Why? Because this 2 lakh is shifting to 4 lakh, which anyway I would have paid otherwise. That is compensatory in nature. Extra 50,000 penal in nature. This was a MCQ question. Did you understand? So that we are only doing those hidden points. Did you understand? So it was 4 lakh. I gave you a discount of 2 lakh. Two conditions. You should do it only in Maharashtra. If I figure out that you have done it elsewhere, then the 2 lakh will become 4 lakh. Plus extra 25% you have to pay penalty. Or rather I would say 125% you have to pay. So now I anyway paid 2 lakh. But now you would breach the contract. So I paid 2 lakh and 50,000 extra. 2 lakh is compensating for what I would have paid otherwise. So 2 lakh became 4 lakh. That 2 lakh is compensatory in nature. 50k is penal in nature. Supreme Court judgment. So what is disallowed in this example? 50k. Penal provisions only, not compensatory in nature. That same dialogue is given here also. You see, compensatory is allowed. Penal not allowed. Right? Interest on default in paying TDS. Interest on default in paying TDS. Any interest you pay, not allowed. 234A, B, C. That is your interest in paying what? Your advance tax and other things, not allowed. Interest on loan. Interest on loan allowed or not allowed? We just did it now. What if I have taken a loan to pay income tax and you are paying interest on that? Sorry, is it personal in nature? Other cases easy. We have done it already. What about income tax? Yes, taken to pay income tax, not allowed. Income tax only is not allowed. How will I take any money to source that income tax? Not allowed. Other cases, Anyway, interest was allowed, but any penal interest, like you missed your EMI, 2% extra interest I am adding, that is also allowed, right? For the scientific research, for TDS filing, and for 234 EFG, all these sections, I need to pay a fee to the CBDT. 100 rupees, 200 rupees, 300 rupees. What do you think? Allowed or disallowed? Filing fee, TDS filing fee. Not payment made to auditor, not that payment, not payment made to accountant. It's just filing fee paid to CBDT on the income tax website, those payments. Allowed or what? Is it interest? Is it penalty? No. As per ICAI, it is allowed. Correct? As per ICAI, it is allowed. Because as per 43B also, and here also it says any interest, fee. Even 43B says fee, etc. is only allowed on payment basis. Correct? So here in 37.1, the thing is, there are contrary judgments. Some are saying allowed, not allowed. We need to pass the exam. We need to follow whom? ICAI. Supreme Court is ICAI for us. So ICAI says allowed. Yes. Okay. No, it is here. Whatever this is, I have taken from the material only, not allowed. You cannot take. 234 BC, ABC interest is not to be taken. It is disallowed. This I have taken from the suggested answers only. That's why I made this chart. This also I have seen many cases. Most of the cases, they have actually, all cases they have allowed. No, man. I mean, I don't know why, but ideally it should not be, right? So stick to that thing. That is the problem. No, one answer, they will create confusion. This is the accepted position till now. Done. So these are all the various points to be noted. So from the judiciary for CA final adjustments, website expenses allowed or disallowed? That too for a travel company. If it's Tarun's Brainery or Advait Learning, that's allowed. For a travel company, website expenses. Is it capital or revenue? Yes, it is revenue in nature, allowed. Prior period expenses. Prior period expenses which were disallowed earlier, but it's crystallized during the previous year. Allowed. Correct. So basically earlier it was disallowed, and to this year it's crystallizing. Let's say an extra payment that I've made arrears of salary, all those things, is crystallizing this year. Allowed. There was a loss embezzlement of cash last year, and this year I came to know through the audit, and I have put a loss of 10 lakh rupees. Allowed, disallowed? Allowed. Retrenchment compensation. Retrenchment means if I want to throw out somebody in a nice way, I'll give him some compensation. That's called retrenchment compensation. Correct? Retirement benefit they'll call, but it's not exactly retirement benefit. It's like forced to throw him out. That's called retrenchment. So retrenchment compensation, if the business is closed down, it is a capital expenditure. It will not be taken into consideration in your business because business only is closed down. But in this Ravindranath Nair case law, 4 out of 10 businesses were shut down, 6 businesses were running, and then that fellow got retrenchment compensation. Can the company claim the entire amount debited to P&L account? Yes. If the business is completely shut down, compensation is not revenue in nature, it will be capital in nature, because you are paying for shutting down of the business. On the other hand, if the businesses are running and you just don't want that fellow to continue, then that will be 37.1. These are all adjustments from the interesting cases that I found in the judiciary. Top employee, I'll give you golf club membership, allowed or not? Capital or revenue? Golf membership is like a bomb. It will be in lakhs. Like in Bangalore Golf Club and all, there is a waiting period of 15 years. Imagine. Like if you apply, your son can play golf. It's true. There is a Bangalore club. I don't know what's so good about that club. It's an elite club. 27 years waiting period. Like what's the point? If you become a member, you cannot even, enjoy it. Right? So actually, I'm not even joking. That's the truth. Madras Cricket Gymkhana Club also, some 8 years waiting. Crazy, guys. So it's like, that's the fancy thing that they have to wait for 8 years. And for that, you have to pay 15 lakhs upfront. And then waiting period 8 lakhs. Most stupid investment ever. Right? So, but that's the status symbol. Oh, I am the member of the golf club. I am the member of whatever it is. Right. Anyway, now this golf club, it's a lot of money to play golf. So all these rich CAs, retired fellows will keep playing. I would have seen. So now here, if I am giving this golf club membership, what do you think? It's a benefit given to employee. It was allowed under 37(1). Top employee, that's why. So it's a expense given to him. It's not a perquisite as such. It's not any benefit that you are giving him. Correct? So the thing is, again later all these changes were made in salary. So now all these will be considered as benefits. Will it be a perquisite taxable for the employee? Yes. For him it's taxable. For you, can you claim it as an expense? Yes. What about a glow sign board? Outside you will see 3-4 boards that sir has put. Is it 37(1)? Yes. Definitely yes. Compounding offense, all that we saw. So, yeah. Anything for that matter. Glow sign board, digital board, whatever, it's all for the furtherance of business. If it's a digital board, it will be catching to the eye catching. No, why? No. So in outside digital boards, whatever you do, it is obviously for the furtherance of, ultimately, why did you put that? Just to show about your business. So it is revenue expenditure. So in this also there was a lot of discussion. Glow sign board and this thing, why is it capital? Does it go on for a longer duration, or will it eventually fade away in the next 1 or 2 years? Even digital boards, whatever you do, there will be better technology coming in. So they said ultimately there is no point in making it into capital. It is revenue. Sorry? Yes, because of the obsolescence factor, they made it as 37. That was actually the case. Since you asked, I am telling. That is the case actually. Yeah, as I told you, freebies, the courts justified the freebies as possible. So now they have inserted an explanation 3 which says any freebie given not allowed. Provisions for diminution in investment, impairment of asset under Ind AS 36, provision for deferred taxes, none of it is allowed under 37(1). Dividend or dividend distribution tax, all these things, anyway, everything changed now, not allowed. Provision for subsidiary companies loss, the net holding company level, not allowed. Salary and perquisites given to a director under 37(1). Yes, you can give, no problem, because director here is as a consultant, so you can give, but subject to 48, it should not be excessive payments. A director can take maximum 11% remuneration as per Companies Act. Let's say you can take more than 11% also by passing an ordinary resolution. And if you don't pass the resolution, you should refund within 2 years. So now, if you have not refunded within 2 years, or let's say you got the refund also within 2 years, and you have already paid more than 11%, that extra, whatever, let's say 10 lakhs extra you had paid, will this be allowed or disallowed? You have showed 20 lakhs, but in that, let's say 10 lakhs is disallowed. So what will you do? you will disallow 10 lakhs. You should only take it as 10 lakhs and not the extra 10 lakhs. Couple of other points. These are all from the judiciary, hidden points in 37. Anything they can ask. Yeah, coming to CSR. Tell me guys, CSR is allowed or disallowed? Under section 135 of Companies Act, 2% of average net profit you have to donate as CSR in the preceding 3 years. For example, if there is a 100 crore, 2% represents 100 crore. In Income Tax Act is 37, as per 37, allowed or disallowed? Full 100 crore is disallowed or what? Because they can ask you, in 100 crore, 80 crore was spent, 20 crore was set aside for a project. 80 crore in 100 crore, 80 crore was actually spent, 20 crore was not spent only. So amount debited to P&L is disallowed or only the ones which is spent? Yes, amount debited to P&L account, entire thing will be disallowed. Why? Because if I allow for the 2% also, then it will be like subsidizing the donation. If I allow that 2%, 100 crore if I allow, then I will get a benefit of 30% on that 2%. It's like subsidizing the CSR activity which I am supposed to do. So I am giving a tax benefit for the CSR activity. That's the reason why it's disallowed. But interesting to know, under 37, it says any CSR expenditure is disallowed under 37(1). But it does not override 32(36). So if CSR expenditure is done under 32(36), then allowed or disallowed? Then it's allowed or disallowed. So any welfare activity, whatever is covered in 32(36), allowed or disallowed? Yes. So CSR expenditure comes under 32(36), then it is allowed, definitely allowed. CSR expenditure under 37 is not allowed. Will I get ATG deduction for CSR? For example, PM CARES Fund and PM National Relief Fund is a eligible CSR donation in Companies Act, and in income tax also 37, is it covered or not? And it's definitely there in ATG also. So is it like disallowed in 37 but allowed in ATG? If I donate to Prime Minister's National Relief Fund, is it disallowed under 37 but allowed under ATG? Ultimately it's the same only. What do you think? Right? So if you see donation, interesting to know, 4 donations we need to remember guys. PM National Relief Fund, PM CARES Fund. So PM National Relief Fund not allowed under 37, allowed under ATG. PM CARES Fund, it is neither in 30 to 36, it is not a CSR activity. Both are allowed under ATG. So these two you have to remember, that is PM National Relief Fund and PM CARES Fund. Is it CSR? No. Since it's not, basically, is it covered under CSR expenditure? No. Is it covered under 30 to 36? No. Will it come under 37? No. But can I claim under ATG? Yes. So any donation to PM National Relief Fund and PM CARES Fund is immaterial because in terms of tax benefit, because anyway you will get under ATG. But these two are interesting. Clean Ganga Fund and Swachh Bharat Kosh. Clean Ganga Fund and Swachh Bharat Kosh. Is it 30 to 36? No. Is it 37(1)? No. Is it ATG? No. So here one interesting part is If it is taken as CSR, then ATG will not come. Interesting. If it is taken as CSR, ATG will not come. If not taken as CSR, ATG will apply. So you have to read the Bare Act for this, but you leave that. Just this is the final crux of the matter. Only for 3 and 4 items. If you take it as CSR, if it is part of the CSR policy of the company, can you claim an ATG deduction? No. Which means Clean Ganga Fund, if you donate, it will be disallowed under 37 also, not allowed under ATG also. Swachh Bharat Kosh, same. It is not taken in, if you have taken it in CSR as CSR policy, then it will not come in 37(1) also, it will not come in ATG. But if you exclude Clean Ganga Fund and Swachh Bharat Kosh in your CSR policy and still donate, since it's not part of CSR, anyway 37 it will not come. But can you claim a deduction at ATG? Yes. So this is the hidden point. PM National Relief Fund, PM Cares Fund is straightforward. Not allowed under 37(1), not allowed under 3036, not a CSR activity, direct ATG. But Clean Ganga Fund, Swachh Bharat Kosh should be specifically excluded in the CSR policy if you want to claim ATG deduction. Otherwise, not possible. Sorry? Which one? Yeah. In Clean Ganga Fund, no. If you include it in the CSR activity, anyway 37 it will not come. No? See, there is a CSR payment. When I taken in CSR, I meant CSR policy. See, CSR will happen only as per the strict CSR policy. As per CSR policy, who will frame it? The board of directors, right? So, in the policy, I should not write Clean Ganga Fund and Swachh Bharat Kosh. If I write that, the moment I write that, it will become a CSR fund, which means no allowance where in 37(1) also, in ATG also. But if I don't add it as a CSR policy, now unfortunately 37 you have to read Companies Act. Companies Act 135, what is CSR? It should be approved by the CSR policy of the company. There will be an independent director and a bunch of other directors which frames the policy. Clear? So, when I say taken as CSR, it means taken in the CSR policy. One thing you need to understand, whatever you take in CSR policy, if it's allowed under ATG, you will get an exemption. For example, PM National Relief Fund, PM Cares Fund. Whether it is in the policy or not in the policy, I don't care. ATG, you will get a deduction. Only problem is Clean Ganga Fund and Swachh Bharat Kosh. If it is part of the CSR policy, then ATG will not apply. Deadly. Means what? You will not get a deduction. Which means you have to donate it free of cost without any benefit. If you want to donate to Clean Ganga Fund and Swachh Bharat Kosh and also take an ATG reduction, it should specifically be excluded from the CSR policy, which means this donation to Clean Ganga and Swachh Bharat Kosh should be over and above 2%. Should be over and above 2%. It should not be forming part of any of your policies. That is the minute difference. Not just that schedule, you should have a policy. It should be done according to the policy. And what can the policy allow or disallow, that is given in the schedule. Schedule is an exhaustive list. In that list, you can choose certain things and donate only to that. Yes. Perfect. Perfect. Only to the committee. Now that you asked, 1 minute I will take and show you so that you will be convinced, because this is a very hidden point and MCQ question they can ask. We are doing it at a very higher level, only these heavy duty. See, AOP, BOI, the small chapters, they will not ask tough questions. Trust me, that you also know, you would have written, you may have written the exam before, or it may be your first attempt, but you would have seen the questions. The tricky ones are in these chapters only. So we need to see. So one second. So Companies Act is very, very clear about CSR provisions. It says it should be done as per the policy. In schedule, they have given a bunch of stuff which will include everything. National Relief Fund, PM Cares Fund, so many things are included that. But we are not concerned about it. If you see, shall constitute a CSR committee, it says, and the CSR committee will formulate the activities, and the activities should be specified in schedule. So you can't blindly do whatever you feel like in the schedule. It should be as per the policy. So coming to this, if you have mentioned in the CSR policy, that's all. ATG, you cannot take any deduction. If you want an ATG deduction, you need to exclude that in the CSR policy. That is only for Clean Ganga and Swachh Bharat Kosh. Prime Minister, because the Bare Act reading is like that for ATG. That will not do it now. It's, the regular batch will spend time, but not needed. Just remember this and go. PM National Relief Fund, PM Cares Fund. These two funds, I don't care what is written in the policy. If I donate to that, I can blindly take ATG. But only these two funds, Clean Ganga and Swachh Bharat Kosh, I can take ATG only if it is specifically excluded in the CSR policy. Clear? Yeah. Because here the intention is you pay extra to the Swachh Bharat Kosh, you pay extra and you can file. You can take the benefit. These are the two things. What about feasibility study of an project which becomes abandoned? I told you PVR wanted to have this director's cut everywhere. They came to Chennai. They saw ticket seats are 60 rupees, 120 rupees. So they said, my luxury seats, if I don't charge anything above 700, then it will not work out for me. Our fellows here said, I can watch 10 movies in that. So that's why actually they did not open a director's cut. It will not open also in Chennai. It will not work because the government is very strict about the guidelines, which is good actually. Right? In Bangalore they opened, in Delhi, in Mumbai and all they opened. 3-4 places they opened, that's all. Now they did a feasibility study here and they figured out it won't work out. They did a survey across various malls in Chennai. They spent 5 lakhs towards this. Can I claim it as revenue expenditure? Abandoned project. Yes, I can. Definitely, I can claim it as a revenue expenditure. Yes. So these are all the pointers. Correct. But if the project is abandoned, they will say, isn't it like a capital nature? In the sense, the thing is, project is anyway gone. So what can I do with it? So it should have been a capital expenditure. So they said nothing doing. He is telling that business only didn't run. Project was abandoned. So the thing is, it didn't start only. So it was like a it's not incorporation, but pre-commencement of business expenditure is what they claimed. They said it's capital. They said no, it is business. If you started the business, then anyway it is business expenditure. But here the crux of the series, abandoned project, right? Let us see other thing now. Well, that's all about 37. Point number 4, you see, in section 37, point number 4. Point number 1, guys, share issue expenses. We have seen the entire chart, so no tension. Point number 4, PVR, Priya Village Roadshow. That is a full form of PVR, right? So expenses incurred in connection with expansion of existing business are revenue in nature. Spouse is a director. Spouse is going somewhere else. for business and the other spouse comes along to take care of the health of the spouse. So company pays for both. And if the health is not okay for this husband, wife, whatever, then obviously business will suffer. What do you think? You are the AO, allow, disallow. These are all decided cases. I am not even making it up. What do you think? Correct? Allowed, disallowed. Health of the employee, health of the director. So this issue went to court. They said disallowed. Ultimately, it is personal expenditure. By that logic, then I'll tell I want my 5 people's different food I want. So I'll take 5 people, 5 chefs I'll take. So there is no end to it then. Right? That's why they said disallowed. Practical example, recently you would have seen Starbucks CEO did not want to fly to the head office. So he said every day I will take flight, private jet, not even joking, 1000 kilometers every day private jet. True story. What is that? Business expenditure or personal? If that happened in India, correct? I'll take helicopter every day. In Bangalore, that's only better, faster, right? So what do you think? That, for example, I generally drive and come. This is the first time in my life I have come in flight to Chennai because I got busy that day. I couldn't drive at night. Otherwise, I always drive and come. Wherever I go, I drive and go. This is the first time in my life I have come by flight to Chennai. So it was so surprising. For a bloody 37-minute flight, I had to leave like 2 hours before, like 3 hours before, 3.5 hours before, because to reach the airport is only 1.5 hours. So it's crazy. Then ultimately from there to hotel, like it took 5-6 hours only for a 37-minute flight. It is really funny. So if you see, that's Bangalore all about. So now this fellow, actually Starbucks CEO, he doesn't want to shift only. So every day private jet, 1000 kilometers private jet, to and fro, crazy guy. What do you think? Revenue or personal? Revenue expenditure, because it's for the business. It's like I'm giving you a, transport facility. Otherwise, there I'll take accommodation, right? I don't want that. I'll give me the transport. I have my own house. I'll come from my own home, but I need private jet. It actually happens. Crazy, right? Then one more example which happened was, I don't know whether I told you, this in Japan, they called all the CEOs of India, some important companies. They invited them specifically with their spouses. So most of them did not go with their spouse. Only 1 or 2 people went with their spouse. And believe it or not, because of that, the show of solidarity, they actually gave the contract to only those who had got their spouses. So entire spouses expenditure, travel, food, everything they claimed, that company. The AO disallowed, saying that spouses expenses are personal in nature. Issue went to court. What do you think? What do you think? So guys, crazy. They used one dialogue here. See point number 5, please. 5. They used the dialogue commercial expediency and for business consideration. Expediency means what? It is advantageous. It may not be just, it may not be like, you cannot say that it is actually just and fair. It may be unfair, but it is what? Advantageous to the business. So this, I remember this came when I was writing CA, 2012 case law, this is, right? Commercial expediency. So yes, these are all adjustments given in the exam. So traveling expense of spouse, inadmissible. Traveling expense of the spouse, accompanying the spouse on grounds of commercial expediency and business consideration, admissible. And one more thing, to protect the life of a director who is kidnapped, company paid ransom 1 crore. Allowed, disallowed? What do you think? Is it illegal? In the hands of the kidnapper, yes. Kidnapper, yes. This fellow, what do you think? These are all decided cases. We are not creating anything. Point number 10. Right? Though kidnapping and demanding ransom is illegal act, any payment of ransom by the employer to protect the life of the employer direct is not considered as an offence, allowable as deduction incidental to business. What about the other way around? This thing, actually Tatas were paying in the northeast of India because their Maoist and a lot of Maoists are there, So thing is, if you want protection from them, they will only protect you. That's the best part. For which you need to pay some money. They'll say, I'll destroy all your tea estates if you don't pay that money. So they were paying extortion money, Tatas. And Tata was the first guy to disclose it in the balance sheet and P&L. Directly. He said extortion money paid to Northeast, the Maoist, because I have to give them money to protect the thing. AO disallowed. He went to the court and said, what is this nonsense? Like, this is incidental to business. So they allowed it. Court allowed it. He was the first guy to disclose, saying that bribe paid to or extortion money paid to Maoists. So if I keep on allowing like this, it will be dangerous. That's the reason why 37(1) the explanation came. Any payment which is illegal is not allowed. Correct? Any payment which is illegal is not allowed. That's why this came. That entire thing came only because of that. So you see this one. Expenditure incurred for any purpose is an offence or prohibited by law in India or outside India. Not allowed. All other things are fine. Direct taxes and all we saw. So you go for a full body checkup every year. That is fully sponsored by company. It's not medical insurance and all. I am sponsoring the entire full body checkup of your top 5 employees, top 5 directors, whatever. Allowed or disallowed? It is allowed because it's for the upkeep of health. Fair enough. One fellow, heart attack, bypass surgery, 20 lakhs gone. He didn't have insurance, company paid. Yeah, the policy of the company was general heart checkup I will give. That's normal. I'll give you like, it's a full care package. 20,000-30,000 rupees every year, no problem. But now this happened, open heart surgery, 20 lakhs. What do you think? During the course of business, right? So if you see, that was also a case law. Must be there somewhere. See here, Delhi High Court, 2011. Expenses incurred by an assessee on heart surgery are not allowable under 31. General well-being of the heart cannot be equated with using heart as a tool for carrying out business. Heart is not plant. Correct? So deduction under 37(1) cannot be claimed as expenditure. It is not wholly or exclusively used for the business. See the cases that go there. Correct? Yes, you have given your heart to your wife and your girlfriend. So it is not fully allowed in the business. Why? It is not a plant. Are you using it for the full business? No. Imagine they are actually going to the extent of, is heart a plant or not? Right? Yes. Only in income tax you will find all these things. That glow sign, you see that the logic is given here. You can read. See, is excessive incurred expense to play local police and gundas to ensure protection. Such payments are disallowed because they are illegal. Police, local police, what? Bribe. That is disallowed. Normal fine, different thing. Bribe, disallowed. Then political parties, that is also disallowed. Cool guys. So these are all the things that we are seeing. So that's about it. We have reached our time also anyway. So what we'll do in the next session would be definitely this most important area, with a fresh mind, 40A1. This is what? TDS. 40A1, 40A1A, 40A2, then 40 capital A, 40 capital A2, 40 capital A3, and then directly go into tax audit, books of accounts, presumptive taxation. So tomorrow definitely within the first half we'll have to finish this. We will finish this, no problem, and solve the few questions. and then dive into the next area, capital gains, right? So was the pace okay today? Yeah, fine. Everyone is comfortable? Yes. So, and we have solved so many, what do you say, adjustments, and all these adjustments are important. 1 mark, 2 mark, 3 mark, like that. That's what it is. Online people, I am unable to see your chat. I think there's some technical problem. You can text me if you have any doubts. So it's only stuck at one person. I know you are chatting, but I'm unable to see any of your chats. Cool, guys. So meet you tomorrow, 9 a.m. Okay, thank you so much. Okay, guys, very good morning. Yes, how are you doing? All good? Yes. So let's begin today. So today we'll have to wind up with PGBP and of course start off with capital gain. Little bit of international taxation also I'll be doing because it is kind of linked to one of the concepts that we'll be doing. So, and that is an important concept because, I'll tell you why. Cool. So in the previous session we had done till here, we had finished other things. So today we'll have to do the last leg of PGBP with other areas. So how do you feel PGBP? Easy or difficult? It's actually decent. It's easy only. A lot of adjustments I understand, but yeah, that's how it is. Cool. So this part. Disallowance in case of all the SECs, 40 small a. So first one is payment made to non-resident or foreign company. The second one, payment made to resident, 40A1 and 40A1A. Should be read together. So I have a chart, it will be easier for us to understand. So then later I can probably give you time to just jot down, but now initially we can discuss this. So 40A1 and 40A1A, right? So 40A1, what does it talk about? 40A1, 40A1A is for resident, for 40A1A is resident, 40A1 is for non-resident. So 40A1 talks about you have supposed to deduct TDS and you have not deducted, right? Or you have deducted but you have not paid to the government. So these cases are covered. So first of all, 40A1, what all is covered? Interest, royalty, fee from technical services, and any amount on which TDS is payable. All the four things are covered. TDS on salary is not covered here because TDS on salary is covered under a different section, 40A3. So 40A1 speaks about interest, royalty, fee from technical services, and any amount on which TDS is payable. Who all are covered? Who all are covered? Basically, any person outside India, foreign company, and payment to NRI in India. So any person outside India and foreign company were there before. People were very smart. This 40A1 is not applicable to any NRI in India. So they used to make all the payments to NRI when he was in India, and then he would go outside India. So to curb that from happening, they inserted that also. Payment to NRI in India. So all three people are covered. What is the component that is covered? TDS, which is deductible, but based on the rates prescribed. So the component is whatever TDS is deductible. And conditions of disallowance. This section talks about disallowing the expense. So if there is a expense of 1 lakh on which 10% TDS is to be recovered. So ideally I should deduct 10,000 and pay to that person 90,000. Now if that 10,000 is not deducted but full 1 lakh is transferred, then disallowance will come. Or I have deducted 10,000, paid him 90,000, but to the government I have not remitted 10,000. Then also the disallowance will come. But when will it come? We'll see. So when will the disallowance come? First of all, deductible, not deducted. Means what? 1 lakh full amount is transferred to the foreigner. So definitely disallowance will come. Second one, deductible, deducted but not paid to government. Deductible means I was supposed to deduct 1 lakh, 10,000. Have I deducted 10,000? Yes. Have I paid to the government? No. I have not paid to the government before the due date of filing the return of income. So all the three things are there: deductible, deducted, and not paid to government before due date of filing the return of income. So these are all the things. And what is the amount of disallowance? Amount of disallowance, deadly, 100% of the expense. So if 1 lakh rupees is the expense, 10,000 is the TDS deductible and I have not deducted, full 1 lakh is disallowed. 1 lakh is the expense, 10,000 is the TDS, I have deducted 10,000 but I have not paid to the government 10,000. Entire 1 lakh is, disallowed. So deadly section. Because basically since I am transferring to the outsider foreigner, I need to ensure that the TDS will be paid on time. Otherwise it's going to be a huge problem. Now all these things were there. Now deductible and deducted but not paid before the due date of filing the return of income. Due date of filing the return of income. Now when will it be allowed? Is it like a permanent disallowance is the question. Is it a permanent disallowance, or let's say this year 31st October is my due date, I am not paying. Next year January I pay. Is it allowed in the next year? Yes. So it's not like a permanent disallowance. It's just that it is the allowance is shifted to the year in which you pay, right? So first one is what will be allowed in the previous year in which it is paid. Very simple. It will be allowed in the previous year in which it is paid. Or now let's say you do not. This is what, guys, will be allowed in the previous year in which it is paid. This will come only when you have deducted. Correct? In that 1 lakh, if I have deducted 10,000 and then given 90,000 to you, foreigner, and that 10,000 I have not paid to the government. Whenever I pay to the government, it is allowed, no problem. But what in a scenario where I have not deducted only? So 1 lakh full I have transferred to you, what to do then? Then it's a big problem. Now can I deduct 10,000? No, I have never deducted. I have paid you full 1 lakh. So this was an issue. The problem with this is if you do not do this now, then you will be called as an assessee in default. And all the penalty provisions will come and get attracted. So they went to the finance ministry and said, please do something about it. So let's say you are the foreigner. So Nirmala madam gave a good solution. You are the foreigner, I am the person who is supposed to deduct 10,000, I have not deducted. So I will come to you and say, sir, look, I forgot to deduct 10,000. So please, I need one help from you. What help? First, show me whether you have included this 1 lakh in your return of income. Have you included or not? Please show me. Okay, I have included. Good. Second, sir, have you paid tax on this? Please give me the tax paid receipt. Fine. That also I have taken. So then we will also take one certificate from a chartered accountant. He will verify and tell, yes, you have included and yes, you have paid. Which means all this you have done. Thank you so much. Because of all this that you have done, I will not be called as a assessee in default. Because if assessee in default concept comes, then prosecution will come. I may be jailed also. That's the reason why. Am I curing the defect as such? The defect has already happened. But am I curing the defect to some extent? Yes. So though I made a mistake, I am at least removing the tag of being called as an assessee in default. So they gave a very nice proposition that few conditions, foreigner you go, you collect his tax paid receipt, you collect his return of income, you prove that he has already included and paid the tax on it, no problem. So basically that 10,000 you should have paid, he has paid, no problem. It's okay. And then show me a CA certificate. That's the importance of a CA again. Chartered accountant certificate has to be given to prove that you have actually paid the money. So if all these conditions are there, that's it. Will be allowed when the payee, that is the foreigner, pays the tax and files the return of income and fulfills all the conditions. Right? Simple. So basically, if I take an example, PJ Limited, who's the SSE, paid a professional fee to some guy called Ching Chong, right? 2 lakh rupees. So 2 lakh rupees, there can be two scenarios, guys. 2 lakh where I have not deducted TDS only, or 1,80,000 paid, 20,000 payable and deducted but not remitted to the government. So if I pay 2 lakh without TDS, TDS is not deducted, then the entire 2 lakh is disallowed. So what will happen is, if you see 2 lakh is disallowed means what will happen, unfortunately. So you see, if this is the case where you have not deducted at all. So that's why if you see PJ Limited, it will be disallowed 2 lakhs. on which I have to pay 30% tax. And on the other hand, Ching Chong also has to pay tax on 2 lakh. So isn't it double taxation? Yes, 100% double taxation. So to avoid that, I already told you what I should do. I should go to Mr. Ching Chong and say, sir, I am sorry, I did not realize that I had to deduct. Kindly you pay and give me the certificate. At least I won't be called as SSE in default. SSE in default. So that is one thing. Apart from that, here, if you see 1,80,000 in which 20,000 is payable and deducted but not remitted to the government. So if you see, very simple, pay to the government before 31/10/2023, then full 2 lakh rupees is allowed. That is before the due date of filing the return. Paid to the government on 31/12/23, that is after the due date of filing the return. 100%, that is 2 lakh, is not allowed in 22-23, but it will be allowed in the next year, when 23-24. Why? Because I have filed it in the next year. So this part is easy, but when will I be called as an SSE in default? When I have not done either of these things. And especially here, 2 lakh rupees without TDS and is disallowed. So two double taxation is happening. Here also plus 2 lakhs, here also paying 2 lakhs, double taxation. So when will I not be an SSE in default? When will I not be an SSE in default? And when can I claim 2 lakh as an expense? When can I claim 2 lakh as an expense? Yes, so basically, as I already told you, I need to go to that person and request him that, sir, please, all these things have happened, you need to change, you need to, give me that thing. So that is the criteria. That is the thing. So if you see, come now, I'll show you here in the notes. I think, yeah, chart is not needed, guys. Everything is covered here only. Check it out. So come to this page number, whatever. Did you understand, guys, everything? Quickly, we'll go through this now. In my book, it's 54. Your book, how much? 47, yes. Font can change everything. If you have seen, there are no changes as such. It's the same. The font can make the pages go haywire. Yeah, any interest, royalty, fees. So all the things, interest, royalty, fee, technical service, or other sum, that is other than salary to non-resident, because that is covered in 48(3). Outside India or in India to non-resident or to a foreign company, on which tax is deductible, shall be disallowed. Tax has not been deducted, or after deduction not been paid to the government before the due date. Right. Now, one small case I just want to tell, that this part may not be there because I have added it recently. So it says here, deductible at source. What do you mean by deductible? It means that it should be liable to be deducted. TDS is liable to be deducted on that. If I buy software from foreigners, like for example, I buy Adobe Photoshop software. It is not produced by India. It is outside. Now, do you have to pay TDS on that? And let's say I'm using it for business purposes, not for personal use. I have a business photo studio for which I need Photoshop. I'm buying it. What do you think? Do you need to pay TDS on the software? And I'm buying a bulk software of some 100 licenses, huge amount. Should I deduct TDS? So this question was raised in Engineering Analysis Center of Excellence Private Limited case law. So they spoke whether TDS, they went on this word deductible. Just because I am paying to the foreigner, is it needed or not needed is the question. So only you have to see deductible portion. So they said the first category deals with cases in which computer software is purchased directly by an end user resident in India. Second category is what? Resident Indian companies that act as distributors or resellers, reselling the same to Indian residents. So first is what? I am only buying directly from Adobe website. Second is what? An Indian company is buying the keys in bulk and then selling it to other Indians. That also we have seen. I have bought personally a Windows software from some such company. Authentic software. I was also shocked. I just wanted to try it out. So actual software is some 15K. They were giving it some 10K. I thought, let me try, and I bought it. and it actually is working fine for so many years now. So what they do is they buy in bulk and then they give it. For example, AWS certification you can do now. Microsoft AWS certification you can either do from your that is Amazon directly, and then you will get a certificate from Microsoft and you just have to pay the examination fee, or there are many such institutions which is giving the certification. So that is actually lesser than what it is actually. So if you see like that, so I am buying the keys in bulk and selling, that is the second category. Third category concerns wherein the distributor happens to be foreign non-resident vendor who after purchasing the software from a foreign company resells to the Indian distributor. Deadly. One is direct purchase. Second one is Indian will purchase the keys and sell it to Indians. Third one, a foreign company will sell it to foreign distributor. Foreign distributor will sell it to Indian distributor. Indian distributor will sell it to others. Lastly, computer software is affixed into the hardware only. Like when I buy on Amazon, let's say Windows included, Windows not included, like that. So generally all these laptops will have the OS installed and only it will come. So now, payment for end user licenses of shrink wrapped computer software, that is software available off the shelf without any modification or customization, does not qualify as royalty in most of the DTAs. However, payment to Indian entities do not stand on the same footing as definition of royalty includes right to use computer software. I told you that they changed. This is what it is. So now it is no longer an asset. It is what? Royalty. So in royalty, whatever TDS sections will come, that same thing will apply here also. That is a deadly point. Got it? So that's what they are trying to tell. It's a simple case. No need to write down anything, but just. So when I say deductible, I need to see so many things. And as far as royalty is concerned, it is, as far as computer software is concerned, any payment made to the Indian entities by us, of course, will come under the royalty definition. So this was 9.1, interpretation of 9.1. So a little bit of international taxation will come here, as I told you. Right? Now, check the case scenarios, guys. All the case scenarios are MCQs asked in the exam, so I have taken it off and I have made it into different cases. This is there in the book, don't worry. First, tax deducted and paid on 22/2/2022 within the relevant previous year. But deduction is allowed in which year? Deducted and paid only in 22/2/2022. When is it allowed? 21/22 only it's allowed. Perfect. So 21/22 it is allowed. As tax deducted and paid in 21/22. Tax deducted on 22/2/22 but paid on 12/7/22. 12/7/22. Yes, deduction is allowed in previous year 21/22. As tax deducted and paid within the due date of filing the return. That is allowed, no problem. Third, tax is deducted on 22/2/22 but paid on 11/11/22. Is it, what do you say, the due date? No, beyond the due date. Hence, when is it allowed? Previous year, 22/23. As tax was paid only after the due date of filing the return, then it is done there. Tax deducted on 1/4/22 but paid on 34/22. Yes, deduction is allowed in 22/23 itself, as tax was deducted and paid only in 22/23. So it was deducted only late. It was supposed to be deducted on 31st March 22. They deducted on 1/4/22 and paid on 34/22. So this is not about due date of filing the return. You have not even deducted it within the year. Right? You are supposed to deduct before 31st March. You deducted it next year actually. So obviously it will be allowed in which year? Next year. 22/23. Tax deducted on 1/4/22 but paid on 34/23. Yes, next year. Deducted first year, next year in the end, April, I have deducted. Deduction is allowed in the previous year, 23/24. As tax was remitted only in previous year, 23/24. Tax is not deducted or remitted at all. Obviously, deduction is not allowed. unless the conditions to avoid disallowance are fulfilled. So, simple rule, you need to deduct on time. So, the benefit of those who walked in, quickly I am telling you, for foreigners, you need to deduct the TDS on time. If you don't deduct, 100% of the expense is disallowed. Or if you deduct but not pay to the government, 100% of the expense is disallowed. But there is one exception where you can go to that foreigner and say, look, I was supposed to deduct, but I forgot to deduct. So, you have the money already, you only please pay and then give me the certificate, then I will at least not be called as SSE in default. Very simple. So, that is what it is. So, you see here B56, 2 pages later. Disallowance of 40A1 and 40A1A shall not be attracted if the following conditions are satisfied. 40A1A is resident, we will see that in a while. The payee, that is resident or non-resident, has furnished his return of income under section 139. The foreigner has furnished the return of income under 139. He has taken into account such sum for computing his total income. He has paid tax on the income and he has taken a certificate from the chartered accountant in form number 26A. This benefit is applicable only when payer has failed to deduct TDS. I already told you. 1 lakh minus 20,000 I have not done, full 1 lakh I have given to you, only then it is applicable. This benefit is not applicable when payer has deducted TDS but not remitted to government. I am supposed to give you 1 lakh minus 20,000, I have given you 80,000, I forgot to remit that 20,000 to government. Can I come to you and say, boss, in that 80,000 please pay? No. It is only applicable when I have not at all deducted. Very simple. So, that is what it is. So, 40A1 speaks about non-resident guys, whereas 40A1A speaks about resident. Everything is the same. But instead of resident, non-resident, who is covered here? Resident. And there we had only interest, royalty, FTS and all those things. Here, I mean, if you see, these are the things which were there, no? Interest, royalty, fee from technical services. And any amount on which TDS is payable. Here, very simple, any amount payable. Any amount payable. Component and condition, same as 40A1, no change. No change. In 40A1, 100% of the expense is disallowed. In 40A1A, 30% of the expense is disallowed. Just 30%. So, 1 lakh, I am supposed to give, you are an Indian resident, I am supposed to pay you 1 lakh with 10% TDS. I have not done it. So, how much is disallowed? 30,000 only. Why? 30% of the expense is disallowed. But in the year in which I have actually deducted and paid, that 30,000 will be allowed. Understood? Very simple. So, this is 40A, 1A. So, same thing is given here. (40A3) on the other hand, right here only in the notes, 40A1A done. Income tax, yesterday we discussed, is it deductible expense? No, that is 40A2, already discussed. (48)(2)(b), it is a payment made to state government. So, state government undertakings, like for example, Jungle Lodges Private Limited in Karnataka is a state government undertaking which has one of the largest resort base in India. A shockingly very profitable entity of the government is Jungle Lodges Private Limited. So, state government, what they were doing, they were taking money from these private companies because they needed funds in the form of royalty, license fee, service fee, privilege fee, etc. So, they were imposing, because it's my entity only. So, I had imposed a rule saying that for all state government undertakings, they have to pay the state government royalty of 5%, royalty of 10% for allowing you to set up shop in the forest. I'm just saying, example. So, the thing is, they were looting all those money there. So the center did not like it, so 48(2)(b) was inserted. If any payment like license fee, service fee, privilege fee is given by state government entity to state government, disallowed. Right? So that is what? This is levied exclusively on a state government undertaking by the state government. Interesting to note, can central government levy the service fee? Yes. So if they in the MCQ, if they ask you central government is levying service fee, not disallowed. Correct? Yes. That was the intention of doing this, because many governments were taking away the money. Because though I've allotted a transport, I have a tourism budget of, let's say, 1,000 crore, and this company is making a lot of money, government needs more funds, they will pass one regulation, my company only, no? Plus I am the government. I'll say you are using government land. The forest belongs to the government, Karnataka Forest Department. Hence, I am levying a service fee of 20%. You pay from your company, not allowed. So if you pay actually now, it's disallowed, which means you have to pay more tax. So anyway, it will go to the central government. On the other hand, if the central government levies, then no tension, deadly. So 48(2)(b). 48(3) is what? Salary payable outside India or to a non-resident. This is a very interesting section. Any salary payable outside India or to a non-resident in India shall be disallowed if tax has not been deducted or not paid on or before the due date. So if you do not deduct or if you don't pay on or before the due date, then what will happen? Disallowed. Now the question is, okay, I'm supposed to pay, you know that every month salary, the TDS portion I'm supposed to pay when? 7th of the next month. Let's say I pay it on 8th. What's the disallowance? 100%. Okay, now, but if I make do with paying fine and whatever it is, will I get the allowance or it is permanent disallowance? See, in 40A1, what did we see? 100% disallowance. But when will it be allowed? The year you pay. Similarly, in 40A1A, 30% disallowance. When will it be allowed? When you pay. 40A3, 7th is the due date, 8th you pay. Will it be allowed? Or let's say March payment you pay sometime in May next year. Will it be allowed next year? No. 40A3, guys, permanent disallowance, deadly. So April to February, on or before 7th of the subsequent month. March payment, you should make the payment before 30th April. Important note below, it's there in the notes. If TDS is deposited late even by 1 day, salary paid outside India to non-resident shall never be allowed as a deduction. Even if I pay from my pocket, means I should have subtracted TDS and paid you money, I paid you full by mistake. Now from my pocket I am paying 1 day late, fully disallowed. So it's a permanent disallowance. (40A4) already discussed. Any payment to provident fund or other fund shall be allowed only when the tax is deducted. We saw basically any TDS, everything you should make the payment, PF, whatever it is, you need to make the TDS payment. Yesterday we saw about the employer fund, so we saw. Now, this is interesting. I will tell you that your salary package is 20 lakhs. And I'll also give you a house, then other non-monetary perquisite, house, servant, gas connection, all those things worth 5 lakhs. So you are saying overall it is 25 lakhs package. For 30 lakhs package, which will include 5 lakhs of this perquisite. So basically 25 lakhs is your whatever money that you will get, 5 lakh is the benefit that you will get. As per perquisite section 17 and all, who should pay the tax? Employee should pay the tax. Employee will say, sir, I don't want house, car, servant, etc. Even if you give, no problem, I'll take, but I will not pay the tax on that. I will not pay it. So I'll calculate the full amount on 30 lakhs I'll pay. You need to reimburse me what? The tax portion on 5 lakh. So 5 lakh into 30%, 1.5 lakh you need to reimburse. I'm sorry, I'm not paying the tax. I'm not paying. So that I'm very clear on it. I need, because employees demand like this, 100%. Those who are good employees, excellent employees, they will demand. I told you, Starbucks CEO demanded that he wants to be flown in a private jet and they agreed. Which means how good must he be? Think about it. As simple as that. So yes, I am telling 30 lakhs, good, thank you so much, but 5 lakhs I will not pay tax. On 5 lakhs I will not pay because it's a non-monetary perquisite. You need to bear the tax. So what is the company's CTC? Company's cost to company, what is it for this fellow? For this fellow, the cost to company is 25 lakh anyway money they are paying. Plus 5 lakh they are giving perquisites. Plus the cost will be what? Tax on 5 lakh. For example, 1.5 lakh will be the additional cost to company. Now the beauty is, in their P&L account, what will they debit? 30 lakhs or 31.5 lakhs? 31.5 lakhs. Correct, no? Because why? My cost is what? I'm actually paying 1.5 lakh extra also, no? So they will pay 25 plus 5 plus 1.5. The question here is, Nirmala madam will allow 31.5 or she will allow only 30? Yeah. She will say, boss, nothing doing. I will disallow this to you. You need to pay tax on that. Which means, that is this 40A5. So actually, what is the cost to company? 25 lakh anyway is there, 5 lakh is there, tax on 5 lakh, 1.5 lakh plus 30% on 1.5 lakh. Tax on tax also will come, that is the cost to company. Why? Because this entire 1.5 lakh is disallowed. So 1.5 lakh into 30% is 45,000. So technically the cost to company is 31 lakh 95,000 to be honest. That fellow is only getting 30 lakh. 1,95,000 is extra cost for the company. People do this, that's why this section is there. So it's added back to this guy and added back to the company and company is paying tax on it. Will the employee also pay tax on it? No. For the employee it is exempt. So he will calculate tax normally, then subtract this 45,000. Sorry, this 1.5 lakh. Got it? No, nothing. This is it. Because whatever is disallowed is 1.5 lakhs. On that anyway, I'll pay tax. This is just our calculation. So that is not an additional incentive to the employee. So that what they have told is employee will show full 30 in his thing. He will pay tax on that 30. He will subtract 1.5 lakhs. Because 1.5 lakhs has already been borne by company. But for company, what is the additional cost? 45,000. Why? Because it's disallowed because of this section 40A5. Got it? Clear, guys? Yes. So, which one? They would have mentioned in the agreement. In the agreement, they'll mention. So they'll say that your package is 40 lakhs, which will include basic, DA, all that will be given, and then perquisites also they'll give the value. That value only you should take. So any tax on non-monetary perquisite is borne by the employer on behalf of the employee, which is exempt. So for this employee, it is exempt under which section? 1010 CC. For employee, exempt under 1010 CC. Tax borne by the employer shall not be taxable in the hands of the employee by virtue of 1010 CC. No, that is again, I mean, I have never seen any employee like that where the entire tax is borne by the company. There should be something extraordinary for that. But the thing is ultimately what will you pay then? Correct? So you need to pay the tax. As per the law, 1617, you have to pay the tax. Unless you have like a separate arrangement, which I have never seen anywhere that happening. So what they'll do is, they'll include the tax only and hike up your salary. So if your CTC, if you demand 20 lakhs after all taxes, then they'll make your salary only 30 lakhs. You only have to pay. You have to pay. It's like actually company only bearing it, but you are paying it. They'll increase the cost to company. But company will not take away the burden of paying tax. But anyway, they are deducting tax anyway, no, TDS. So you don't have to pay anything. So in that case, they'll gross up and they'll do it. You will be seeing, some guy will be earning 20 lakhs and suddenly he'll jump ship and he'll get 35 lakhs package. Yes. On the other hand, you'll see the reverse case also. Anybody getting 30 lakhs is just, demoted and gets 20 lakhs. That's all. Job market is very, dicey. It all depends on your skill set and how good you are as a person. So in the recent ICA, the placements, so one of my students got 16 lakh package. Fresher, good, no? So it's then whatever it's all about your skill set. That's why your number of attempts really don't matter. Please don't worry. It's your skill set. So one of my students who got who cleared in the 4th attempt, right? Last year I remember he got selected to EY or something. The generally partners and all will not interview at the lower level. This guy got interviewed by the partner because he was good. He impressed all the managers in the initial interview. Partner only called. So the test was very simple. They gave him the Companies Act and Income Tax Act apparently. And they said, tell me whatever you know about Income Tax Act. Use the Bare Act, no problem. Deadly. So that interview went on for almost 1.5 hours. And he was offered a package of some 2.5 lakhs per month. So 4th attempt pass. So what I'm saying is your number of attempts really don't matter. What matters is your knowledge, attitude and the skill set. Skills can anyway be developed. It's your attitude and also the knowledge part, ability to dissect the law, that is what matters. So he joined the tax division. But anyway, imagine a partner generally never interviews like that for so long. He was an exception. So what I'm trying to tell is nobody will ask you about your number of attempts, when you wrote, what you wrote, etc. Nothing. Ultimately, are you a CA or are you not a CA? Only in some companies, as I told you, like HUL and all those things, they require like first 50 rankers only. Rank holders only are allowed. Others are not allowed. That's only very rare. Otherwise, definitely they don't care about your marks. So you also should not care about your number of attempts, etc. if you have already done. That doesn't mean from now, sir, I will not care about number of attempts. I'll write again. Not like that. What I meant was, whatever, if you have already written before, forget about it. Whatever we are writing now is the first. So it really in the job market, it doesn't matter. To be very honest with you, it's all gone. Only few companies are looking at attempts now. It is no longer attempt, it is the quality. So whatever you are studying, study properly. That's what I am saying. So if you see, even in the 2 days, we could have finished some 4 topics, but we could not have covered in the same depth. So it's rather better to cover in depth and cover lesser, because anyway I'm asking you for 5 days extra, and eventually in 15 days cover almost 100-120 hours and finish the entire thing, rather than just doing it for the heck of it. So that is what I intend to do. That is what my intention was in this case. This is the first time I am taking a face-to-face in Chennai for tax. Law I was used to handle a lot, but tax for the first time. So that's why I am also asking you. And I knew that's why I asked you a simple question. What is your preparation level? If you guys had prepared fully, then it would have been like a full marathon. But you guys really, have not studied it this way. It's fine, no problem. So we'll do it like this, and as I told you, just give me 100-120 hours, guys, your subject will be done. And this subject will also help you in IBS, for sure, 100%. So basically you are studying 1.5 subjects, because in IBS also, I'm not even joking, 60-70% of the entire IBS is law and direct taxes and auditing. You can check the paper, you will only understand. I'm not even joking. 50-60% is company law, economic law, direct taxation, little bit of auditing, that's it. Remaining 30 only is FM, the AFM, then FR and IDT. So basically, if you follow these things properly, and law also if you study properly, then you are good to go. Yes, right. Now guys, I'll digress slightly and take you to another area in international taxation. So please open the other material and come to 12.1, equalization levy. Mark this as very important, because Nirmala aunty in Finance Act 24 has removed equalization levy. So last time ever which you can get is November 24 exam, that's all, right? So yeah, for you it's a waste, yeah. But anyway, you should know what has happened. So those who are writing in May 25 and all, don't even bother studying this. But it's actually a very good provision. Yeah. Yeah, Meenakshi, this material should be sufficient for IBS also, no problem. And Tarun sir's material is sufficient for IBS for ID portion. But we also have a combined material for IBS, and also we have classes as well, where we have discussed in this room only we did it, I remember, like a thorough discussion of each case study. Each case study goes on for almost 3 hours. All angles we have discussed, not just the questions they have given, but also other possible questions that they can ask. So we have recorded some 20-25 case studies, and more we are doing now for May exam. So you can pick that up if you want. And we have also given a video where we have told if you want to do self-study, how to study. If you want to do through our lectures, how to study. It's your wish. So whichever you are comfortable with, no problem. Right. So we are the only group in India to have released classes for IBS. The moment they released only the paper, we released the classes. So first time in India, nobody till now nobody has done. I'm shocked, surprising. So that only shows that if you really have the ability to connect all the laws, you can easily do this. It's a wonderful, for me, the best subject in CA final is IBS. Everything is covered in that. Excellent. For me also, I learned a lot talking to Tarun sir and Chinmay sir. Anyway, so equalization levy, guys, is completely deleted by Nirmala madam. Many aspects of it is deleted. So last time ever they can ask in November 24 exam. So what do you mean by equalization levy? Let's discuss that. So what used to happen was many, like for example, you buy, is Facebook, does it have a office in India? No. So you are, and Facebook has a lot of ads. Now I am a company which wants Facebook ads. I will pay Facebook USA 1 crore rupees to show my ads of my company whenever anybody opens Facebook. The real thing in life now is data. The moment you speak something, you would have seen that, I'm sure of it, you would have said in your home, in your text, you will say, your mom will say, buy 1 kg tomato and come. And you'll open some random app, big basket tomato will come there. Correct? So, or you would have spoken something about something, the phone hears it for sure. That's data, very simple. The phone hears it because you would have given access to the microphone. And the moment next time when you open, you will have that. In a way, it's good because you don't have to put any effort. So you open Instagram, whatever you discussed in WhatsApp will be there on Instagram, right? And you open everything they have bought. No, Mark Zuckerberg has bought everything anyway. So that's what it is. And now even this guy has invested, and they have allowed, Jio has invested, and Jio has allowed Facebook also to invest in this company for all this reason only. Data is king. Customer is not king. Data is king. So if you see, now the question for the government was, in all countries, let's take India, I pay 1 crore to Facebook. And the thing is, Facebook is not paying any taxes. They'll say, we don't have a PE in India. We don't have a permanent establishment in India. So hence it is not deemed to occur or arise in India. We don't have an agent in India also. Everything is done online. We don't have any online presence in India. In the sense, physical presence is not there. Online presence may be there. So what tax? I will not pay any tax. USA fellows wanted to tax Facebook for getting money from outside India, but some of their entities where their online products are, they are registered in the Cayman Islands, Seychelles, Switzerland. These are all tax havens. Basically, lot of money was getting leaked like this without paying any taxes. So all countries came together and said, now we need to charge tax. So I cannot change my act to bring the tax. I cannot create TDS, etc. But I can levy a certain fee to equalize, because everyone should ensure that equal opportunity is there, and nobody should be in a scenario where they feel that they are just making money without paying taxes in that country. Hence, a bunch of countries came together and they said, let us levy a certain fee, and that is called as equalization levy. So they are saying that once, let's say your 1 crore advertisement I am doing. So when I am paying you 1 crore, they are saying pay 6% tax, pay 2% tax. Should I deduct 6% from 1 crore and then pay? That's up to you. That's a deal between you and Facebook. You either pay 1 crore minus 6%, or you pay like GST, 1 crore plus 6%. Either way, I want 6%. How you pay, it's up to you. Facebook, do you really think they will care 1 crore minus 6% if you do? No. Facebook will say, boss, you do whatever you want, bro. I want 1 crore. So what is the additional cost for an Indian company taking advertisement from Facebook? That is extra 6% or 2% as the case may be. So this equalization levy initially was introduced in 2016 and then one more round was introduced in 2020. And after 8 years and after 4 years respectively, in 2024 they said it is no longer, one line she has finished it off. Equalization levy is no longer needed, over, that's it. Which means last time ever, November 24, right? So what is equalization levy? See, there is one is this one I told you. Equalization levy is not proposed as a tax on income. It would be imposed outside the Income Tax Act. Income is 1 crore. I am adding on that. You either make the, what do you say, income some 90,000 and pay tax 66% on it, or if it is 90 lakhs, sorry, or if it is 1 crore only, no problem, make it 1 crore, but add 6% on it, which means it's an additional cost burden for the company. Facebook will never pay. Why will they pay? So it's a levy because of the income leakage that was happening. So equalization levy means the tax leviable on consideration received or receivable for any specified e-commerce supply of services under the provisions of this chapter. This chapter extends to all of India except J&K during that time now, 2016 I am writing. Consideration received or receivable for specified services and e-commerce supply shall not include consideration in the nature of royalty or FTS. Why? Because for that there is already separate sections. This is for other things. So what will it cover? Let's write down, guys. Equalization levy, what all does it cover? Just a sec. So 2 legs, equalization levy, November 24. So one is the category 1, I would say, that is section 165 of 2016. One more was in 2020. So let's discuss this first, 165 of 2016. So let's say you are in Canada, you are a company in Canada, which means what? Obviously you are a non-resident. You are a company in Canada, which means you are a non-resident, and you have no permanent establishment in India. You have no permanent establishment in India. You have no permanent establishment in India. Let's say, for example, Facebook or whatever it is. Now, you, let's say Facebook, Amazon, whatever, you are thing in Canada. Now, what do? You provide specified services. Let's say online advertisement, for example, for a company. Company is in India, let's say Reliance. Is Reliance a resident? Yes. Is Reliance using the services for PGBP? Yes. Or it could be a non-resident also. For example, it can be Tesla. Does Tesla have a permanent establishment in India? Yes. In Bangalore, they have an office now. In Bangalore, they have an office. He wanted to open Hyperloop in India, where Bangalore to Chennai would be 22 minutes. Correct? But he got stuck in Bangalore airport, that's why he went away, right? That's what, right? So that is what happened. Yes, so resident PGBP, then he went shelved, project is shelved, it's no longer is coming back. So non-resident Tesla, that too in Bangalore he has opened, it's the best part. Non-resident, for example, Tesla, does it have a permanent establishment in India? Yes. So it can be either at Reliance, for example, or the specified service. Now, I am making payment. to this Canadian company, Facebook, Amazon, whatever, payment is more than 1 lakh rupees. For less than 1 lakh, it will not come. More than 1 lakh rupees in a financial year. Very simple. This is the structure. More than 1 lakh in a financial year. Reliance is paying the Canadian company. So, equalization levy is charged at 6%. And it is charged only if it is for the payment of business or profession. If you are using it for personal purposes, no equalization levy. It is only for business or profession. So, it is the duty of this company, that is, in my example, Reliance or Tesla, liable to pay equalization levy at the rate of 6%. You have to deduct and you have to pay. So, deduct means 1 crore 6% and then pay the rest. But Facebook will not agree to this. So, that is why what is it? 1 lakh plus 6%. So, I will gross it up. I will show the entire thing as 1 crore 6 lakhs or 1 crore 7 lakhs and then gross up 6 by 106. Like we gross up GST, 18 by 118. Like that, they will gross up and show. So, you should show the gross amount minus equalization levy, then final amount paid. You have to do. So, there can be two scenarios just like TDS. There can be two scenarios just like TDS. What is that? One is failure to deduct or deducted but failure to remit. So, if you fail to deduct, no interest. No interest is charged, but the penalty, additional penalty equals to the equalization levy, deadly. Whatever you have to deduct, anyway 6%, plus again penalty how much? 6%. If you deduct but fail to pay, deducted, no problem, fail to pay 1% per month interest and 1000 rupees per day or equalization levy, whichever is less. No interest, penalty is equalization levy, 1% per month, 1000 rupees per day or equalization levy. Same thing is there now. Done guys, this is simple. So yes, this is how it is calculated. Now you check it. Here you see in the notes everything is given, don't worry. Equalization levy charged at 6%. Person resident in India and carrying on business or non-resident having P in India, right? Non-applicability is what? The non-resident providing specified service if already has a P in India, then obviously no. I have clearly told you here, Canada, non-resident, no permanent establishment. If you already have a permanent establishment, you will be paying normal income tax here, no? And then there also you will pay DTA will come, double tax avoidance agreement. So, this will not apply to people who have permanent establishment in India. That is very clear. Aggregate amount does not exceed 1 lakh, then it will not apply. Which means when will it apply? More than 1 lakh. If the PE in India is not for carrying out business or profession, it's a charitable PE thing, Melinda and Bill Gates Foundation, branch office in Bangalore, then obviously it's not for business or profession. So any amount, no problem. Specified service means what? Online advertisement and digital advertisement space is what they say. 6% they have to do. Now you see the link to 40A1B. Any consideration paid or payable to, that's why we are doing this now. Any consideration paid or payable to a non-resident for a specified service on which equalization levy is deductible and such levy has not been deducted or after deduction has not been paid when, on or before the due date, shall be disallowed while computing the income. And if it is actually paid, then it will be allowed, right? So, yes, Finance Act. It cannot be inserted in the, yes, Finance Act. Failure to deduct and all we have seen. One thing here, let's come to this question, guys. Page number 13. Or 13, 12. We'll do this sum later, but anyway, 12. Oh, it's not in 12. Sorry, 14, my bad, 14. See, I use check. I. In order to expand its overseas business, the company planned online advertisement campaign for which it engaged Fastech Incorporated, a Malaysian company not having any PE in India, and paid 5 lakhs for services availed. No tax or TDS was deducted by the company. That's all they'll give. They'll never give anything about equalization levy. Right? So what should we answer? How much is disallowed? How much is disallowed? Entire 5 lakh. Because you should have deducted how much? 6% equalization levy. Clear? So let's answer also. Which one? On the 6%. So if you see here, check this. Here, sorry. Since the payment for online advertisement, I am reading page 15. Since the payment for online advertisement services is made to a non-resident not having a permanent establishment in India, equalization levy at 6% has to be deducted. Since the same has not been deducted, 100% disallowance under 40A1. Correct. No, if they have not deducted only, then penalty again they will levy. The government will levy the penalty. They will during the when you have not filed, they will have to, like auditor has to raise that query in the tax audit report. Right? And government will come to know because you have utilized the services. So, and that's why the auditor is of most importance now, because there is an entire paragraph on equalization levy in tax audit. So, you need to do that. You need to raise the thing. This has not been done. That is what it is. And whenever any assessment happens, see nowadays the government has all the data. Like one of my seniors in articleship is working in Infosys. He worked almost 15 years in the Central Processing Center, which is now the NAFAC, that is National your Faceless Assessment Center. So he was telling me, you tell me your number, I will tell you in which mall you have how many points. I was shocked. So they know everything, because everything now is OTP based, everything is number based. You give your number in everywhere, you give your number. Think about it. You go to McDonald's, you'll give your number. He told, I have that data also. Which day you ate, what I know. So it is shocking. He said, government is not using this data. If they use, you will die. So we are not using that data. And in fact, you may have done a lot of golmaal activities. We are not considering only lower level items. We are only considering threshold 2 crore, 5 crore like that. The moment if I come down to that, you are gone. So apparently they have in which mall, which company, in pantaloons, how many points I have, they'll know. Then they will track that. They are also tracking Instagram and Facebook to see your posts. And then you are putting some 5 foreign countries, and then they'll see your income, 3 lakhs you have declared. Correct? They are actually checking all that. I'm not joking. They have staggering information. So they will obviously come to know if you have taken any service, because all the data, because your money is going outside India. RBI is involved. FEMA regulations are involved. You will have to give your details. So they will easily come to know, boss, you have utilized the services, you have not. The moment $1 has to go outside India, everything you will have to declare. So they will have the data. So the moment they'll send you a notice, simple. Scrutiny assessment, they'll send and they'll say, tell me why you should not be, or if you have not filed anything, then they'll send you best judgment assessment, 144. An assessment procedure, we'll see that, full procedure. So, and assessment procedure also, they have changed a lot in Finance Act 24, which means that is also a very important area for November 20. That's why that also I want to do very much in depth, because search seizure procedure fully changed. But you don't have to worry, because for some period the old provisions come, other period new provisions come. So whatever we will do is very much relevant for May 25 also. But what I am saying is that, and second part of the series is fully changed, which means the old procedure last time ever it can come in November 24. May 25, November 25, I have to study two procedures, they will die. 2 procedures they have to study. 2 completely different procedures. But for you, the same procedure will apply. We will see that, no problem. So what I am saying is, yes, there have been staggering changes in the way things are being conducted. Anyway, so that's how it, guys, that's what it is. Sorry? No, we discussed, no? If next year if you pay, it's allowed. It's here, see, come to the notes. Here you see, 12.2, here you see, no permanent. No permanent disallowance. 1 second, guys. I need to call that guy. I think the battery is gone. Okay, guys. Yeah. So, ultimate online people are able to see. Okay. So, cool. So, this is what it is. It is paid in the subsequent year, then subsequent year it is given. That is one part of the story. Now, the second one which came in once this you leave. Yeah, snippet of equalization levy I have given here, you see. Ghetto Incorporated, marketing and PR agency, US based, provides online advertisement services to Urban Ladder. Urban Ladder is in the manufacturing and sale of furniture in India. Consideration to be paid is 10 lakhs. So, Ghetto Incorporated has no permanent establishment in India. So, Ghetto Incorporated is providing service to Urban Ladder, and Urban Ladder is paying basically 6%, 60,000 equalization levy you have to do, 10 lakhs minus 6%, they'll do 9.4 lakhs. But then if Ghetto does not agree to that, then they have to pay 10 lakhs plus 6%. Or they have to do some grossing up and arrive at an arrangement. No foreign company will allow you to deduct tax because they will not get any credit as such. So, non-deduction of equalization levy would attract disallowance under 40A1B. So, Ghetto Incorporated has a PE in India, second case. and services is connected to the PE, then no equalization levy. Why? Because Gateway Incorporated will pay tax in India anyway through the agent, through the PE. So that's how we should look at it. Very simple. That is a good question. That we will discuss later. It will get confusing. You can ask me later why they have removed. It's a hidden agenda by the some people. They have removed it. Right? Yes. Now, new levy is what? During the break, you asked me that. New levy is Finance Act 2020. This is 165A introduced in the Finance Act 2020. These are not introduced in Income Tax Act, introduced in Finance Act, right? Charging the equalization levy for what? That is on e-commerce supply or services. There was a huge boom in e-commerce during COVID. Everyone was sitting at home and ordering because that was considered to be essential service. So, a lot of things came from abroad as well. So, that's why they introduced it immediately. So, if you see here, it talks about the e-commerce operator. So, in 2020, two things were covered. Like Amazon, for example, rate was reduced to 2%. E-commerce operator is to pay equalization levy to the central government. Conditions you see, interesting conditions. Non-resident should not have PE in India, Facebook for example. The service is not covered under 165 of the Finance Act 2016. And the total sales or turnover or gross receipts of the non-resident e-commerce operator should be 2 crore or more during the previous year. This is slightly different. Directly if I buy from the e-commerce operator, we already saw which one? 165, the old one, 2016 one. This is slightly different. What is this? We'll write down. So, in 2020, this is specified transaction 1. Two transactions were covered. Specified transaction 1. So, let us say e-commerce operator. Let us say Amazon. Does it have turnover of 2 crore or more? Yes, it should have. First of all, should not have PE in India. Assume no PE in India. I'll write Facebook only. Does Amazon have PE in India? Yes. So, Amazon is a bad example. Facebook. Right? No PE in India. And the turnover is what? Or gross receipts 2 crore or more. Crore in during the previous year. Right. Now, this e-commerce operator the target customer is Indian. So, this e-commerce operator, Facebook, enters into a contract with Apple Incorporated. This is for advertisement service. Is this covered in 165 of Finance Act 2016? No. Why? Because that was direct advertisement, right? Here it is between two other companies. But who's the target customer? India. Correct? So, here they will say you market the phone, you put it on the thing, heavy duty marketing, and for which Apple is paying some money, and online marketing services. So, money is being paid by Apple to Facebook. But who is the target customer? India. So, they say specifically I want the data because you have lot of sales there, etc. whatever. I want the data there and please do heavy duty marketing there. Now, this is it covered? The money that Facebook receives Are they liable for equalization levy? Yes. Should they pay equalization levy? 100% yes. You see now, a person resident in India, amount of equalization should be levied on the amount of consideration received or receivable by a non-resident e-commerce operator from e-commerce supply of services provided to person resident in India. A person who buys such goods or services using internet protocol address located in India. A non-resident from sale of advertisement which targets a customer resident in India. A person who accesses the advertisement through internet protocol address located in India. So, if you see, same here example is given, you see, Amazon USA, e-commerce operator, 5 crore own goods, 3 crore sold by others, 2 crore sold by resident in India or PE of non-resident in India, whatever the case may be. Overall, it sells goods worth 10 crore consideration to ABC Limited, who is resident in India. Now, this 2 crore is not part of the consideration because it's sold to a resident or PE of non-resident in India. But own goods sold or sold by others, they have sold it to ABC Limited. 10 crore is the consideration. Equalization levy of 2% will be charged. Or on the other hand, this also is a better example where if you see, I am selling the data here, right? I am selling the data and ultimately I have Apple has a separate contract with Facebook to exclusively target Indian customers. This transaction is happening outside India, but who is the customer? India. Is this covered under 165 of Finance Act 2016? No, that is direct. Hence, this equalization levy is at 2%. This equalization levy is at 2%. So, should not get confused with the previous one. Previous one, what did we read? You see, directly, Canadian fellow, specified service online, resident PGBP or non-resident Tesla, directly is buying. Resident is buying. Here, it is two non-residents doing this outside India. But who is the target customer? India. It is definitely not a service covered under previous one. Hence, this is 2%. So, which is 6, which is 2, we have to do this. Circumstance number 1. Circumstance number 2 is what? We will see. Specified transaction 2. So, same Facebook. No PE in India plus non-resident. And there is a company in India which is a data selling company. They have huge data. Let's say they have hacked into the Aadhaar database. They have huge, crazy data. You would have seen so many leaks that have happened, right? All the Aadhaar data. You would have seen in the news, Aadhaar data leaked. These companies have it. It's all about data at the end of the day. So, this data selling company sells it to Facebook. Very simple. And then this one is now selling to Apple. Apple is paying money. Ultimately, I am purchasing the data from an Indian company. The previous circumstance was what? The target customer is India. Here, I am buying only the data from Indian company. So, here also guys, Apple, when they are making payment to Facebook, ultimately why is Apple buying India database? They want to target directly. It's all about database. When they procure the database like that, Apple equalization levy at 2%. Correct? They have to pay equalization levy at 2% because here in 2020 they changed the dynamics. In 2020 they are trying to tell it is not about selling to a resident in India. The deal is happening outside India only, but who is the target customer? India. Or where is the source of the transaction? Ultimately, what's the source here? Data. Where are you collecting it from? India. So, 2%. deadly. Correct. Whatever amount they have paid. You may purchase from the Indian company, that's not the problem, but here, equalization levy is on this. See, if Indian company is selling data, won't they pay income tax? So, I am not worried about that. But the thing is, you are selling where? Outside. And through that, you are making business in India. I am not, and you are not paying any tax in India. So, for that, equalization levy. Indian doesn't pay means? In the old one. Here. Correct. Correct. That's what. This is the levy is now they are liable to pay. Generally, if you don't have a permanent establishment in India, are you liable to pay? No. But now they are telling you are liable to pay. That's why, now that you asked me this question, all these things are very difficult to implement. That's why she removed it. Simple. So now that we've spoken about it, yes, it's very difficult. Very theoretically, I can tell all this. How will you implement? Facebook, you will go and tell boss you did all this. He said, no, I didn't do it. Prove it to me. You don't have any base in India, no online presence is crazy, but how will I prove it? So it was very theoretically very realistic, but it was actually not realistic. So there was no point. So the thing is, and here these things also, ultimately it is about business. Do you really think the government is run by politicians or it's by businessmen? Businessmen. They said, boss, don't do all these things. We will be doing many such things like that. Make it simple. Simplification, they removed. And even in Finance Act 24, as I told you, so many of the assessment procedure things have changed. That's why it's very important which we do assessment procedure properly now for November 24, because at least some of the years you can actually still claim search data, etc. But in the new law, it is shocking. It is purely pro businessman. Anything which is few years ago, that search case you cannot even reopen now in the new law. But that's why we need to study the November 24 law only to see what all can be reopened. Okay, I will not tell what the changes are. I am not here to confuse you. But just remember that 2024 is pro-capitalist, pro-businessman. Middle class, jump to lower class. Correct? That's all. So that is what it is. Ultimately, that is what it is. Yeah. So it's very idealistic to tell. That's why they removed. Now that you asked me this question in the flow, I'll tell you the answer. Yes. I was coming to that. That time when you asked the question, we hadn't done this. That's why I said I'll tell you later. But now, since you already asked this, that's the reason. It's not possible to maintain. How can I go and tell them you to? I said I never did it. Right? So prove it to me. But where will you go? Will you put a case against them? Where? Will they come here? No. Then I have to go to the International Court of Justice and all that. Where will I do for 2%? So they said leave it. Right? Yes. So, but 2% on crores is a lot of money. But their government is like, okay, leave it, man. Otherwise, actually think about it, nobody will come to India. Nobody will deal in India. Then they'll do much more things which are hidden. So, the entire concept only removed. Which one? And that's what? Very difficult, man. Idealistically, I can tell, this should be there, that should be there. How will you do it? Very difficult. So, it's only in theory. ICI will be licking their lips. This I can give to the students. For ICI, it will be good. Yeah, that's all. ICA best. It's only for ICA they have made it. That's all. So this attempt they'll give and you'll close it. That's all. So that is why we are doing this. Right. So yeah. Then apart from that, not just this only, you see one more is given here. Here you see. There are too many things. One is that too, then here one more is there. Services provided to person resident in India. This is also there which people did not like. Person resident in India. Person who buys such goods or services using internet protocol address located in India. Which means a person need not be resident. Means if you are a Canadian tourist who has come to India, he is buying something from Facebook USA. He has all those gadgets which in India you won't get that. So he is actually staying here for like 2 months. So he purchased something from, Alibaba, China. It will come in 15-20 days. Alibaba has no permanent establishment in India. So Jack Ma is the owner of Alibaba. So it comes from China, you can order. So he has some friends in customs also who will clear it, no problem. So when he is ordering now 10 lakh worth of products from China, which does not have a permanent establishment in India, so for that also, do you have to pay equalization levy? Answer is yes. You see, person who buys such goods using internet protocol address located in India, sitting in Chennai, he is ordering 10 lakh rupees worth of goods from Alibaba, all his photography equipment and all those things, because he's there in India for like 3-4 months. 10 lakh worth of goods is coming. Should he pay equalization levy? Yes. How will you track all these guys? That's why they removed. That's also there, but see, a person who buys such goods using internet protocol address in India, very difficult. And online advertisement now, see, person resident in India is also there. Person resident in India is also there. But it says it should not cover what is there in the previous one. Correct, no? This person resident in India, which means person resident in India is paying to Facebook, like exactly in 2016. But this section says it will not apply to whatever is there in 2016. So how to look at it? How to look at it? So they gave a clarification. As far as online advertisement is concerned, if the payment is more than 1 lakh, then 2016 equalization levy 6%. If the payment is less than or equal to 1 lakh, 2020 equalization levy 2%. Because the service defined in 2016 was online advertisement more than 1 lakh. And what is the rule in 2020? It should not cover a service mentioned in 2016. So what is that service? Less than 1 lakh. It's so annoying, but it is like that. So equalization levy contains, in 2020, contains 4 things. One is this one. This is person resident in India only. Person resident in India, this is one thing. Second is what? Facebook and Apple, buying data. That is one thing. Third one is Apple is telling Facebook to target all the marketing campaign in India. Right? And fourth one is what? Chennai fellow, Canadian tourist in Chennai ordering from Alibaba. 5 lakh, 6 lakh goods. So everything was covered in 2020. Implementation was 0. But these 4 items were covered in 2020. So for those items, 2%. So in the question, you need to see what it is. And then see whether it is 2% or 6%. So in this question, which you saw, planned online advertisement campaign and paid 5 lakhs. So 5 lakhs, what will come? 6%. If it was 50,000, 2%. Got it? That's what you should see. But if data selling or other things is more than 1 lakh also, it is 2%. I hope you know that. This 1 lakh is only for resident in India. If Facebook is entering into a contract with Apple to target customers in India for more than 1 lakh, it is still 2%. I hope you understand, right? Similarly, if Facebook and Apple are entering into a contract for purchasing data from India and they are reselling it to each other, whatever it is, and that is also more than 1 lakh, it is still 2%. This 1 lakh less than 1 lakh is only for resident in India concept, right? That's about it. Other things, it's fine, but this is what it is. Ultimately, all these things will, this is only they'll ask in the exam as adjustments, nothing much. So yeah, so that was one more section, 40A. That's why we did that. It's a link to that. That's why. Now comes other expenses. Expenses or payments which are not deductible. Coming back to our module 1, 40 capital A. 40 capital A. Excessive or unreasonable expenditure. Excessive or unreasonable expenditure. One second. Forty-three B is also there. Still, we have to do that. Right. So 40A2, which is talking about unreasonable expenditure, especially with related parties. So it speaks about, if you see, if the SSE incurs any expenditure towards goods supplied, services rendered, or facilities provided by specified persons, the assessing officer can disallow such expenditure to the extent it is excessive or unreasonable. So this is the onus or the entire burden, whatever is on the assessing officer. He can decide what to do. He can disallow such expenditure to the extent it is excessive or to the extent it is unreasonable. So as far as an individual is concerned, any relative of the SSE will be the related party. Now coming to the discussion, who is a relative? So Companies Act is very simple. It only speaks about brother, sister, and one relationship, one generation up, one generation down, and the spouse. That's it. Companies Act I should not go. I should go to the Income Tax Act. The Income Tax Act says lineal ascendant or descendant. So you can go any generations up, any generations down. Everybody is covered in the Income Tax Act. So for individual, it is a relative. For HUF, it says members or relative. For partnership firm or LLP, it says partner and their relatives. AOP, BOI, it says member and their relatives. Company, they say director and their relatives. Everybody is covered. And they also give a definition of specified person. Who is a specified person? Can either be a relative or anyone who has substantial interest, as simple as that. Who is a person who has substantial interest? Who has minimum 20% voting power. So if you have substantial interest in an entity, then it is covered. So if you see this particular chart here, all these people are covered. So SSE is a sole proprietor of a dry cleaning business. Relative of that SSE is a specified person. Any individual along with the relative of such individual is having a substantial interest, 20% share in this business, then these two people are also specified people. Any company, firm, AOP, BOI which has a substantial interest, which means what? 20% in this particular business, they are also specified people. Or including their director, member, partner, any of these company or along with their people holding substantial interest, or even their relatives are also covered. Apart from that, any company, firm, AOP, BOI, HUF, even if few members of them, like for example Abhishek and Ritik, they have substantial interest, and other two relatives do not have substantial interest, that's okay. But if few people in the company, firm, AOP also, if they have substantial interest, gone. That entire relationship is called specified person, for which I need to see excessive payments. So excessive payments means whatever is according to the market you are not getting. So if an accountant is getting 30,000, 40,000, 50,000, relative is appointed in the company, is being paid 3 lakh rupees per month. So that extra 2.5 lakhs is excessive. The burden of proof is on the assessing officer to prove it. He will disallow and he will say, boss, I feel it is excessive, this is the reason why. So whenever you give any notice, all this will happen in assessment procedure. So whenever you give any notice, etc., especially the best judgment assessment under 144, it should be a speaking order. What do you mean by speaking order? It means it should clearly give the reasons why you are passing the order. Logic should be given. That's why it is called as a speaking order. So all that should be taken into account. That's what it is. The extent to which the expenditure excessive or unreasonable shall be determined having nature to the fair market value of the goods. Disallowance is not automatic, shall come into play only if the AO is of the opinion that expenditure is unreasonable. This is regarding 48.2, unreasonable payments, very simple. Next, payment made otherwise than by way of certain specified modes. This is what 40A3. We have already seen the similar provisions in actual cost, correct? Actual cost. In actual cost, if you are paying any asset and you are paying more than 10,000 rupees in cash, then that portion will be reduced from the actual cost. That was for capital expenditure. Revenue expenditure, that expense will be disallowed. Simple. That expense will be disallowed. So 40A3, I am paying 6 lakh and I am paying what? 10,000 rupees into 60 days. Can I pay 10,000 to 60? Yes. So is there any disallowance as such? No. But one thing we need to know, receiver is receiving 6 lakh rupees. For the receiver, is there any penalty? See, I am paying 10,000 rupees per day. So these are all CA final related stuff little bit. I am paying 10,000 rupees per day. Is there any disallowance for me? No. But you are ending up receiving 6 lakh. Yes, more than 2 lakh if you receive in cash for a particular transaction, there is a 100% penalty under 269 ST of the Act. So 40A3 should always be read with 269 ST. 40A3 is for the payer, 269 ST is for the receiver. So in the MCQ, if they anywhere link to 269 ST, where they say receiver has to pay 100% penalty, you can choose that option. Payment other than account pay check, account pay bank draft, ECS. Other payment means NEFT, IMPS, RTGS, UPI, all these things made to a person single day more than 10,000. The same as actual cost. We have already discussed this. So company makes payment 15,000 cash to a person, 48 disallowance. I am making cash payment 10,000, 10,000, 10,000, 10,000 and suddenly on 14th I make 1,70,000, only that part is disallowed. What about this? Expenses account debtor 20,000 to expenses payable 20,000. I have made this in Finance Act, in Financial Year 22-23, correct? And then it is allowed in 22-23 itself because it's an expense. Expenses payable account 20,000 to cash 20,000. 23-24 disallowed. Why? 48-3A. 48-3A. Because you are making, people used to tell, I did not make an expense payment. Expense was, incurred, but the payment was made next year. So since it was allowed in the previous year, this year it will be income. Instead of saying disallowance, it will be income. A new section was added, 48-3A. So in any sort of thing, you cannot do anything like that. What if I make advance payment? Advance account debtor 40,000 to cash 40,000. Tomorrow I will say purchase account, expense account 40,000 to advance. These are all MCQ questions. Payment was made before incurring expense. Will disallowance come? Yes. I will make advance first, advance to cash. Is it an expense? No. Then I will adjust the expense towards the advance. Disallowed. Right? So, yes, at the time of adjusting. Because initially, what does the section say? It only talks about payment for an expense. Advance to cash, it is an expense? No. But when at the time of adjusting later, I come to know you are actually made cash payment already. So at the time of adjustment, disallowed. No problem, because you are doing it 5 different bills, it's for different transactions. Then it is not disallowed. So the crux of the matter is this only. To a person, which means one bill, in a single day, more than 10,000. If I am splitting that into different bills, different persons, different days, no problem. Or different bills, same person, different days, no problem. Right? So still you can play around, but law cannot provide for all circumstances. Some circumstances they will give you. Beyond that, you can still play around. Like for example, if I do to a single person, but 3 different transactions, what do you think? Allowed or disallowed? Just asking. Same person, same day, but 3 different transactions, in the sense 3 different bills. Disallowed or not disallowed? So that there is a case law where they said it is not disallowed because I am providing 3 different services. That's what I am saying. It's weird. Ideally, it is disallowed only. But in one case, they said it is not disallowed. Why? Because he was providing 3 different services. I provided a service of catering, 12,000. 8,000. I provided a service of arranging chairs and also giving the shamiana and floral decoration, separate, 8,000. I also provided, priest services, 6,000 rupees. So I am one guy, but I have multiple businesses. And in each of these businesses, I have granted you 8,000, 8,000, 8,000. So overall, you have paid me 40,000 a day, but in different bills. What do you think? In Bangalore, this happens, that there will be this organizer who will do everything, but he will have different businesses, different firms, different businesses altogether. But payment is made to the same guy, and they all operate in cash only, no bank, only cash. So they will not even take the other thing, only cash dealing. So what do you think? Is it disallowed? It went to court, one of those cases, they said no. Because here payment to made to a person for the specified service is what they intended. The same guy providing multiple services, he will charge different bills. So, yeah. Same firm, 100% disallowed. But what he did was different, businesses. But it was actually the same person. Yes, like I can have different businesses, no? I can have different businesses. I'm a sole proprietor, I can have multiple businesses, different PANs. But then AO said, boss, it's the same person. So there are cases like that also. That level and all, they'll not ask. In the exam, just say if it is more than whatever 10,000 rupees to a single person, then I'm just telling little bit practically, different PANs if it is there, actually it is not disallowed because it is multiple PANs. It is not the same person. Person means what? PAN, it's linked to the PAN. Got it? Yes. So anyway, let's stick to the exam. Examination, they will not give. They have not asked till now except once. In all these attempts, once they have asked like that. So then that case law had come that time, that is why it is. Okay. Anyway, moving on. This is done. There are certain exceptions to 40A3 though. What are the exceptions? First one, for goods carriages, 35,000 per person per day is allowed. Goods carriage, 35,000 per person per day. So it's not 10,000, it can go up to 35,000, no problem. Because ultimately they'll not have access to bank account, etc. during that time. Now everything is easy because of UPI, but anyway, it's still remaining. If you have, you can pay 35,000 cash, no issues. So in the Contract Act, they would have mentioned that you need to pay me 40,000. Mode of payment is cash only. He has paid through bank account. Clearly contract mentioned cash only, but I paid through bank account. So, but there's a violation of contract. Violation of contract. So will 40A3 apply or will violation of contract? Can you pay cash? What do you think? Can you pay cash? Or if you don't pay cash also, it's okay. See, point number F. Page number 60 in my book, point number F. If any person makes payment by of any mode specified as to comply with the provisions of section 40A3, no person can file a suit or plea that the payment was not made in cash or any other manner in violation of any contract. The contract said 30,000 to be paid in cash only. Me, to avoid 40A3, I have paid through bank account. Can the other person sue me? No. Which means to say 40A3, that is 40A4, overrides Contract Act. 40A4 overrides Contract Act. So suit cannot be imposed. MCQ, they can ask anything, they can ask, guys. So I paid, they have told cash, I have paid bank. He can sue. Can he sue? No, he cannot sue at all. Because 40A4 overrides Contract Act. Invoice is 15,000 rupees. I have paid 9,000. Is it disallowed? 9,000 one day, 6,000 next day. But invoice is 15,000. Is it invoice based or payment based? Payment. Just clarifying. So I'm just saying it's always payment based, not invoice based. Yes. So that is one. Then Rule 6DD gives exceptions where 40A3 is not applicable at all, which means what? You can pay more than 10,000, no problem. Payment made to government, RBI, SBI, LIC, agricultural society or any bank, no issues. Payment with respect to letter of credit, bill of exchange, no problem. If any payment is by way of any book adjustment or book entry, normal book entries, depreciation, etc. if you do and all that, if there is no cash payout anyway, even if it is there to settle the cash in something, you can do it, no problem. If I make a payment to an employee on gratuity, I pay 60,000 in cash, allowed, disallowed. Payment of gratuity expense to cash, I will put 60,000 rupees. That fellow is retiring today. He says, sir, I cannot take bank and all that, don't want, please give me cash. 60,000 rupees I'll pay cash. Allowed, disallowed? It is disallowed because what is allowed is only up to 50,000. Now that's all. Full 60 is disallowed. Same here also. If I am paying 20,000, it doesn't mean 10,000 is disallowed. Right? Yes. The entire payment, whatever I am making, will be disallowed. It's not like a basic exemption limit. That expense will be disallowed. At a place where banking facility is not available, I can pay any amount, no problem. There are still many places in India where banks are not available. So that time I can pay any cash, no issues. In MCQ, they asked a question. Banking facility was not available because of a strike that day or any holiday, banking holiday or strike, bankers union strike 1 week. So no banking facility available. I paid, allowed, disallowed. I paid 20,000 rupees. Allowed, disallowed. This is an interesting thing. There used to be one particular section which clearly said banking holiday etc. it is allowed, but that section has been deleted, right? Which means if you make any payment during strike, lockout, because of which you say banking facility is not available, that will be 100% disallowed. When I say banking facility not available, which means in that town, village, bank only is not there. That is the meaning of banking facility not available. There used to be another point actually which said where banking facility is not available due to strike, lockout, holiday, banking holiday, etc. That point is deleted 1 year ago, 1.5, 2 years ago. So in the old question papers, if you still have that dialogue, there they would have written not disallowed. Now 100% disallowed. Right? So what do you mean by banking facility not available? Bank is not there only in that particular town. Doesn't mean bank is closed. Right? Yes. Then if you are an employee of a ship and you are posted in a place other than the usual place and there is no bank account in that ship also, you don't have any bank account in that particular ship and you are staying for more than 15 days and TDS also has been deducted, then I can pay in cash. For example, your salary is 1 lakh rupees, TDS is let's say 20,000, 80,000 rupees I am paying to you, and unfortunately you are posted in a place other than the usual ship. You are in merchant navy, you have to always sail from Chennai to Kochi, but this time because of some emergency you are posted from Chennai to Sri Lanka, you are going. It's a different ship. In that ship your bank account also is not there. The ships have banks, by the way. So there your bank account is not there in that ship, they cannot deposit in your account. So in that case they can still pay you cash. Most of these provisions are kind of redundant now because of UPI. Actually, these were all there in 1960s, 70s. Then it would have made sense. But now you cannot use only these things. But still, if I pay, is it allowed or disallowed? Allowed. But I would deduct TDS and pay. And to the agent, I can pay cash, no problem. And when I go to, if I have to go abroad, I have to go to the authorized money changer, Western Union Money Transfer, and I'll get my money exchanged. So when he is making you the payment, he will obviously, you buy back the currency also. So I have gone abroad and come, some $1,000 is left. I am selling it to whom? Selling it back to authorized money changer. And I'll say, sir, I want cash. I don't want this thing. Anyway, everything is recorded. I don't have a problem. Instead of you putting in the bank, me withdrawing, I need cash now immediately. Please give me cash. So he gives you 40,000 rupees cash. Allowed or disallowed? Allowed. Reverse case, I will give 40,000 cash to you from the company and ask for dollars. That is, it's not an expense, buying of foreign currency. I am buying foreign currency. So I withdraw money from the bank, 40,000 cash, and I am paying cash to the authorized money changer to purchase foreign currency for the trip of my director. So if I am buying foreign currency, that's not an expense. he will not use it for when he goes abroad for other expenses. The director is going abroad, he says, I want $2,000. He'll tell the company, I want $2,000. So company will either pay him directly 2,000 into 85 rupees, or they will go and get the dollars for him. Isn't it an expense? Yes, it is. Correct, no? It's an expense. He would have spent that money. My question is, company now pays cash to the money changer. And they'll ask him, give me the dollars. When I'm paying cash to the money changer, allowed, disallowed? Disallowed. Very important to know, it is payment made by authorized money changer only, is not disallowed. Reverse case, I'll go abroad, finish everything, $1,000 is left. I'll go to the authorized money changer and say, bro, give me cash. He will give 85,000. Allowed or disallowed? Allowed. This is from the point of view of the authorized money changer. So in Western Union money transfer, for them it is allowed. If I am paying cash, disallowed. Anything received more than 269 ST will come for sure. Yes, everything. Except for, farmers. We'll see that later. Payment to producer. So here producer means what? Agricultural produce, forest, horticulture, poultry, fish or fish products, and all these things. So any payment made to producer, generally if you would have seen in Chennai also, now also when I am coming to class, I see in those baskets people are selling fish. So if you go to these, to the actual marina and all those things, they will sell a lot of fish. So there will be a head fisherman. He will collect fish from all these other fishermen, and in the heaps he will sell bulk, and then he will distribute to others. So you are making payment to him. So that payment that you are making, can you pay in cash? For example, Taj Hotel is there only. Leela Palace, Leela is there only. The Leela guys have a deal with the chief fisherman. They'll say, boss, I'll pay you every day this much. Give me the best fish. Today, special, every day there is a special, fish special, which is there in our hotel. People will eat. So I want the best fish. So give it to me. Sir, I want only cash. No problem. Can I pay cash? Yes, I can pay cash. Leela can pay cash to the producer. Agricultural produce, forest, horticulture, poultry, fish. So earlier it was only fish and fish products. So the other people who were selling squid, prawn, oyster, these fellows were like, what did we do? We also need. So they added everything there. So now fish will include everything. Correct? And actually fishermen are the producers. Head fisherman is not the producer, because he is selling on behalf of others. He will be an agent. So they added one more line. Producer includes head fisherman. Right? These are all the small changes. Anything they can ask in the exam. So fish products will include crab, octopus, prawn. Crab is not a fish actually, obviously, but they have included everything here. Any seafood basically. So Leela Palace can actually go and directly buy from the fisherman the best catch of the day and pay 40,000 rupees cash, no questions asked, is what they are trying to tell. All this we have done. So that all these things are there. I have bought land and I have paid 50,000 rupees cash, remaining in bank. And I want to show it. It's not black money. 50,000 cash I have paid. What do you think? Is there disallowance under 48.3? No. Why? Not an expense. Correct. 48.3 is only for expense. I am buying land. It's a capital expense. This is only revenue expense. That is what we need to understand. See here. So yesterday he asked one doubt with respect to that sugar cane and the 48.2. So similarly, I will say I am paying to my relative. I am paying to my relative excessively. His salary is 50,000 actually. but I want to pay him 2 lakh rupees. So I am paying him, what do you say, 50,000 in bank, 1,50,000 in cash. And I am showing it also. Expenditure I am putting it as 2 lakh rupees. Disallowance will be in 40A2 or A3. Same question. He also has the same. In sugarcane is also this. So both are there, which will apply. See this point number 2. If disallowance is attracted under 40A2, same shall not be considered again for the purpose of 40A3. Right? Account pay check, cross check already discussed. Right. So all these things done. Yeah. Then actual cost will come anyway. Actual cost we discussed already. Land, no tension. It will not come in 43.1 also. It will not come in 40A3 also. Machinery, it will not come in 40A3, but in actual cost you will subtract that amount. Yeah. Right. Cool guys. So you do need a break, short break. We'll take a break, after which we will do other things. We have 43B, we have 41.1, we did not do that, right? All that will do. And then we'll move on to audits, then 43B has MSME amendment, all those things. All right guys, so let's now come to the other areas. All this is done. (43B). Before that, we had one more 41.1. The amount recovered that we have seen, but 41.1 you have to see cessation of liability. Deemed profit, it is there in 67. Yours will be much before. Yeah. So this talks about allowance. Basically, if you have made an allowance or an expenditure or a deduction in 1 year and you get it back in some other year because of any reason, then this section will get attracted. It is called deemed profit. So it is taxable. So first one is called, that is, there are 3 things to it. First, any allowance or deduction. Any allowance or deduction. That is a loss or an expenditure or a trading liability, which is recovered. It's either called recovery or they say cessation or remission. Remission means accepting lesser fulfillment of the promise. 3 things are covered: any allowance or deduction. And what do you mean by allowance or deduction? It's either a loss or an expenditure or a trading liability. If it's a loss or expenditure, if you have recovered that loss or expenditure in the later years. Today I made an expense, purchase. Next year, purchase returns. I returned it, I didn't like it. So first year I debited it. Next year what should I do? Credit. They are under 41.1. Trading liability. So I had allowed certain things, that is expenses to the creditor, but eventually the thing is I did not make the payment because he waived it off, whatever it is. So actually I have spent, I have just put it in the payable, I have not actually paid it because next year he waived it off. So what will happen to that? It should be credited to P&L account under 41.1. So ultimately it talks about allowance, that is loss, expenditure or trading liability. and what is the receipt? It is either a recovery, so either it's in the form of cash, I am getting it back, or in the form of a benefit. What is the benefit? It would be I need not pay any cash now, that is remission of the liability. Its liability is lying in my balance sheet, but now I need not pay, hence it is called a benefit, right? So, recovery or cessation or remission. So, what is recovery? For example, expenses which is paid, part of the accounts and paid also, and ultimately tomorrow it is recovered, 2 lakhs is recovered. So, obviously what should I pay? And I have paid the tax of, let's say, 1.1 lakh. The 2 lakh is the accounts and 1.1 lakh I have paid tax. So, tomorrow if I have recovered 2 lakh rupees, in the sense that expense was the purchase returns, for example. So, what happens? Whatever tax I have paid or whatever expense I have debited will now be credited under 41(1), simple. Cessation or remission of trading liability is what? Cease and remit, two differences. Cessation, expenses account 2 lakh to payable 2 lakh. Tomorrow what will I do? The thing is that payable will be credited back to P&L because he says that I will not receive any money from you. It is fully waived. It no longer, basically it ceases to exist. It means it no longer is existing. So, payable to P&L account, I will reverse the entry. So, at the time of reversal in 2022, it will come to me under 41(1). On the other hand, remission is what? Accepting lesser fulfillment of the promise. So, I am supposed to pay 2 lakhs. He may say, don't pay 2 lakhs, pay just 1.5 lakhs. So, what is the amount remitted? 50,000. So, what will be credited to my P&L account? 50,000. Because I have debited 2 lakhs. Today, I am supposed to pay only 1.5 lakhs. Remaining 50,000 is credit. That's called remission, cessation and remission. Now, adjustments in the exam. Adjustments in the exam. In CA final exam, adjustments. First, they will give you time barred debt by law of limitation. Time barred debt means what, guys? Any debt between me and you, if I have not even claimed anything for 3 years, then it is barred by the law of limitation. I am not saying that I should recover the money in 3 years. I should at least send a notice within 3 years. I have given you something and I have forgotten about it. That is called as a time barred debt. So, a debt which has been time barred, I can either write it off or I need not write it off. If I don't write it off, it will be lying in my balance. Then if I receive the money 5 years later, is it taxable? Question number 1. Second one, I had given you some money, I forgot about it, and an expense I had made, forgotten about it. Then it was supposed to be, I was supposed to receive from you, and then ultimately, what do you say? Basically, I had given you some money, forgotten about it totally. I wrote it off in my books also. 5 years later, I received, taxable or not. These type of adjustments will come in the exam. So, time barred debt, if it is written off already and then when I receive it, 41(1) will come. 41(1) will come, whether unilaterally or not unilaterally, if I write it off. I should write it off in the accounts, mind you. Should write it off in the accounts, right? If it is not written off at all, it means it's still lying, no? So, how can you say I have received it? Correct? In the sense, if it is still payable, I am showing expenses to payable account, it's still lying there. And then later I make the payment or whatever I receive, whatever the case may be. If I have not even written off in the accounts, 41(1) will not come. When will 41(1) come? It is wiped off of the accounts fully and later I am going to get the money back. That's what it is. Now, there was one doubt with respect to what do you mean by writing off from the accounts? It was also one case law. So, for example, purchases to creditors 2 lakh, creditors to P&L 2 lakh. Is that write off on the accounts? If I do creditors to reserves and surplus, is it write off in the accounts? Yes. So, basically they said everything will be write off in the accounts. When I say write off in the accounts, it should be credited back to the P&L. So, if it is written off only like this, only then 41(1) will come. If it is not written off, then it will not come, which means only entries purchased to creditors, it's still lying there, no? Until it is written off, 41(1) will not get attracted. And to write it off also, you need to have some proof. They should say that, okay, no need to pay, no problem. Only then it will be deemed to be income. Otherwise, it still will be a payable in your account. That's why you do, aging analysis, right? When you're doing the audit, creditors and debtors aging analysis to ensure that nothing is time barred. Next, waiver of loan, guys. Waiver of loan. Will this come under 41(1) deemed profit? Will 41(1) come only for expenditure or also for a liability? Trading liability or personal liability? Trading liability. Trading liability means advance to suppliers, or is it like actual term loan taken? These are all issues which obviously will get doubt. This was addressed in a case law, TV Sundaram Iyengar, Supreme Court decision. If it is a personal loan, 41(1) will not come. You have taken a personal loan from a friend, he has waived it off. Deadly. If you just take a loan and pay back the loan, is it taxable? No. You take a loan and you forgot to pay it off and he's waived it off. It will be taxable in the hands of the receiver under 56(2)(10) IFOS. Correct? 41(1) will not come, 56(2)(10) will come. Business loan, if I take, is loan an allowance or a deduction? No. Is it a trading liability? No. So 41(1) will not come. If it's a trading receipt, if it is a trading receipt, means what? You have received something in the course of the trade. Let's say they are supposed to give you, you have bought 7 computers, you have got one extra because of the long-standing relationship that you have. You have received extra. You have received extra money, correct? Like a cashback, or they have given you extra. All these things. There is one more section, 224(18). In that section 28, any trading receipt is taxable as it is a benefit. So either way, whatever you do, it will be taxable. So waiver of loan, let's say you take a business loan, for example, and you get one extra benefit where they say, no problem, you no need to pay that. So is it a trading receipt? Yes, it's given under section 28. So anything business loan taken here. So here in this, it is only very clear cessation or remission of a trading liability, not a loan. Trading liability, not a business loan or a personal loan taken. Trading liability will be what? Advance for the supplies, those things only are covered under 41(1). So even though you may say it's taxable, if you write 41(1), it is wrong. It should go in the respective sections, right? So any loan will go under these sections. Personal loan, 56(2)(10). Business loan, 41(1) will not come because loan is not an allowance or a deduction. But loan is what? A trading receipt. It becomes a trading receipt. Benefit. And that benefit is taxable under 224(18). Directly it is in the charging section itself. So personal loan, 56(2)(10). Waiver of personal loan, 56(2)(10). Not personal loan. Personal loan, if you get, it's not an income. Waiver of personal loan, 56(2)(10). Waiver of business loan, 224(18). It is not 41(1). 41(1) is only remission of trading liability. That's very clear. What about waiver of, when I say trading liability, CCOD, cash credit overdraft. Like for example, I have to buy certain goods. So I will purchase the goods by debiting purchases. Instead of crediting bank, I will credit the OD account. Is that a trading liability? It was also a question went to the court. Correct. Loan, I am not taking loan. OD. Is OD like a loan? Sorry? That is also a trading receipt. Yeah, that is the question that was asked. Again, one more case law. Rolla Tainers Limited, Delhi High Court. Waiver of working capital loan. Actually, there is no entry for CC or OD. Correct? Because it's just a limit specified in the bank. So if I say salary to CC, purchase to CC, whatever it is, cash credit or even for a, your overdraft facility, ultimately it is bank only, no? but ultimately what? It is a limit. I am just overdrawing than whatever limit is allowed by the bank. So in this case, working capital loan was deemed to be a liability, correct? Trading liability in that particular case, because these things are not defined in law. It all has to go to the interpretation of the lawmaker, of the judge. Judge said this is not a business loan, this is not a trading receipt as such, this is actually a liability and is remission of a liability. So if they waive the working capital loan, you have overdrawn by 10 lakhs, they have waived it off. This will not come under a business loan. Business loan is where they give you money. Here you are not taking money, you are actually availing a facility. That's why they said it's remission of a trading liability, deadly. So if they ask you waiver of working capital loan, it will be 41(1), right? Adjustments in CA. Then what about term loan? You buy a term loan to buy a capital asset. Capital asset you are buying. So 41(1) will not come. But where will you, waiver of term loan, where will you subtract from? You will subtract from the actual cost. You will subtract from the actual cost. They gave you a loan of 1 crore to buy an asset. You bought an asset of 2 crore. And then you did not pay the loan, they waived off that loan. Isn't it like a subsidy? Yes. Or if you remember, in actual cost, one dialogue was there. It is the sum that you pay minus something which other person has directly or indirectly, met by somebody else. Who is the somebody else here? Bank. Right? So if it is a, this is Steel Authority of India case law. This is Rolla Taylor, this is Steel Authority of India. So yes, waiver of term loan, what is it? Not 41(1) for sure, but it is reduced from the actual cost. Ultimately, instead of creating the P&L account, you are reducing the asset. Thereby, you are getting lesser depreciation. Effect may be the same overall in the next 5 years, but the impact is not direct credit to the P&L account. Clear? These are all the various pointers. So this is regarding cessation. Time bar debt, waiver of loan, waiver of working capital loan, waiver of term loan, all these things. Coming to, that was regarding, same thing is given here. Everything is there in this. The section also applies to the successor of business. The successor of business will be amalgamation or succeeded by any other person, firm, conversion, all those things. Demerger into resulting company, that's what. Amalgamation, demerger, conversion. Conversion of a firm into another firm, succession. All these things it will count. Yes, correct. Yes, perfect. Those cases, correct. (41)(2) already discussed, guys. SLM method, balancing charge and terminal depreciation. Balancing charge method, 41(2). That is what? You have in a power generation unit, you are selling an asset for more than the whatever. It's not a block concept. So then the remaining amount will be balancing charge. An asset of 1,40,000 you are selling for 1,56,000. 16,000 is balancing charge, P&L account, and close it. This is in a SLM method, single asset method. Balancing charge, same concept. Scientific research also already discussed, 41(3). You are selling an asset for scientific research, and if it is transferred on use, it's taxable as business income to the extent deduction is allowed. So whatever is allowed, yes. Any surplus, if the scientific research is 10 lakhs, it is sold for 12 lakhs, 10 lakhs is 41(3), 2 lakhs is capital gain that we had seen already. 41(4) we saw recovery of bad debts. So all this we have seen. Now comes 43B. Important section because there has been an amendment in MSME, which was there a couple of years ago only, but the thing is, of course, it has gained traction in the last couple of attempts. So, and not many questions have come as such till now. So, there is a lot of chances of getting these questions in that 43B, especially with the MSME amendment. So, 43B, what does it say? Certain expenses are allowed as a deduction only when payment is actually made within the due date of furnishing the return of income under 139. So, such expenses will be tax, duty, cess, fee under any law for the time being in force. That is tax, duty, cess and fee. So, we need to understand what are these things. Does duty include excise duty? It does, when I say cess, does it include secondary and higher education cess? Correct. Fee, does it include any license fee to do mining activities? Is that fee? So, like that, again based on decided case laws. Does tax include income tax? Does tax include surcharge? So, if I don't pay income tax within the due date, will 43B get attracted? It will be allowed only if it is paid within due date. Income tax, is it allowed in the first place? No. So, will income tax be covered under 43B? So, 43B is what would have been otherwise allowable, will not be allowed if you don't pay within due date. Correct? What would have otherwise been allowable, that is not allowed here if you don't pay within due date. GST, is it allowable otherwise? Yes, provided you won't get the credit. Is it allowable otherwise? Yes. That if it is not paid properly within the due date, then now is it the due date of filing the return or due date as per the respective law is the next question. Like bonus has to be, let's say like a gratuity has to be paid 5th of next month, assume. And filing the return is anyway October. You don't file in that due date as per that particular law, will disallowance get attracted? 139(1) is the question. Then comes to MSME. Now MSME, is it as per 139(1) or if MSME, is it as per MSME Act? All that we need to see in this section, right? So, one by one. Tax. When I say tax, income tax, 48(2) anyway it is disallowed. So, will 43B come? No. Sales tax, 43B will come. Interest paid on sales tax, it is not under 37(1). People were taking it under 37(1) because sales tax have not paid and it's not income tax anyway. So, but then interest on sales tax has covered under 37(1). It may be, but ultimately if you don't pay it on time within the due date, 43B will come. This was held in Mewar Motors case law, right? GST, 43B will come. Why? Because GST is otherwise allowable. So, everything should be otherwise allowable. What about municipal taxes? Commercial property municipal tax, yes, it is otherwise allowable, yes. What about any, fee is not covered. Tax, duty, cess and fee. We'll come to that. Duty will predominantly be your excise duty, etc., all those things which will be allowable generally. Cess, will it cover secondary and higher education cess? No. The only probable cess that comes here is your research and development, R&D cess. Under the R&D cess Act, if you are doing any research and development, you are liable to pay a cess of 10%. That cess will come here because it is actually allowable. Secondary higher education cess, surcharge is all part of income tax. So, it is anyway disallowed under 40A(2). So, if they ask you that they paid income tax, but they did not pay 4% cess, and that 139(1) time limit is over, or rather they did not pay within 31st March, but they paid before 31st October. Is it allowed or disallowed? It is always disallowed under 40A2. Correct? So you should not, when I say cess, it doesn't mean secondary and higher education cess. One of the examples of cess will be R&D cess act, 10%. Yeah. Yes, that you can claim. Yes, good. Social welfare surcharge you can claim, no issues. Fee. Fee means fee under any statute. ROC fees you are paying, correct? So those things are anyway allowed, right? ROC, then income tax, a little bit fee here and there if you are paying to the government, that yes. Will it include license fee to get the mining contract? But mining contract is a right to use, isn't it a capital asset? Right to mine. Sorry? Which one? Mining, even if it may cover under any statute, but what are you getting? The license fee when you pay, what are you getting? You are getting an intellectual property. You are getting the right to use that particular, you are using that license to actually do your business. So it is not revenue in nature, it is capital in nature. Supreme Court decision, Udaipur Distillery. Which one? On intellectual property you can take, no problem. What is not called? Goodwill. So yes, license fee is an intellectual property right. Definitely you can show it in your block of assets and claim 25%. That's not a problem. But can you, if you keep on paying like that, can you take that entire amount in the debit to P&L account? No. Because license is an intellectual property, as an asset. So license fee will never come under 43B. Supreme Court decision. These are some of the hidden points, what they say. GST, as I told you, and as per 145A, the correct way of showing is, if 2 lakh is the sales, 36,000 is the GST, you should always say what? That bank account 236 to sales 236, full you should show. Then GST expenses to GST payable. GST expenses, GST payable, like that you should show separately. Online people, are you there? Are you able to check, guys, online? Again, there is some problem in the chat. You can chat in the group itself. I am not able to see your chats here. Seems to be some problem. Okay, but as long as you are able to see, it's fine. Cool. So this is what it is. Then, yeah. The first part is what, guys? Any tax, duty, cess, fee under any law in force. Second one, contribution to any provident fund or superannuation fund or gratuity fund or any other fund for the welfare of the employees as an employer. So we saw anyway unapproved funds are disallowed. So this will all come under which one? Approved funds, because approved funds are otherwise allowable. Now it will be allowed only if you pay before the due date. Bonus or commission to employees. Bonus or commission we had seen was an allowable expense. So that also you need to pay before the due date. Then comes the interesting part with respect to interest. So coming to the interest portion. So we have clause D, clause E and clause DA. So clause D talks about loan from a public financial institution, state financial corporation and your state investment corporation. Then any interest on loan, borrowing taken from a scheduled bank. Interest on borrowing taken from a cooperative bank. Excludes agricultural society, banks, etc. Then we have deposit taking NBFC, systematically important non-deposit taking NBFC. Where, what do you mean by systematically important? It is where the total assets is more than 500 crore as per the latest audited balance sheet. This also they have added under in Finance Act 2019. So, even loan given by an NBFC, there are many alternative credit platforms in India now, and NBFC is like the foundation of the economy. That's why NBFC and HFC, basically Housing Finance Corporation. So, NBFC and any systematically important non-deposit taking NBFC. This is deposit taking. It can take deposits. The other one is cannot take deposits. So, ultimately total asset should be how much? Minimum 500 crore as per the latest audited balance sheet. So, Finance Act 2019 from assessment year 2021 onwards, previous year is 1920, this onwards it will come. Now, one more issue was raised. If interest was converted to loan, restructuring, is it deemed to be paid under 43B? Interest, some 10 lakhs was pending. Before the due date, they converted into loan, restructuring. Is it deemed to have been paid? So, that was a valid question raised. So, restructuring, conversion into loan. Payment is on the date of conversion as per many High Court judgments, because the act was silent. When I say pay, did I say pay repayment? Repayment, did I say repayment to the lender? No. Repayment can be many modes. Repayment can be repayment to the lender. It could also be repayment as principal, deadly. I gave a 10 crore loan, 10 lakhs is the interest. 10 lakhs has to be paid. It is nothing but repaid. How will I repay? Either repay to the lender or repay by converting to principal. So, many High Court said is payment will be what? Conversion as per, the moment you convert to loan, it will be payment. Government did not like this. So, they added 3 explanations, 3C, 3D and 3CA, and said conversion is not deemed to be payment. Which means if you convert to loan, what is it? Convert to loan, then it is not repayment. Which means that amount which is added, the moment you pay that EMI, installment, then only it is considered to be payment. Deadly, right? So, basically 10 lakh I gave loan, 1 crore I gave loan, 10 lakh is the interest. You did not pay that interest. You converted it into a loan. Now, it became 1.1 crore. That 1.1 crore, I am paying the EMI now. Principal I am paying as principal. Repayment of principal has a component of interest, yes or no? So, the day I am paying that interest, which is hidden in that principal, that is the day of the payment, as per 3C, 3D. Whenever it is. So, basically 43B says, the day you repay the principal in which the interest portion is hidden, that is the day of payment of interest. Until then, it will not be allowed. And we are very smart. 3C, 3D and all said, talks about what? They said, conversion into loan. These fellows were very smart. They converted to debentures. Right? So, 1 crore I have issued, 10 lakh is the interest. I don't want to convert to loan. 10 lakh I will issue debentures. I used to escape this also. That also government did not like amendment. In Finance Act 22, they added the word debentures or similar instrument. Nothing you can do now. So, that 1 crore loan that you have. So, these are all hidden points which have not come in the exam. Right? So, today if I have a 1 crore loan, 10 lakh is the interest. That interest of 10 lakh I am going to convert back to a loan or issue debentures or issue any similar instrument. It is deemed that repayment has not been done. So, the moment you repay the debenture, that is the best part. then it will be deemed to be payment of interest, and that day they will get the deduction. Crazy. So if you play around with that interest in any way, these sections are there to protect. Correct? So Finance Act 22 only it came. It has not been asked actually. So you never know. Generally, you will only think of interest or loan, but now they will convert to debentures. So what, then you may have a doubt that, oh, it's a different form. So they said nothing. So 3C, 3D, 3CA are the three different amendments which have come. One more they can ask you in the exam, not asked till now. Payment of sales tax. Sales tax you did, you are not paid the sales tax. Sales tax they converted to loan in one case. You have to pay sales tax to the government, no? Government said, okay, I'll deem it to be a loan. Now tell me, is it deemed to be paid or not? What do you think? Deemed to be paid or not? Why? Sorry? But they have converted to loan. Is that payment? Is it still existing? So if you see, guys, come to that. See this point. Deadly. Whatever I told now, 3A, 3B, 3C is only conversion of interest into loan. It is not conversion of sales tax. See, hidden points, small points. Right? This is all for final. Right? Read that point. Which page is that in your material? 54. Yes. Yeah. Instead of the about their interest on loan, right? Say debenture or any other instrument. Any other instrument. Any other instrument. Even if it's similar instrument, ultimately what is it? Is it a security? Yes. So anything that you do, as per Security Contract Regulation Act, whatever you do, similar need not mean only like debenture. Any instrument like a debenture, even share is an instrument at the end of the day. So that will not be taken into account. Unless specifically exempt, it is not there. So this sales tax is an important point, because it is, if it is deferred under any scheme, it will be treated as paid even for the purpose of 43B and allowed. So where state government has issued orders under which sales tax is deemed to be actually collected and dispersed as loans, deduction will be allowed in respect of such sales tax liability converted into loan for the previous year in which the conversion has been permitted. Yes, correct. It's weird. Nothing can be. Now on that loan, if interest is not paid, then disallowed. And then if you convert that to some other loan, disallowed. Or if you issue debentures, disallowed. That 3A, 3B, 3C only concerns conversion of interest into loan, not conversion of sales tax into loan. Small. One adjustment, 2 marks they can ask you. It will not come as a standalone question. In some random question, one small adjustment will come. So it's all about divide and rule in DT. And not all adjustments will be tough. We have been solving problems. 1 or 2 adjustments in one question will be tough. And if you crack those 1 or 2 adjustments in each problem, then 10 marks extra. Because if you don't attend my class also, okay, you will score 30, 40. But here we are there to score that extra 20 marks. For that we are putting so much effort. That is what it is. And anyway, knowledge of all these things will definitely help in the future. You think about that as well. So whatever we discuss, everything is there in this, nothing to worry. So you see, one second. Hmm. 43B, here this one. This contribution to any PF, no? We discussed yesterday employer's contribution, employee's contribution. Employee's contribution I have deducted from your salary, but I have not paid to the government. And has gone beyond the due date of filing the return also. Allowed, disallowed. We told that employee's contribution is of two types. One, it is allowed as an expenditure and also treated as an income. That's why it's nullified. Yesterday we discussed in that master chart. So my question to you is, employee's contribution is deducted but not remitted to the government. But in the entry, what I have done already, I have already debited the P&L account and also shown an income, thereby nullifying the effect. If I don't treat it, don't pay it on time for the due date, will it be added back? This also went to court. When I say contribution, is it employee or employer? Correct? So, if you see, what do you think? Is it an employer or employee contribution? Employee or employer? So you see, guys, I think it will be there somewhere. One second. There, point number 3. Are disallowable only with reference to employer's contribution, and the same shall be allowed in the previous year in which the payment was actually made. On the other hand, employee's contribution to PF, ESI, etc. shall be allowed as deduction as and when the payment is made on or before the due date specified under the respective welfare acts. So to clear that confusion, they added that explanation, explanation 5 to 43B. Employer's contribution will be allowed in the previous year in which the payment was actually made. On the other hand, employee's contribution shall be allowed before the due date. When I say due date, which is the due date? Due date as per 139(1) or due date as per the respective law? That is what the question was. That is what the explanation came. There was confusion. Employer's contribution, because 43B, what does it say? Everything you should pay before the date of furnishing the return. So will it include employee's contribution also? It is only employer's contribution. Employee's contribution, you should do it within those respective due dates. Because in 36(1)(5)(a), they have a dialogue. Employee's contribution will be allowed if it is paid within the due date. Which due date is that? 139(1) due date or respective Welfare Act due date? Welfare Act due date. Which means 43B does not care about employee's contribution. That is self-contained in 36(1)(5)(a). Is that clear? Yes. Small points. So, where employee's contribution to such fund is paid after the due date under the respective acts, deduction for such payment shall not be allowed under section 36(1)(5)(a) only. And such disallowance is deadly, permanent, and such payment will not be allowed in the actual year of payment. Explanation 5 made it abundantly clear. So if you miss the due date under those sections, that's why in statutory review you should see them. In tax audit also it comes. If you miss the due date under those respective welfare legislations, can you actually pay it before the due date of filing the return and then claim here? No, I'm talking about employee's contribution. So 43B has no significance in employee's contribution. So Ms. Arpita, who maintains books of accounts on accrual system of accounting, debited the following expense in the P&L account for the previous year 22-23. Due date for filing the return of income is 31st July. An analysis of 43B is made as under. Accrued 1/3/22, date of payment 14/9/22, GST. When was it paid? 22/23. When was it accrued? 21/22. But when was it paid? 22/23. Allowed or disallowed? Allowed. In which year? 22/23. Interest on loan received from NBFC. Accrued in 22/23 but paid in 23/24. So allowed in 23/24. Correct? These are all adjustments in questions which I have taken from there only. I have taken all the questions and made it into a book. That's all, nothing else. So all these are examination questions ka adjustments. Then 1/3/23, employer's contribution, which was for 22/23. But I paid it before the due date of filing the return, 30th July. Allowed. In which year? 22/23 only allowed, because it's paid before the due date of filing the return. It's employer's contribution, Employee's contribution? No, it should be as per the due date, as per the respective laws. And whether you don't pay there, it is disallowed there only permanently. It doesn't come under 43B. To avoid the confusion only, they have added that explanation, explanation 5. Next, 10/4/23. Then there are further more payments here which we have to see. Check here. Any amount of leave encashment payable by the employer to his employee. Leave encashment. That also should be done within the due date. Any sum payable to Indian Railways for use of railway asset. What is this? Yes, use of railway asset transportation, or you have your shop in the railway station and you are paying rent. Is it a railway asset? Yes, the entire thing belongs to Indian Railways, the land, building, everything. So you are using the railway asset, paying rent. So should you pay everything on time before the due date? Yes. Any services you are using? Yes. Railway asset. You are using the train for certain services. Yes, everything. Railway asset is what is that. So, fee for use railway asset. Incurred payment made to railway shall be treated as advance. So, basically here it is incurred for 22/23 assume, but it is accrued where? Slightly later. So, it should be, when is it accruing? But when are you paying? It's accruing later, but you are paying before, which means it's an advance. Right? Since for the previous year 22/23, the payment made to railway shall be treated as an advance and not an expenditure, since the same is accrued only on 10/4/23. It shall be allowed as a deduction for the previous year 23/24. Why? Yeah, when it accrues and then you are paying. Correct? So when have you paid anyway? Even though you have paid before, it's accruing only later. This is for an expense is otherwise allowable. So it's allowable only in 23/24, right? That's why. Now, in this fee, one more doubt is, electricity bill, is it fee? What about your additional security deposit, ASD, is it fee? Like if you are using a lot, no, you have to pay extra deposit. It's called ASD, additional security deposit. Is it a fee? No. So it's a deposit. So electricity charges, not fee. Additional security deposit, it may be refundable later, but ultimately it's like non-refundable only. That is also not a fee. What could be the fee? It could be your extra load charges. I am paying in Bangalore, that's why I am telling. So there, the load is only like 1 kV, 2 kV in that commercial building. We are using 3 kV because we have a lot of like AC and all that, so many ACs and all are there. So we are paying extra load. Basically, that builder didn't go for a higher kV at the time of construction. But now we are using it and then it's taking a load. So if it is 1 kV, we are using 1.7 kV. So every year, every month, they are charging some extra fee, additional fee. Will that be a fee? Yes. But electricity bill is not fee. So that similarly, electricity bill, there was already a case law. Let me see here. Yeah, point number 4. Non-payment of electricity charges will not attract disallowance under 43B, since such charges cannot be treated as fees. But additional fee, ASD is also not fee, but higher load charges can be taken as a fee. Then comes the amendment now. There, point number 8 here. Any sum payable by the SSE to a micro or small enterprise beyond the time limit specified in section 15 of the Micro, Small, Medium Enterprises Development Act. This is with effect from assessment year 24-25. One small question had come in May 24, that's all. For some MCQ as such, but it was not like a full-fledged one. So any time from now, they can ask this. So we need to obviously understand what it is. So yes, MSME. So Finance Act 23 spoke about payment made to MSME. It is not payment made by MSME. So what do you mean by a micro, small, medium enterprise? But this section applies only to micro and small. Micro, where investment in the plant and machinery is less than or equal to 1 crore. And turnover is less than or equal to 5 crore. Then only it's called as a micro enterprise. Small enterprise, investment in plant and machinery is less than or equal to 10 crore. And their turnover is less than or equal to 50 crore. Correct, here it is 5 times, here it is 10 times. Here also 10 times, sorry, 10 and 10 into 10. So 1 crore, 5 crore, 10 times. Medium you leave. So this stops there only. Anything more than 50 crore and all, this section will not apply. This is payment made to MSME, not by MSME, which means MSME is your client. And MSME, basically more than client, I would say, is your supplier. He is supplying goods to you and you are paying to them. So if you are a buyer, any SSE, mind you are purchasing goods from a micro and small enterprise governed under the MSME Act. Here they are not telling payment should be made before the due date of filing the return. They say payment should be as per section 15 of the MSME Act. What does section 15 say? Here it says, if the agreement is silent as to when you should pay, your agreement, you will buy goods, no, agreement is silent, then it says it should be made within 15 days. Deadly. If the agreement is silent, you should make the payment within 15 days. From whenever you buy, the date of the contract. But if it's mentioned in the contract, it's mentioned, date also is mentioned in the contract. You have accepted the goods, date is mentioned in the contract. Let's say you buy the goods on 1st October, just an example. If agreement is silent, you should make the payment within 15th, deadly. But in the agreement, you will mention the date of payment. You will mention the date of payment as 30th October. So obviously, if you don't make the payment within 30th October, that expense will be disallowed. Can I have a payment term which makes the payment that where you have to pay on 1st December? In the contract, if MSME agrees, can I say I will make the payment on 1st December? No. Why? Yes, as per the date in the contract, but that should be maximum within 45 days from the date of acceptance of the goods. So if no contract is there, 15 days, deadly payment, that is deadly. Or if the contract is there, any date in the contract, no problem. But that date should be what? Maximum 45 days from the date of acceptance of the goods. If it is paid within that 30th, whatever date mentioned in the contract, no problem. If you don't pay it, if you pay it later, then it is allowed in the year in which it is paid. So, date as per the agreement is, let's say, 15th April. So, if the payment is made on 24th April 2024, then as per 43B, even though it is well within the due date of filing the return, doesn't matter. It is beyond the last date as per the section 15 of the MSME Act. MSME Act overrides Income Tax Act. And hence, payment will be allowed in which year? 24-25 and not in 23-24. So, this is the deadliest section. Very simple. If no agreement is there, 15 days. If agreement is there, you should see the date of the contract. Whatever may be the date of the contract, I don't care. It should be maximum 45 days. So, even if the date of the contract is 1st December, I will only take 45 days for my income tax purposes. Because in section 15 only it says it should be maximum 45 days. You cannot go beyond that anyway. But even by mistake, if you have written that is void. I will only take 45 days from the date of acceptance of the goods. See some examples here, because I've added this, not there in the notes. I just added it, a couple of weeks ago because I wanted to see how it is. Illustrative scenarios. There is anything they can ask in the exam. You can probably take a picture or something. We'll see. Or online people can take a picture and post it on the group. Or I will send this snippet. Don't worry. So you just see the exams. 1st January 2024 is the date of receipt of the goods. Credit terms is 30 days, which means by 30th January I should make payment. When have I made payment? 25th January 24. Is there a delayed payment? No. So, return in which the deduction can be claimed when in 23-24 only, financial year 23-24 only I can claim the payment. Though I have made the payment etc., ordered it in 23-24, date of receipt of the goods comes on 1-1-24. Anyway, 23-24. So, can I claim it in 23-24? Yes. Is there a delay? No delay. 1-1-24 I receive the goods. Credit term 30 days, which means by 31st January I should make the payment. When do I make the payment? 25th February. Is it delayed payment? Yes. But see, deduction, year in which the deduction can be claimed in ITR, 23-24 or 24-25? 23-24. Why? Payment has been made in the same financial year. In my example that I showed, it was made in the other financial year. Payment was made in the same financial year, so no problem. Even though you breached this payment, but it was made in the same year, no? When was it made? 25-2024, it was made in the same year. So no problem. This was actually the concern of many people, that if I breach that 45 days, does it mean it goes to the next year? That no. If you make it within the same year, then no problem. right? So you see the wordings here. So deduction on accrual basis, the amount is paid by due date of furnish the return of income. However, specific exclusion for 43BH has been provided in the proviso, hence the amount shall be allowed as expense in the year of actual payment, even if it is paid before the due date under 139(1). We'll see that. So you see here, we have already discussed. If that is written agreement, then maximum time is 45 days. In order to promote timely payments to MSME only, this thing was there, because MSME requires money always. You cannot keep giving it whenever you want. So the deduction here is allowed on accrual basis only, but the amount should be paid by furnishing the return of income, before the furnishing of return of income. However, 43BH specific exclusion is there. The amount shall be allowed as an expense in the year of actual payment only. It doesn't matter when you paid, etc. It should be on the year of actual payment. Based on that only, we say here, second one, is it paid? I don't know, I don't care when it is paid. Is it paid before the due date? All that you leave. But is it paid in that actual year? Yes. So, second example done. Third example, 1/1/24. No return agreement. Should have been 15 days. When did I actually pay? 22/24. Have I breached that contract? Yes. But is it paid within 23/24? Yes. So when is it allowed? 23/24. Fourth, everything is covered in this. Next, 1/3/24 is where I received the goods. 45 days is the time limit. Means 15th April. Yes or no? 45 days, 15th April. When did I make the payment? 5th April 24. Is there delayed payment? No. Though it is paid in 24/25, there was no delay, because of which it is allowed in 23/24. No delay. Are you guys understanding? So anything they can ask, guys. That's why this chart I made to make it easy. Next, 1/3/24. How many days credit terms? 45 days. When should you pay? 15th April 24. When did you pay? 20th April 24. Did you make a delayed payment? Yes. No problem, but was it paid within the financial year? No. It was paid later. So when is it allowed? Next year. All possible things covered here. 1/3/2024. Payment terms is 60 days. They have told whatever they want. But what I should take? 45 days. Which means I should take within 15th April. I have paid when? 20th April. Is there a delay? Yes. 100%. And it's also flowing to the next year. So when should I make the payment? Next year. 24/25, payment in the next financial year. 1/3/24. No return agreement. When should I make? 15th April, 15 March, sorry. When did I make? 20th March. There will be a delay, yes, but when is it paid? Same financial. Right? Next, 1st March 24, no return agreement. When did I pay? 1st April. When should I have paid? 15th April. But I paid in 1st April. Two things. Is there a delay? Yes. And is it paid this year? No. Paid next year. So, next year. So, these are all the examples of MSME amendment. Not asked in the exam. Only one small question came in May 24. So, definitely you can expect questions in November 24. So, micro enterprise, what is micro enterprise? Everything you should know. And some other points in this. Medium enterprises are excluded, which means turnover, if you see this, medium enterprise There you saw 1 and 10, 10 and 50. This is into 5, that is 50 and 250. Correct? So you said 1 and 10, then into 10, 10 and 50. Then a 10 and 50 into 5 you do. 10 into 5, 50, 50 into 5, 250. That is medium. This medium is not covered. So you should also see, they may not ask you, they may say it's an enterprise as per MSME with turnover 300 crores. Section does not apply. Why? Because it's only for micro and small, right? Can you say that my turnover is 1 lakh rupees, I am MSME? No. MSME registration is considered only on availability of valid Udyam registration certificate. That is more important. So just because your turnover limit is less, you can't call yourself MSME. So you registered as an MSME in that, certificate you should get. Now when I say MSME enterprise, you are just doing some trading activity. And your turnover is less than 1 crore, 2 crore, whatever. Are you calling yourself MSME? No. The definition of enterprise under MSME does not include traders. The benefits to retail and wholesale trade MSMEs are restricted up to primary sector lending only, and any other benefits etc. are excluded. So basically it should be Udyam registration and it should be an enterprise. GST component while paying, allowed, disallowed? These fellows turnover are what, 20 crore and all that, no? 50 crore, 20 crore, more than 5 crore also is like more than 20 lakhs. So I am paying GST to them. No credit, same dialogue. GST component will be disallowed only if the same has been claimed as an expense in the books of accounts. That is, input credit has not been taken. Now this dialogue here, I am making payment to MSME. What if I am buying an asset from MSME? Will 43B come? 43B comes for payment of capital expenses also or only revenue expenditure? When I say here, sorry? That's what I am asking. Any sum payable, capital or revenue? Both. But 43B I told you it was otherwise allowable. 43B, what does it say? Something which was otherwise allowable will not be allowed if it is not paid within due date. So taking that main section into account, this payment will be only revenue or capital? These are some of the doubts which are valid. In the exam they will ask you, micro enterprise, you bought a asset from micro enterprise, 10 lakh rupees. You did not pay it on time within the MSME Act also, nothing also, what to do? So you see one more point. (43BH) would apply to amounts payable to micro and small with respect to purchase of capital goods for which 100% deduction is admissible under 30 to 36. Very, very interesting point. Any sum payable will include, which is other, 43(1), what does it say? 43B. It says which was otherwise allowable. Otherwise allowable in which section? 30 to 36 only. So which are the capital goods allowable under 30 to 36? Scientific research, yes. Then specified business. Specified business. Correct? Is 32 allowable? Depreciation is allowable. Purchase of asset is not allowable. No, that is under 43. Correct? No. So it is not depreciable asset purchase. I am talking about expense is allowed as an expense. Means which one? Scientific research, specified business, 35AD. So deduction of 100% of capital expenditure under 35AD and deduction of 100% of capital expenditure on scientific research, all those things. However, when no special deduction is available and only depreciation is allowable, the same cannot be disallowed as it is a sum, not a sum payable. Correct? So sum payable basically means what? All revenue expenditure and capital expenditure allowed under 3236. I repeat, 43B, MSME payment, any sum payable is equal to what? All revenue expenditure. Second, all capital expenditure allowed under 3236. For example, 35 and 35 AD. So these have never been asked in the exam. That's why I am doing it a little slow, right? One more. Here it says, any tax, duty, cess, fee, interest. MSME, that 15 days, 45 days limit is over, after which I have to pay like a penal interest of 1% or whatever. They'll charge on interest component. I have delayed like crazy. Then I have paid it later, for which I'll get that allowance later. That's okay. But interest also I am paying 20,000 rupees. Is the interest allowed? So I was supposed to pay 1 lakh. I did not pay 1 lakh. With interest, I am paying 1,10,000 later. So that later, what is allowed? 1 lakh or 1,10,000? So yeah, is it an interest on any loan or borrowing? No. And it says any sum payable. Does any sum payable include interest? Interest comes in 37, okay. But will it, interest, that expense is coming in 37. But here, is it on a payment basis under 43B? All these are questions raised to CBDT. They have already answered, guys. That's what I am doing now. I have already answered all these questions. Disallowance will be triggered only on amount outstanding at the year end if the same is not paid within the due date. There will be no disallowance if payment is made beyond the time specified in section 15 of MSME, but it is made during the same year and not outstanding. You saw that in examples. However, the same may lead to supplier filing a claim for interest under section 16 of MSMED, which is payable at 3 times the bank rate. Section 23 of the MSMED states that interest paid by buyer to a MSME for delayed payments is not deductible under Income Tax Act. Section 23 only says that. Yes, Section 23 overrides Income Tax Act. So interest paid by a buyer to an MSME for delayed payment is not deductible, disallowed in the Income Tax Act. So the question of 43B will never arise because it is never allowable. 43B is otherwise allowable. It is not allowable only, no. None of these questions have come till now. First time ever, November 24. Onwards, of course, later also they can ask. Which one? Because I would have paid, no, because MSME Act has a contract where you will have to pay the interest. So when you pay the interest, it would be recorded already. Paid to the MSME guy. So you will pay to the MSME guy. So in your books, it will be recorded already, no? So should you allow it while taking it in while doing your P&L account? No. Tax auditor is his duty to ensure. In tax audit, there is a separate clause on MSME. So you should take all this into account. So actually indirectly in all these points you are actually doing tax audit. Yes or no? We are doing tax audit chapter which is there. Same thing only. So by seeing these hidden points, those topics are also getting covered. Right. When there is one case study, you can just see this later. No problem. It's fine. So, okay, one second. There are undisputed, disputed, dues to other MSME, all these things. Assume the credit period of 45 days. Yeah, it's okay, leave it. That you can go through. I'll send you this part. You can go through this later. So guys, this is regarding MSME. None of these questions have come till now, which makes it very important for our examination. Right. So with this is also done. Deem profit, all these things were done. 43, 43A, all that we have done. No problem. (43CB). 43CB. This is what? Very simple. Construction contract. For construction contract or for contract for providing services, etc. What is it? Is it percentage completion method or is it the straight line method? How will you recognize? Or is it the project completion method? Basically, percentage completion method. So always it is percentage completion method as per ICDS. For all the contracts which are more than 90 days. Only when the duration of the contract is less than 90 days, then you should recognize it. It's not a percentage completion, it is a project completion method. General rule, percentage completion method, assuming that the project is going for more than 90 days. If the project is less than 90 days, let's say it starts sometime in February, will you recognize it in that year or next year? Next year. It's going on for 70 days. It will be recognized next year. It is project completion method, recognized fully in the year of completion. On the other hand, if I do not know when it is going to be over, indeterminate number of acts will be performed over a period of time. I don't know, there are so many items, I have given a time of 10 years. It may go here and there. So here they say straight line method. So whatever activities you do, keep on changing every year and divide it by 10. That is your computation of income from construction and service contracts. Your AS7 may say something else, but ICDS is very simple. Percentage completion method in all cases except these two exceptions. Revenue recognition, actually not an exception, it's an addition. Now when they are making the contract in revenue recognition, if you are a construction company and you have to charge your income, etc., you can also take some retention money initially, just to see that, okay, it's like a non-refundable money. Retention money, is that also included in the revenue? Yes. So contract revenue shall be inclusive of any retention money. Contract costs shall not be reduced by any incidental interest, dividend or any capital gain. The cost, contract cost, like if you have some money and you have put it somewhere and you are getting some interest and you are invested in some shares or any land and you have sold it, you are getting capital gain. Should I merge this contract cost with all these things? No. That should be kept separate is what they are saying. That is what it is. So let's solve question number 3, guys. Question number 3, let's come. Now you will get the confidence, I can assure you, that you can solve all the questions, at least question number 3. Without seeing, try to, in that only point number E you may not be able to write, no problem. Other things definitely you will be able to solve. So try to solve question number 3. Take 3-4 minutes. Don't see the answer. Each point you only try to understand whether it should be plus or ignored or minus. That's all. That if you figure out, over, problem is over. So try. Genuinely try. From whatever you can see the book, open book exam, I don't care. But the answer should be like, you should at least be able to apply. That's what I'm trying to do. So take 3-4 minutes and please solve it. Online people, you also. Online guys, I'm not able to see your chats, so you can text me on the group in case you have a doubt. Ignore MAT provisions, they are giving there only, no tension. Try to solve this. Just plus or minus, if you can note that for 3-4 minutes, that problem is solved. Like, should I ignore, add or minus? That's it. November 21, they have asked this question for 14 marks, the mock test paper. Everything we have done here. Except like one capital gain point is also there, that's fine. 1 or 2 points, that's okay. There's discount on issue of debentures, right? We had done it. It says having 5 years tenure, which means what? It's not upfront, spread across 5 years. Subscribed in full, that's okay, but then it is over 5 years. They didn't say it is that 5 years discount is paid 1 year, that they didn't say. They said it is subscribed over 5 years, which means I should give discount 5 years. Online people, you also please solve. I'm giving you time for that. Just plus or minus, if you write, that's about it. So if you see in this 14 marks, if you are able to solve at least 70%, that's good enough, because we still haven't done capital gain, but at least whatever we have done, everything is there. So think about it. Done, guys. So let's see. So what do you think? Were you able to get something at least? Yes. A little bit confidence will increase when you are able to solve these questions. And as you see, there are some hidden, whatever I showed is not, it's purely MTP question. In that there is discount on issue of debentures, everything we have discussed, no, those minute points. We have actually gone higher level only, anything they can ask. So here, depreciation, what do? We'll add back. Industrial power tariff concession of 5.4 received from Uttar Pradesh government was already credited to statement of P&L account. Ignore, because why? You have already credited. So that concession, etc., like a subsidy, everything should be credited. It's a benefit. Contribution of 2.5 lakhs to a scientific laboratory functioning at national level with a specific direction to use for what? Scientific research program. So it is 100%. So they have already, should I make any adjust? Should I add back? No. It's already debited. It's all after adjustment. So this is done. Profit of 8 lakh on sale of plot of land to PQR, a domestic company. The entire shares which are held by Sakshi Limited, the plot was acquired by Sakshi on 30th June. The entire shares are held by Sakshi Limited. This company is holding 100% shares in that PQR Limited. So, what do you think? Capital gain. So, in capital gain, if there is a transfer to 100% subsidiary, it is not a transfer. So, basically, it is not at all a transfer, which means that is fully exempt, which means they have actually credited to the P&L account. I should remove it. So, I should subtract, because any transfer to what? 100% subsidiary is not a transfer. Profit of 8 lakhs, that is. Payment of 3.5 lakh towards transportation of various materials procured by one of its units to Messrs BP Transport. partnership firm without deduction of tax at source. Generally, if you don't deduct tax at source, 40A, 1A will come 30% disallowance. But here, there is an extra point because we have not done that. Firm opts for presumptive taxation under 44AE, and they have given a declaration also that it has, and also furnished a PAN. So there they have given a declaration saying that tax is not deductible to me. So when they have taken a certificate, then no need to deduct TDS. So hence, should I ignore or should I do anything? Ignore. Interest of 15 lakhs paid specifically for purchase of second-hand machinery. Out of this, 5 lakhs is for the period till such machinery was commissioned on 12/8/23. So 5 lakh was till it was put to use. It should go back to the actual cost. So remove from this thing and add to the actual cost. No problem. Remove from this thing and add to the actual cost. Correct? So I should remove from where? From this. It is debited to P&L account overall. In that I should only take away what? 5 and then add it to what? Actual cost. Very simple. Next, debtor who owed the company an amount of 20 lakhs was declared insolvent and hence it was written off. Bad debts written off. So it's okay, I've already made the adjustment. Bad debts written off. So is it allowable expenditure under 36(1)(7)? Yes, already we saw. For bad debts to be written off, two things should be there. One, it should be written off as irrecoverable. So is it written off like that? Yes, it's already debited. So should I do any adjustment? No. Simple. Yes, provision and all if you write, disallowed. 5 lakhs being additional compensation received from state government pursuant on interim order. This we'll see in capital gain. So in examiner comment in capital gain also they have told the student has never understood the concept of compensation. They have given directly like that, right? Not just normal compensation. There is something called interim compensation, interim order, final order, those things. We will see that in capital gain. In order to expand its business in the overseas market, the company planned online advertisement campaign for which first this we saw. This is 6% equalization levy. 2 lakhs paid to a consultant for expert opinion on new business setup. Is it capital or revenue? New business, I have hired a consultant. It is a capital expenditure. What is allowed? It's a capital expenditure, new business. So I should see will it come in 35D? I should see. Whatever it is, it should be accumulated and then 1/5 should be allowed. Here they have fully debited 2 lakhs. So what should I do? Add back. Add back 2 lakhs. Because new business setup, expert opinion, whatever it is a capital in nature. It is not for the business to set up a new business. I want to see whether it is good or not. It is all capital in nature. It will not come in the P&L account. Max to max, it will come under 35D because preliminary expense is what? Before starting business or any new line of business, if you remember. So there all the expenses including expert opinion should be added, then divided by 5. Sorry? That is different, no? That is if the plan fails, that is a feasibility of a project, feasibility for a project, that is allowed. They are different. This is what I am setting up a new business. I have hired an expert to see the feasibility whether it is there or not. It is 100% capital. But it is still allowed under 35D, we have to see. For that I have to add all the expenses and that should be well within that limit, 5% of capital employed, all those things we saw. So that is separate thing. So that we need not mix it here. Since it's fully debited, it's wrong. I should add back. Additional information. Depreciation, you have to subtract this one. Debenture of face value 1,500 lakhs having 5 years tenure was issued at discount of 3% or subscribed in full. What is this? Discount on debentures will be how much? 1,500 to 3%. 45 lakhs. 45 lakhs fully allowed every year? No. How much? Yeah. So this was not done. Correct. So what should I do? I should subtract. It is divided by 5. 45 divided by 5. How many lakhs? Yeah. That I should do what? 9 lakhs I should allow. So I should reduce from the profit. because these are additional information. The company paid a bill of 3 lakhs in March 24 for a supplier of cotton for supply in March 24. The bill was omitted to be recorded in the books. Payment against the bill was made in April 24. Necessary entry was made in the books then. The same has been considered in the closing inventory. What should I do? Purchase only was omitted last year. Correct. The bill was omitted to be recorded in the books in March 24. Payment was made. So it is same has been considered in closing inventory valuation during physical verification conducted. So in the physical verification it is present, but in the books it is not present because they are omitted from it. So either I should reduce the income, correct, no? Because it's like purchases, it will include something. So what should I do? I should, what should I do? Inventory, when I do the valuation, I am seeing a physical verification, it's there, but in the books it's not there. So what do I do? Pass the entry, and profit will reduce or increase? Reduce, that's all. The company, this also we saw 100 bales of cotton at 5,000 per bale and all that. So here for an MP, a firm in which majority of the directors are partners, 48.2. Excessive payment. So how much is excessive payment? Yeah, so that excessive payment I should disallow. Disallow 4 lakh rupees. Disallow. Simple. So it's gonna be simple only. Nowadays they are not asking questions on the other area, which is your salary and house property and all that. See question 9, guys. It's a little bit from assessment procedure, but probably you will be able to answer. Question 9. Sorry, question 8 first. Question 8. Question 8 and 9. Quickly we'll see. So what do you think, guys? It's Rama Cements is a company manufacturing cement. The company issued 20 lakh equity shares of 100 to the general public. Shares were issued at a premium. SE claimed reduction under section 35D in respect of preliminary expenses at 5% of capital employed and added the amount of share premium also as capital employed. What do you think? We saw that paid up capital plus reserves is premium on issue of shares. Is it a share premium? Is it reserves and surplus? Security premium account, is it reserves and surplus? Basically, is it a free reserve? Your capital employed will be your reserves and surplus. That is your free reserve, technically speaking. Is security premium account allowed in computing your net worth? Is security premium account part of your net worth? Right? So that is the question. So the question here was whether premium is considered as capital employed in business. So intention of legislature to treat share premium as capital employed in the business could have been explicitly mentioned. Have they mentioned like that? No, they said paid up capital. Share premium is never part of your paid up capital. Paid up capital is whatever you pay for, the normal amount, face value. So they have given issued share capital, subscribed share capital, etc. It does not include any premium. Even section 52 clearly of Companies Act says that it should be kept in a separate account called securities premium account. So is there any reference to 35D here? Yes, share premium is not part of the capital employed. Correct. So will I disallow the entire amount? No. Only 5% I should disallow because I have only taken the entire amount into 5%. So it was an actual case. Berger Paints, not Berger Paints, Berger Paints India versus CIT 2017. Supreme Court has told the same thing. Fine. Please solve 11th question. MTP March 24 it is 11. Sheetal Limited. Sheetal Limited is a listed company located in Mumbai. It is engaged in multiple activities at different locations. Books of accounts are maintained by each unit separately. The head office maintains books related to common transactions. All the accounts are consolidated and the return of income is filed at Mumbai. The following information is furnished for the year ended 31st March 24. Chemical manufacturing unit, company has reported net profit of 300 lakhs in the books. It has used know-how by a renowned scientist. Amount of royalty paid was 40 lakhs. They deducted TDS and omitted to deduct tax on royalty for the period November 23 to March 24. What should I do? Should I disallow? If you have not deducted tax, I should disallow. But if I go to that other fellow, beg him, and then tell him that please deduct and then give a certificate, then it will be allowed. Right? You see what have they done? The payee admitted the royalty income fully, paid the tax and filed the return of income also before the due date. You should file everything and only then give a certificate. So here is it allowed or disallowed? What do you think? Okay, so 10 lakhs without deduction, since the pay is admitted, etc., same would be allowable. But it's allowable in which year? When did he pay? Filed his return of income, deducted the tax on amount paid of November, omitted to pay the tax. So when did he do it? When was the tax deducted and paid? Next year or that year? The company deducted tax at source and amounts paid up to November 23 and omitted to deduct the tax only at 10 lakhs due to the period from 23 to March 24. The payee admitted the royalty income fully, paid tax and filed his return of income before the due date. So here, what is the assumption you will make? This fellow paid before only, or during the filing return time he paid? So in the absence of proper information that he has paid before that only, generally when do we pay taxes? Filing only, whatever is there, because I thought you would have deducted, then later I came to know you have not. So then I admitted it and I paid it before the due date. So it is allowed in which year? Next year or that year? Now deduction only has happened after March. So if you see, yes, no, but they have not deducted at source, and if you see, they have not deducted, omitted to deduct tax. Correct. Tax deduction has happened or tax payment has happened? Omitted to deduct tax. First of all, is not an SSE in default for sure, but my question is, when is it allowed? In the year in which that other fellow payee pays, or in this year only? So this is what, 23-24, no? 23-24 only it will be allowed, or this guy paid in 24-25 actually. So obviously in 24-25. But will you be called as an SSE in default? No. Ultimately it is in the year you pay, and you will not be called as a SSE in default. Correct? So here nothing is given. So what will you assume? So you have to write your assumption. That's what I am saying. You have to write your assumption. It is, whatever you write is correct only. So they realize this November to March 24. But the thing is, a better assumption would be what? They omitted fully to deduct till 24. So what is a better assumption? That he actually paid it in after 24. So when will it be allowed? 23-24, 24-25? 24-25. Got it? Because it's very clearly given that they omitted only. They forgot to deduct. For how much amount? 10 lakhs, no? 10 lakhs. So it's a resident or non-resident? Renowned scientists, they say. Have they given anything resident or non-resident, anything like that? No. So if they have not given, will you assume non-resident? No. That is too much. They are not given only non-resident, so you cannot assume non. So it's a resident. So how much it is allowed? 30%. So 30% will be added or what? Yes. And when will it be allowed? Next year. Perfect. Furniture manufacturing unit Pune. The company has a manufacturing unit Pune. It has a net profit of 90 lakhs as per books of the unit. Brought a trademark from Mr. Yellow for 25 lakhs and added as expenditure in the books. Is it goodwill or trademark? Trademark. So what should you do? Add back to the actual cost of the asset 43.1. So add back from the profit 25 lakhs and claim depreciation. The unit paid 3 lakhs as interest on loan taken from a non-resident Indian. The tax was deducted at source, but it was remitted only on 6/5/24. Here when I say interest on loan, etc., remitting interest on loan taken from a non-resident Indian. What do you think, guys? Will 43B come? So is it on accrual or payment? It is not 43B. 43B, did it speak anything about Non-resident. Interest on loan from scheduled bank, all those things. So which means 43B and all will not come here. Correct? So here, what has he done? He has deducted the TDS also, tax also is deducted at source. So if you see in 40A 1A, will it come? Will 40A 1A come? Resident. So it's non-resident. So what will come then? 40A 1 will it come? Yes, it's remitted before. So here they are simply trying to confuse you. 6524 they are simply trying to confuse. So when is the due date of filing the return? So you have already paid, no. So is there a problem? No. And I should not go to 43B and all for this. Suddenly you should not go to 43B, right? So yes. So any adjustments here? No adjustments. Company paid 7 lakhs being the amount of income tax payable by employees on see every small point they are giving, right? So we have to do like this only, no choice. And this is a 24 paper, recent paper, March exam, March 24, this year only, right? The company paid 7 lakhs being the amount of income tax payable by employees on non-monetary perquisites provided by the company. This amount is already debited in as expenditure. Allowed or not allowed? Not allowed. 40A5 disallowed, full disallowed. 7 lakh to be added. One adjustment we missed in the previous one. The company paid 33 lakh 60,000 being 15% of basic salary plus DA to the employees in notified pension scheme, and the amount so paid is debited to the expenditure of the P&L account. So in 80 CCD we saw how much is it? 10% of basic and DA only is allowed. Remaining portion will be disallowed. So what should you do here? This 15% is it. I should only take what? 10%, which means that extra 5% disallowed. So 33 lakh 60,000 into 5% by 15%. 11 lakh 20,000 should disallowed. So 80 CCD, what is allowed only? 10%. Yesterday we wrote down, no, in that chart it was there, right? So everything we have done, guys, it's just that you need to apply, that's all. And every small point they'll ask. Everything will be 1 mark, 2 mark, like that. But I hope at least you got some confidence that you were able to at least know where it is, right? That's all is needed. Slowly with practice it will come. Next. So now I should subtract also the depreciation, no, that we have not taken. Add back 25 lakh and take depreciation. Depreciation I will take half year or full year for this furniture unit of 25 lakhs trademark. This trademark I will add back 25 lakhs because it's wrongly debited. Then I have to take depreciation. Depreciation is half rate or full rate? Full rate. Why? 16. If it was sometime after 4th October, 5th October, it would have been half rate. Fertilizer producing unit Narmada. The company established a fertilizer producing unit in Narmada, Gujarat, which became operational in July 23. It has acquired a land for 1 crore and put up a building for 2.5 crore and installed new plant and machinery 3 crore. Fertilizer producing unit, automatically you should mean what? 35 AD. That's why I told you those, what you produce also is you have to important to remember. Fertilizer is 35 AD. Now tell me, what all should be the net profit of accounts 220 after deducting depreciation of building and plant and machinery. They have already deducted depreciation. Will you get depreciation if you take 35 AD? No. So first thing you should do is add back 25 and 45. Right? So it is 2.2 crore plus 70 lakhs. 2.2 crore plus 25 lakhs plus 45 lakhs. 2.2 crore plus 25 lakhs plus 45 lakhs. Less deduction. Correct? For land, is it allowed? No. For building? Yes. And for plant and machinery. So how much? 3 plus 2.5 crore. Land 1 crore not allowed. So 5.5 crore. So if you think about it, 2.2 crore is the profit. I have added that 70 lakhs, 2.9 crore comes, 2.9 crore minus 5.5, 2.6. This loss, can it be set off against non-specified profit? No. It can only be set off against specified income profit. So that has to be carried forward. But there is warehousing is there. You see next one, warehousing. Warehousing, is it 35AD? Sorry? Warehousing for storage of edible oil. Is it a specified thing? No, it is only warehousing of agricultural produce or warehouse of sugar cane. See how they are asking. If you are mugged up in some summary book saying warehousing, you will write 35AD here. Warehousing of what is most important? Warehousing of agriculture. Then sugar fellows also cried. So they gave sugar also. It's not warehousing of edible oil. So edible oil, 1/8/2023, it made investments of cost of land. Building 3 crore, plant and machinery, new 5 crore. Profit without deducting depreciation 7. Basically, I have to give depreciation. On building, how much I will give? 3 crore into 10%. On plant and machinery, how much? 5 crore into 15%. Will I give additional depreciation? New, but is it for manufacturing? No. I see how in-depth it is. Is it for manufacturing of an article or thing? No, it's storage. This you have to write actually in the note. That is the beauty of us. They'll know, okay, this guy knows. It's not that you missed out. You don't want to write it because you are writing the answer. In the note you should write additional depreciation is ignored because it's not applicable because it is not in the manufacture of an article or a thing. It is warehousing. Right? So here also there will be a loss, 70 lakh profit less depreciation 1.05 crores. This is a unabsorbed depreciation or business loss. What do you think? Unabsorbed or what? Unabsorbed depreciation. That can it be set off? So additional information. So what do you think? That can be set off or not? Yeah. So unabsorbed depreciation you can carry forward anytime, set off anytime, no tension. The company mobilized capital during the previous year by public issue of shares. Application money was kept in share pending allotment of shares. Interest income from the share application money. The interest income from the said deposit is 3.2 lakhs is credited to the general reserve. What do you think? What about this, guys? There is a excess share application money and it was deposited for which you earned interest. Should I add or subtract this? I have share application money which I have to give it in a separate bank account for which I got this 3.2 lakhs thing. So, is it anything that I can do about, is it PGBP? No. Is it a capital receipt not taxable? Did I do it to earn money? No. Then it will be IFOS. But wasn't this only for a statutory requirement? Yes. So anything which is for a statutory requirement, we saw in share issue expenses, if you remember. Is it a capital expenditure not taxable? Yes. Or a capital even income which is cannot be taken into tax in any way. I put the share application money there and I received interest. Did I want to keep the share application in a separate bank account? No. As per company law, I have to keep. I kept it for a longer duration and I earned so much interest, 3 lakh rupees. So can I ignore that? Yes. It's an incidental interest. It is not for business. So it will never come under anything. The company declared interim dividend. This is, I have a dividend portion, leave it. That's about it, guys. Total turnover of the company in 21-22 was 390 crore. So 390 crore in 21-22. And for financial year 22-23, 405 crore. So what will come? 30%. Yes. So assessment year 24-25. So there is one, what do you say, provision which says you should also see the year before the previous year. Correct? So many people also see what? 21-22. Why? What is the year before? What is the previous year? Correct? So they say for that assessment year, this is the previous year. So 1 year before the previous year. So 21-22 and you have 22-23. So there is an interpretation issue. So these two things they'll ignore and they will take 21-22. Correctly what it was for Finance Act 22, 19-20 was there. For Finance Act 22, which is assessment year 22-23. Correct? So the for assessment year 23-24, finance, it said 19-20. So ideally by that logic it should be 20-21 only. But as I told you, the thing is they are taking here, since it is 390 and it is 405, institute is assuming 25%. I told you, though it should be 30, we had that discussion already, but in some of the problems they are doing it. So you can write a note there. If you are taking 30, take 30, write a note. Otherwise take 25, that's fine. So like this they can ask these questions, guys. So 14 marks, easy. So if you see what is difficult in this, actually nothing. It is quite simple. Next question also will solve and then we'll take a break. Question number 12. Question number 12 asked in March 22, April 24, both. Fun Limited, domestic company, set up and commence business of manufacturing mixer grinder on 1/4/23. State of Madhya Pradesh. Net profit of the company as per statement of P&L account is 1,47,50,000 after debiting or crediting the following items. Depreciation charged during the year amounted to 34 lakhs. What should I do? Add. Lump sum consideration of 36 lakhs paid to a foreign company for obtaining designs and models. They have debited to P&L account. Wrong. Why? This is intellectual property. This is what? Capital expenditure. Will I get depreciation? Yes. Isn't it an intangible asset? Yes. Designing is know-how. So it is an intangible asset. This is not goodwill. Know-how this is. So add back. So purchase raw material valued at 96 lakh from Gold Limited, in which directors have substantial interest. What is that? 48.2. Market value is 82 lakhs. 14 lakhs add back. That's all. Cash subsidy of 15 lakh received from state government on acquisition of new plant and machinery, which is already mentioned in point number C. Acquired on 1/7/23, was credited to the statement of P&L account. Will you take the subsidy in P&L account or reduce from actual cost? Cash subsidy, whatever subsidy it is, whatever return you get, reduce from actual cost. Yes. It is reduced from the actual cost. Right. Next. Legal expenses incurred for issue of bonus shares at 6 lakhs and legal expenses issue of right shares at 8 lakhs. Right shares disallowed. Bonus shares allowed. Already discussed. Share issue on which chart you have done. See, they are asked this. Additional information, depreciation under 32, 36 lakhs, subtract. Sorry, I forgot it. Short-term capital gain 15 lakhs arising on capital asset being equity shares on which STT is charged. It is not taxable under this head. It is capital gain, so subtract from here. During previous year, the company transferred depreciation eligible done. During the previous year, the company transferred unlisted equity shares for consideration which are acquired. The cost of these shares acquired is, so it comes under fully capital gain point. See, new plant and machinery acquired on 1/7/23 for 75 lakhs and payment of 10 lakhs by bearer check, balance through RTGS. Bearer check not allowed. Sorry? Yes, subsidy also should be adjusted. So, 10 lakh bearer check wrong, then 15 lakh to be subtracted. 10 plus 15, 25. 75 minus 25, 50. Correct now? 50 is the actual cost. On that, I will take what? Depreciation. Full or half? Full. Will I get additional? Yes, I will get additional. Manufacturing. So, 50 lakhs into 15% first I will do. 50 lakhs into 20% or 10%? 20%. Plus one more thing depreciation I should give now. Which one? This know-how. So, 36 lakhs into 25% or 12.5%? December, so 12.5, right? 36 lakhs into 12.5%. That's all, guys. Other things are fine. So, these are the questions. Let's take a break, after which we will do the last part, which is hardly will take time. That is my books of accounts. That is also amendment has come, by the way, in Finance Act 23, which has not been asked in May 24. So, you should see in the November 24, right? Yes. All right, guys, shall we begin? Good afternoon. Awesome. So, guys, last part, last leg of PGBP. So, now when you have solved the questions, little bit confidence is coming, I hope. At least you know that which area they are asking. So, that is why solving questions are of utmost importance. We will try to solve questions wherever possible. Cool. So, yeah. So, I think for such preparation level, probably a 15 to 20 day thorough exam oriented batch would be better. We will plan it next time, no problem. I was of the opinion that you guys had already studied once properly and you just needed revision, but it's okay, doesn't matter. As I told you, just give me those 5 extra days, we'll wind up. Right. Maintenance of books of accounts by certain persons. So, this is also very important because there have been changes in the tax, the audit, tax audit, audit applicability, and also the, presumptive taxation. Little bit there are changes. So, this is an important area. So, these are all good small amendments, but important amendments. Anyway, coming to the maintenance of books of accounts as such. So, specified person in a specified profession, other one is non-specified profession or non-specified business. Specified person means what? And the limit here, this is to maintain the books of accounts. Books of accounts is not company law books, it is your tax books. So, limit here is where gross receipts exceed 1,50,000 in all 3 previous years. Mind you, in all 3 previous years, not just 1 year. Every year it should exceed 1,50,000. There is a list of assets, list of people given, and specified books. What are the books also? That is also given. That is given in this material anyway. So, who all are covered? Medical, legal, film artist, accountancy, engineering, technical consultancy, company secretary, architect, interior decorator, all these people are covered. When I say film artist, does it include singer? Does it include choreographer? Does it include, lighting expert? Yes, everybody. Does it include singer also? Yes, everybody that relates to the film industry will be called as a film artist. And yeah, and what are the books that you have to maintain? Cash book, ledger, journal. Copies of bill issued for amounts exceeding 25 rupees. It's not changed only since 30-40 years. 25 rupees, if it is increasing, I mean, if you're paying something 30 rupees, you need to keep a bill. That is the books of accounts. Original bins for expenses exceeding 50. So 60 rupees you buy something, you need to maintain the original bill. In this day and age, they should actually change this, but it's there. Nothing can be done, guys. So basically, gross receipts, if it is more than 1,50,000 in all of the 3 preceding financial years, then you need to maintain what? The books of account. Yes. Correct. Then generally what they say is using your normal interpretation, you should see the last year or the last 2 years. If it's less than 3 years, then you should take the last, whichever year it is. Otherwise, full 3 years. If you are doing this since 10 years, you should see only the last 3 years. Ideally speaking, yes, you're right. But the thing is, it will impact the next year. That's why you anyway indirectly have to maintain. That's why I'm saying these are all old provisions during that time. 2030, this they have not changed only. What they have changed is tax audit and the presumptive taxation limits. Especially the tax audit slightly different. Non-specified business. Non-specified business, if you see, individual and HUF and for others. Individual and HF, income is more than 2,50,000 rupees or gross receipts or turnover is more than 25 lakh rupees. So either of the two. Income is more than 2,50,000 or gross receipts or turnover is more than 25 lakh rupees. Then at least, and it's not every year, at least 1 out of the 3 preceding previous years. At least 1 out of 3 preceding previous years, then you need to take this into account. Other cases, company, AOP, BOI, firm, LLP, their income should be more than 1,20,000 or gross receipts or turnover more than 10 lakh rupees. So here at least 1 out of the 3 preceding previous years. At least 1 out of the 3 preceding previous years. So individual and HF, what is it? Income more than 2,50,000 or gross receipts or turnover more than 25 lakh rupees when at least 1 out of 3 preceding previous years. On the other hand, company, AOP, BOI, firm, LLP, income more than 1,20,000 rupees or gross receipts or turnover more than 10 lakh rupees, at least 1 out of 3 preceding previous years. Then you need to maintain the books of accounts. These limits, unfortunately, you need to just remember, nothing can be done about it. So this is regarding the limits with respect to 44A. Now what has changed, of course, is the tax audit. For which of the things would you need an audit is what we need to understand. 44. AB, C, all this we have done already. Audit of accounts. Once again. Audit of accounts, yeah. So 44AB, audit of accounts. Business, if the turnover is more than 1 CR, you would require, it is up to 1 CR to 10 crore. 1 crore to 10 crore it is the limit, but ideal first limit is 1 crore. If the turnover is more than 1 crore, you have to have a tax audit. In case of a profession, if the gross receipts is more than 50 lakh. And when should I see this? Obviously, when should I see this? In the previous year. I should see this in the previous year. If the turnover increases, goes beyond 1 CR, and in case of a profession, the gross receipts is more than 50 lakh, right? Business turnover more than 1 crore, profession gross receipts more than 50 lakh. Then I would need to do what? Do a 44AB audit. Now this 1 crore is increased to 10 crore. 1 crore is increased to 10 crore. If two conditions are satisfied, means this 1 crore limit, I will extend it to 10 crore if these two conditions are satisfied. Condition number 1, cash receipts must be less than or equal to 5% of the total receipts, and cash payment must be less than or equal to 5% of the total payments. Both the conditions are satisfied, the limit will become 10 CR. So obviously, to give an example of this, here, this is the best example. So come to this point number 6. It's there in everybody's material, no problem. Mr. Muthu has 3 businesses. 2 examples are there, we'll see both. Business A, turnover during previous year 60 lakhs. Business B, turnover during previous year 38 lakhs. Business C, plying of vehicles, turnover during the previous year 10 lakhs. So in this case, the aggregate turnover of Mr. Muthu's businesses is 1 crore. However, turnover from business under 44 AE, that is your presumptive taxation, that should be excluded, and 10 lakhs from business C, that does not form part of the total turnover. So whenever you are using something called presumptive taxation, then these provisions will not come, right? So in those cases, all this 44 AE, all those things you should subtract. The total turnover will be how much? 1 CR, that is 60 plus 38 plus 10 minus 10 lakhs. So it will come up to 98 lakhs. And books of Mr. Muthu is not subject to audit under 44 AB. That's one part of the story. Second part, the following information pertains to different persons carrying on business. So you have Rana, Anand, Rahul, Amit, Ashka and Babu, one by one. So what did we say? The income, if it crosses 10 crore, then only if cash receipts and cash payments is less than 5% of the total. So you cannot take money in cash, you can take through bank. These 6 items will clear all your doubts with respect to tax audit. First one, Rana, sales. Without seeing the answer, let's discuss. Say, Rana, what do you think? His other modes is 7 crore and through purchases is through other mode 6 crore. Anyway, what is the turnover, guys? Turnover is more than 1 crore. So ideally tax audit will apply, but I need to see if the cash receipts and cash payments, both cash receipts and cash payments is less than 5% of the total receipts, total payments respectively. Is there any cash sales or cash purchases? No, which means the limit is 1 crore or 10 crore? 10 crore. Since the limit, since the amount is 7 crore, tax audit applies or not apply? Not apply. Not apply. Next you see Anand. Total cash sales 90 lakh. Total cash purchases 60 lakh. Correct? So total cash sales. So that 5% will come only if you exceed 1 crore. Correct? That 5% will come only if you exceed 1 crore. This fellow has not even exceeded 1 crore. Tax audit will come or not? No. Third one. Both put together 2.2 CR. This is 1.3 CR. So it's exceeding 1 crore for sure. So is the limit 10 crore? For that I need to see the cash receipts and the cash purchase, whatever, the cash receipts and payments. Receipts 1 crore out of 1 crore out of 2.2 crore, 40% plus. That is 1 crore divided by 2.2 crore. That much he has taken in cash. How much? What percentage is that? 45. 45% he has taken in cash. So will the limit be increased to 10 crore? No. Both the conditions should be fulfilled. What about the cash payments? 5 lakh divided 5 by 1.3 is how much? 5 lakh by 1.3 crores. How much? 3.8. Here it is less than 5%, but both the conditions must be satisfied. Here it is 45%. So the limit is 10 crore or 1 crore? 1 crore. So your tax audit Rahul, apply. Next, Amit. Amit, 2.25 CR plus 0.5. So it is 2.3. 2.3 crore is the overall sales. Overall purchase is 1.7 crore. So if I do the math, 5 lakh divided by 2.3 is how much? Yeah, 5 by 2.3 is how much? 2 point something percent, well within the limit. Here 50 lakh by 1.7, 29.5, it's more than 5%. So limit has crossed. Hence, for him, it is 1 crore or 10 crore? 1 crore. So tax audit will apply. Ashka, I don't have to see any of these things because Ashka is crossing 10 crore. What will I sit and check 5% and the main turnover only is more than 10 crore, right? So here we don't have to waste time only. 1.25 divided by 14, all that not needed. Whatever. So directly apply. Last, Babu. It is 4.3 CR and here it is 4 crore 6 lakhs. If I do 5 lakh divided by 4.3, 1.16%, well within 5%. 6 divided by 4.06, 1 point or 2 point whatever. So it's well within the 5% limit. So for here the tax audit limit will be increased to 10 crores. So only in the last case 10 crore, no tax audit. If you see 1 crore limit, then tax audit. If it say other thing, no tax audit. So this will give the entire understanding of all the examples. So whether tax audit apply, not apply, and all these things, all the situations are covered. And if you fail to, what do you say, get your audit accounts audited, then penalty is 0.5% of the sales turnover or gross assets, or 1,50,000, whichever is less. Maximum what do you say, fine will be how much? Penalty 0.5% or 1,50,000, whichever is less. So 1,50,000. So some points quickly, it is not part of your material. I just added recently because I saw the ICAI guidance note, but it's important for the exam as well. Just I'll brush through because it's there. Turnover for the purpose of this clause is what? To understand whether tax audit will apply or not, I should see the ICAI guidance note. Tax audit has been added in your syllabus, so I am covering that also. Whenever we are doing, we are covering tax audit also actually. Term turnover for the purpose of this clause may be interpreted to mean the aggregate amount for which sales are effected or services rendered by an enterprise. Aggregate amount. If GST, excise duty are included in the sale price, no adjustment in respect thereof should be made for considering the quantum of turnover. This is not there in your material, guys. I just added it. So I will take screenshots and send it to you. Don't worry. Right? If GST, excise, I just added because these are some of the extra points. I thought every time, like next time, material will be much more. So we will keep adding. So this all I added very, very recently. I told you, like a week ago. It's not even gone for print actually. If GST or excise duty are included in the sale price, no adjustment in respect of thereof should be made for considering the quantum of turnover. But if it is credited separately, then they would not be included in the turnover, because basically they are trying to tell GST and excise already generally will include as per 145A, but if treated separately, then you should take it separately. What about trade discount? Trade discount, should I subtract from turnover or should I add it? So they will say 1 crore is the sales and 10% trade discount, which means you have actually bought it at 90 lakhs. Should I take it at 90 or 1 crore? 90. Trade discount can be deducted, not the commission allowed to third parties. If there is any extra commission allowed, then that is an expense that cannot be subtracted from turnover. Sale of scrap shown separately under miscellaneous income will have to be included in turnover. All these are hidden points. Sale of scrap. So my turnover is 9.9 crore. Scrap 20 lakhs. Applicable. I should add the scrap value. So I don't have to see that 5% on it. It's crossing 10 crore. Hence, tax audit will apply. And for an agent, what is the turnover for him? Simple, commission earned by him. Turnover should be constituted in accordance with the method of accounting regularly employed. So if you are into cash basis, then cash turnover. If it's accrual basis, turnover as per accrual. Turnover or gross receipts. Gross receipts means what? It will include everything else. Export subsidy, cash assistance, incentive, duty drawback, because all this is part of section 28 if you remember. Reimbursement of expenses incurred, that is packing, forwarding, freight, insurance, the same is credited to a separate account, only the net surplus on the account should be added to the turnover. Generally, all reimbursements you should add, but if I have a separate reimbursement account, then only net surplus, means I spent 40,000, I earned 50,000 as reimbursement. I gave a bill which has a higher value, I can give. Extra 10,000 only should be considered as turnover. Exchange difference also in case there is a gain on export sales. The day I recorded and the day I got the payment, I got higher payment because of currency fluctuation. That gain, should I take it into account? Yes. Liquidated damages. So there is a breach of contract and I have got damages as per the contract law. Will I take it into turnover, gross receipt? Sorry, yes. Insurance claim also I have to take. Fixed assets will be covered in capital gain, etc. So it will not come here. Sale proceeds of scrap wastage. When scrap only I am taking, sale proceeds also I should take. Advance received and forfeited from customers. So I have received an advance for supply of goods and I have forfeited it as per the contract. Will I take it into account? Yes. Then benefit also. Any benefit I am receiving, that also I should add as gross receipts. So if a professional is checking his gross receipts more than 50 lakhs, he got 40 lakhs income, 20 lakhs car he got. Should I take that into account? Yes. Higher charges, finance income, all those things. What would it not include? Sale of fixed assets. That will come under capital gain. Sale of investments. Rental income, because this will come under house property. Dividend income. Other than business income, other interest. Share of profit of a partner of a firm. And if you have made additional provision, if you cancel that provision, that will not be considered again. In case of professionals, chartered accountants, out of pocket expenses received in advance are credited in a separate client's account and utilized for making payments like stamp duty, registration fee, council fee, traveling expense, etc. These amounts, if collected separately, either in advance or otherwise, should not form part of the gross receipts. So if my fee during the entire year is 45 lakh, plus I got 15 lakh reimbursement, analyze it from all points of view just for your knowledge. For income tax purposes, for GST purposes, is there GST on reimbursement? Yes or no? Yes, it is there. Company law point of view, auditing point of view, that is in section 145, 146, 147, audit fee. Auditor's remuneration. Does it include out of pocket expenses? Yes. Income tax, is it included in gross receipts? If it is taken in a separate account, then no. If it is taken together, then yes. Right? That's all. These are all small adjustments, anything they can ask. So if they say 45 lakh gross receipts, 15 lakh is the extra reimbursement that I have taken. So separately if it's credited, what should I do? It will not form part of. But if I have taken 60 lakhs of which 12 lakhs pertains to reimbursement, like that if they ask in the exam, I should take full 60 lakh. So these are guidance note related stuff. In tax audit it will come. Tax audit is a brand new chapter added from May 24. And May 24 not much came. So November 24 again those questions will come. These are all questions from tax audit. So we are actually finishing tax audit chapter also. You are yet to render the service, but you will take an advance. You are a professional, you are a doctor. 20 lakhs is 10 lakhs is the surgery cost. They will say, please pay 3 lakh advance. Operation is not yet done. What do you think? Should that be taken into account? So if you see, amount received by way of advance for which services are yet to be rendered will not form part of the receipts. Multiple businesses or multiple professions. In the case of an SSE carrying on business at the same time engaged in a profession, both limits to be checked independently. If one crossed, both to be audited. These are all interesting points. You are a consultant also. You have a business also. So you have a business, you have a consultancy. So can you take like this for one business presumptive taxation, for other business normal? Yes, you can. And can I check the receipts from each of these divisions? Yes. But if one is crossed, everything should be audited. This income tax law is not telling. ICAI guidance note is telling. It is forming part of the tax audit. More than one business activity, results of all the business should be clubbed together. Except turnover of businesses covered under 44B, BBA, AD and AE, if you opted for it, those should be excluded. All other businesses to be added. That is what you should do. Other things are fine. Agriculturist, that's the problem. No audit is required even if sale of agricultural produce exceeds 1 crore. Nothing, no audit. Non-residents, it will be only confined to Indian operations. Trust association, etc., they may continue to enjoy deductions and exemptions. Audit is required only if the turnover of business exceeds that limit. Right? Yes. So these are all the tax audit limits. Now comes the amended sections, that is 44 AD, amended in Finance Act 23. Applicable for May 24 and November 24. In May 24, again they didn't ask a lot. Hardly it came. So from November 24 onwards, it will apply. What is this? 44 AD. There is a very minor amendment but important amendment. Who is the eligible SSE? Individual HUF, partnership firm. LLP is not covered. They have clearly mentioned partnership firm, not firm. If firm will include partnership firm and LLP. Correct? What is the eligible business? All businesses except flying and carriage of the vehicles under 44A, or if you are doing any professional services under 44A, doctor, engineer, lawyer, chartered accountant, that will not cover under 44AD. Commission brokerage, if you are earning, it will not come. Agency will not come. And if you have taken any exemption under 10AA, 80IA to 80RRB, that is anything related to special economic zone, deductions, export oriented deductions, Part C of Chapter 6 deductions, all these things, it will not be covered. Means this section you cannot follow. And now the interesting part comes. What percentage, up to what percentage of gross turnover or receipts, turnover of gross receipts deemed to be income? If you have received it through account payee check or account payee bank draft or ECS, on or before the due date under 139(1), if you have received the check before the due date, then 6% of gross receipts or turnover to be considered as income. 6% to be considered as income. And on that, tax is computed. 6% is considered as income. If received otherwise, means if it's received otherwise than this, then 8% of gross receipts or turnover. Means if you are receiving any cash, then 8%. It is deemed to be the income. It's a minimum profit that you should show. Can you show higher also on your own? Yes. Do you have to maintain any accounts and all those things for this if you are showing 6 or 8%? No. Only if you want to go less than 6, less than 8, then you have to maintain the accounts. So no need to maintain accounts also, as easy as it can be, presumptive taxation. If received through account payee check, account payee bank draft, ECS, etc., on or before the due date, 6% of gross receipts or turnover, Is it otherwise? 8% of gross receipts or turnover. Deemed to be the income, minimum profit can show higher also, no problem. Now, what is the Finance 23 amendment? Interesting. Anyway, turnover, gross receipts, etc. You should not be plying of goods, carriage, etc. under 44 AE. That's the thing. You should not include that income. It should only be normal business income. And what is the Finance 23 amendment? What is the limit that I have to take here? Limit of this entire section. What if I am earning 7 crores? Can I use 44 AD? No, it is only for small businesses. Only for small businesses. In the 6% or 8%, if I am using cash, let's say I am earning 1 crore. In 1 crore, 20 lakh is cash, 80 lakh is bank. So for 80 lakh, what is the deemed income? 6%. For 20 lakh cash, what is the deemed income? 8%. Correct? That was the thing. Sorry? That's fine. This is what? Percentage, what is this? Gross receipts or turnover? Will you take receivables in the gross receipts? Huh?
20 lakhs in cash and 20 lakhs in bank, 20 lakhs everything.
Here you see, it should be received when? On or before the due date. If you have received before the due date, no problem, you can take it in the turnover. Otherwise, no. But it's not to say it will come next year, no. It will not be part of the limits here this year. It will be coming next year because it was received after 139(1). Definitely it will come. So the question here was, people started receiving, let's say, 3 crores. I am money 3 crores. In 3 crores, 2 crores cash, 1 crore bank. So for 1 crore bank, 6%. 2 crores cash, 8%. So the thing is, the limit used to be, 2 crore. Then they said, I want an increase from that 2 crore. But you also need to ensure that cash is not collected. So to satisfy both, this is the amendment. If less than or equal to 5% of gross receipt or turnover is in cash, this you can write down, it's not there. If less than or equal to 5% of gross receipts or turnover is in cash, then the limit of this 44 AD is how much? 3 crore. I'll give you an example, don't worry. 3 crore. If greater than 5% of gross receipt turnover is in cash, then the limit will become reduced to 2 crore. So again, they are saying, do not get confused between 6% and 8%. That there is no change. What the change is? The limit. If it is less than or equal to 5% of gross receipts or turnover, 3 CR. If it is more than 5% of gross receipts turnover, 2 CR. This is the limit for what? Applicability of 44 AD. If you are earning 4 crores, this section will not apply. You may be earning 2.5 crores. I need to see whether your cash receipts is less than 5%. If it is less than 5%, then no problem. If it is more than 5%, then the limit only is 2 crore. This section will not apply. We'll take an example. Right. So this is the Finance Act 23 amendment. So how will the amendment pan out? Example, guys. If out of 3 crore, 1 lakh was in cash. If out of 3 crore, 1 lakh was in cash. 1 lakh divided by 3 crore, less than 5% or more than 5%? 1 lakh divided by 3 crore, less than 5 or more than 5? Less than 5. Since it is less than 5% of turnover, limit will be 3 crore or 2 crore? 3 crore. How will what is the deemed profit? For 2.99 crore, it is the deemed profit is 6%. For 1 lakh, it is 8%. Did you understand this? For 2.99 crore, deemed profit is 6%. For 1 lakh, deemed profit is 8%. Did we get this, guys? All of you? Yeah, it is 6 and 8. Because out of 3 crore, 1 lakh was in cash. Done? Now, in the above example, if 20 lakh was in cash, so 6.67% is in cash. It is more than 5%. So 44 AD limit will be 2 CR. Therefore, 44 AD will not apply in this case. Means what? Can you claim presumptive taxation? No. Why? Because your cash receipts is more than 5%. I hope you understood. Right? So this is the big change. Earlier, all these things were not there. So now you should first check what is the percentage of cash receipts to the overall to the gross receipts, including the cash receipts. So in this case, overall receipts was 3 CR, out of which 20 lakh was cash. 20 lakh by 3 crore is 6.67%. That is more than 5%. Hence, 44 AD limit will be 2 crore. Therefore, 44 AD will not apply. For the same question answer, will 44 AD come, AB come, tax audit? Same question answer, will tax audit come? Why? Cash receipt is more than, so now the limit will be 1 crore or 10 crore? 1 crore. So will tax audit come? Yes. Since 10 crore limit will not apply, 1 crore limit under 44 AB will apply. That is 44 A also will apply, 44 AB also will apply. For the same example, guys, if it is more than 5%, so what will come? 44 AD will not come, but you have to maintain the books of accounts and also get your accounts audited. Right? So this one small change, consequences are in all sections. Correct? One change in the Finance Act 23 in one part, consequences are other places. Because if you have, presumptive taxation here, do you need tax audit? If 44 AD applies, will 44 AB apply? No. So in this case, since 44 AD doesn't apply, I have to test whether 44 AB applies. And in this case, yes, it will apply. Right? Yeah. Yes. Which one? Yeah, correct. AD and AB, yes. Because if you see, in this, that 5% is added in both the cases, that's why. If it was not there, then it was not mutually exclusive. Can I claim a higher percentage of 6 or 8%? Yes, no problem. Like in 6 and 8 is the bare minimum. Can I claim 40% as my deemed profit? Yes, it's my wish, no problem. Like why would I want to do that? I'll say I want to have a good tax payout so that I'll get some good loans, etc. So people do that, no problem. Now when I am doing this 6%, 8%, can I claim depreciation? No. Because when I am doing this section, all the deductions under 30 to 38 will be deemed to have been allowed already. But I'll still have to maintain and check for the WDV of the assets. WDV of the assets used for this purpose shall be calculated as if the depreciation had been actually allowed. Ideally it's not allowed, but I'll calculate a WDV by just putting the figures to ensure that I'll get the correct WDV. What are the advance tax dates? 15th? 15th when? July, then 15th? October or September? September, then December, then March. So I have to pay how much? 15%, then 45, 75, 100. You are having a presumptive taxation and you are showing 6% of, let's say, 3 crore. You are showing 1.8 crore as 6% of how much? 3 crore. How much is it? 18 lakhs. On 18 lakhs, obviously, you are paying 30%. I mean, all that put together, let's say you are paying some 3-4 lakhs. Now, this 3-4 lakhs, you calculate that this year I will get this much, you already have a vision. You have not paid advance tax. Will 234 ABC apply? 234, C, will it come? So, advance tax, if you don't pay the installments on time, 234 C will come. So, here I am saying you have just calculated the year, you will be getting some 4 lakhs is the liability. So, 4 lakhs will divide into 15%, 45%, 75%, and that first quarter you need to pay. You didn't pay. Second quarter you didn't pay. Third quarter you didn't pay. So, what do you think? Last installment if you pay, it will not come. So, yes guys, if you see advance tax chapter, very interesting, and even here 7th point is very interesting. Here it's 7, there will be some here and there. An SSE who is covered under 44 AD is required to pay entire amount of tax by way of advance tax on or before 15th March every year. That's the dialogue they have given, which means they need not pay every installment. They can pay full shot before 15 March, which means in 234C, 234C is the interest. First quarter you don't pay, interest will be calculated from that. Second you don't pay, from there. Third you don't pay, it will be from there. Fourth payment is 15th March. So it will be computed from 15th March to 31st March, 1%. So what do you think? That 1%, for this guy, will everything apply or only 15 March to 31st March apply? 15 March to 31st March. So, very important thing is other installments will not apply to anybody who is doing presumptive taxation. Interesting point, which means under 234C, the maximum interest this fellow will pay is 1%. That is for not paying the last installment, and that to actually the last installment will be the full tax. From 15th March to 31st March only, that is that part of the year will be, part of the month will be 1%, no? That is, he will have to take it into account. That's an extra point. It's given in that advance tax portion here also. Eighth one again, when the SSE has declared income as per 44 AD for any given previous year and does not declare income under 44 AD for any of the 5 consecutive assessment years, then the SSE shall not be eligible to claim the benefit of this section for 5 assessment years subsequent to the year of such violation. So what he is trying to tell, if you are declaring 1 year, every year you have to declare. If you make a violation and you don't declare, which means that 5 consecutive years you have not maintained, which means for the next 5 years, will you get or not? No. Means you cannot just keep shifting as you feel like. 1 year presumptive taxation, next year non-presumptive tax, depending on the benefits. Once you stick on to it, you stick to it. And once if you lose out, how many years I'll not allow? 5 years. It's like the cooling period of auditors, 5 years. It is not allowed. And the SSE to whom the above is applicable and whose total income exceeds the basic exemption limit shall be required to maintain books of accounts and get them audited under 44 AB. So that's why it's not mutually exclusive here also. Why? If you are eligible to opt for 44 AD, but you don't opt for it, you want to go to the normal provisions, and it is well within the tax audit limits, you have just made some 20 lakhs. But is it crossing the basic exemption limit 2.5 lakhs? Yes. But since you violated the section, how did you violate? You did not opt for presumptive taxation. So they say nothing doing, please pay, maintain accounts, get them audited. Right? If you violate the section, you should maintain accounts, get them audited. Not if you cross the tax audit limits. If you just cross what? Basic exemption limit. You just cross the basic exemption limit. Deadly. Got it? So tax audit is needed even though you don't cross 1 crore, if you, or 10 crore as the case may be, if you violate 44 AD, which means you are opted for 1 year, suddenly you will remove the next year. No, they'll say, boss, if you are changing like this, kindly get your books audited. I want to see how you are changing like this so often. So you cannot do it. But is there a possibility of taking this even once? Let's see. Sir, current and eligible SC whose gross receipts does not exceed 2 crore in any of the assessment year furnishes the following information. 1.9 crore, 15.2 lakhs, income offered 8%. Here 1.8 crore, 14 lakh 40,000, 8%. Here 2 crore, 13 lakhs he has offered, which is 6.5%. I am going less than 8% here. Correct? So what should I do? Here I have offered more. Here I have offered more. Here, I mean, it is 6% and 8% as the case may be. So let's say there is cash payment of more than 5%, whatever. 6.5% I have offered, less than 8%. What should I do? Yes, here I have to maintain books and tax audit also. Right? Which means I have violated the section. The moment I violate the section, whatever may be the gross receipts, I don't care. Gross receipts may be 10 lakhs, I don't care. 5 lakhs, I don't care. What should I do? Maintain accounts and tax audit. In the sense? Okay. Okay, yeah. So the thing is, you see, the good point, next point it's covered there. Whatever you are saying, next point. So in this, let me complete this, in this note it's there. So since I got your question, Mr. Karan has not offered income as per the provisions of 44AD in assessment year 2021, is not eligible to claim the benefit of this section for 5 assessment year from 21-22 to 25-26. An SC is allowed to take the benefit of 44AD only when the gross receipts or turnover in a given year is up to 2 CR. However, in any given year, after declaring the income under 44AD, if the turnover of such SSC goes beyond 2 crore or 3 crore as the case may be in the new amendment, SSC cannot declare income under 44AD. In this case, it is not considered as a violation and he can claim the benefit if the conditions are satisfied. His doubt was, since I have offered less than 8%, I am getting the books audited, I am getting the accounts prepared. So can I continue in that, or will there be a cooling period? Answer is, I cannot continue, there will be a cooling period. On the other hand, if 1 year my income becomes 5 crore, is it a violation of 44AD or 44AD won't apply? 44AD won't apply. And next year my income falls below 3 crore. So can I continue with 44AD? Yes. Got it? So violation will only be if I don't follow the provisions of 44AD, provided 44AD applies to me. That will be only called as a violation. Got it? So AD, done. ADA, profession. There also amendment in Finance Act 23. ADA. Eligible SSE, profession under 44A, doctor, engineer, lawyer, all these things. Eligible profession. So I am a chartered accountant and I am into teaching. Should I go under 44 ADA? And if I split into multiple businesses, should I go under ADA or AD? Profession says accountant. You are practicing the accounting profession. So here you are into training. Isn't that a business? AD or ADA? Will it come under profession? Teacher, is it covered here? No, individual. Institution, that's a different thing. Individual. So here it says these things. Medical, legal, accountancy, engineering. Is there anything called teacher? Accountancy is you are a chartered accountant practicing as a chartered accountant. You are doing the profession. That's why I said yesterday that when the basics of PGBP are doing vocation, profession and business. Profession is where you require specialized skill in doing that. Okay. Teaching, now vocation and profession is merged into business anyway. So now will it come under 44 AD or ADA? What do you think? So this doubt actually I had asked Vinod Gupta sir. It was a valid doubt. So he said, good question, I always follow AD. So he has also been filing under AD because you can split into multiple businesses and only show 3 crores everywhere. So 2 crore, whatever the case may be. Yes, he is also filing under AD. And he said till now there is no assessment where they have told it is not possible. So yes, you can, no problem. So profession here is if you are practicing as a chartered accountant, then you can, or as a consultant if you are there somewhere, you can do. Otherwise, it will AD. Because in ADA, no, the percentage is 50%. In AD, 6%. What is better? 6%. Right? Yes. And also in ADA, the limits are less. In AD, the limit is up to 3 crore if you don't take any cash payment. In ADA, the limits are less. How much? 50 lakhs. So that is why. Correct, that's what. It's an open to interpretation, but till now there has been no problem, is what I am saying. No problem. People are filing under AD. As a business they are showing. So that's why they have a brand. Tarun's Brainery is a brand. Punarvas Jayakumar classes is a brand. So I am saying I am doing it under my brand name. So I am doing it as a business. So 44 AD, I can prove it. So if you have anything to prove, then you need to discuss and that assessment will come. Till now, nobody has got any assessment as such. Hence, I mean, there's no best judgment assessment or a scrutiny notice, nothing. Sorry? Why not? If you are into, I mean, the thing is, but the problem is if you are a chartered accountant, you cannot do any other business, no? You have your regulations. But if you are something else, film artist, you are doing under a thing and also have a small hotel business, why not? AD and ADA for the same person can be done, no problem. Right. That's what I am saying. Can you do multiple things? AD, ADA, yes, you can have, no problem. Can you have normal business also? Yes. Multiple businesses you can run, no issues. So eligible SSE, yes. Now PGBP, 50% of gross assets deemed to be income can be you can show IR also. Here it's 50%. But guys, Finance Act 23, this you can write down, it's not there. If it is more than 5% cash, 50 lakhs. If it is less than or equal to 5% of gross receipts, 75 lakhs. Finance Act 23. Finance Act 23. More than 5% of gross receipts in cash, 50 lakhs. Less than or equal to 5% of gross receipts in cash, 75 lakh. So in your book, just minute changes are there. Most of it is covered, minute changes. Yes. They can't opt for AD, you mean? AD, yeah. But the thing is, if you're doing business, you can. So here, if you're managing, if you're doing that profession, then you cannot. But if you're doing a business, you can. So I told you that if you're a, what do you say, a film artist, you're doing ADA. But film artist can also have his own business, no? Some other business. That will come under AD. That's why they will do it under a different brand name and not individually. They'll do a firm or a LLP. Then it's easier. Anyway, but LLP, can you claim 44AD? No. So they'll do a partnership firm or something like that. It will be easier. Otherwise, again, it is open to interpretation and you may get a notice for sure. This teacher thing also, you will get a notice. I may get. That's what I'm saying. But it is how it is. You can. Till now, no problem. Nirmala aunty has not seen this side yet. Yeah? Once that comes, that will also change. Done. So that is 44 ADA. Right. All this is done, guys. 44 ADA. That one extra thing is 75 lakhs. That's it. Nothing else. Next. Business of plying, hiring or leasing. What is this? Goods carriages. That is also there. So all these sections would be relevant. Okay. Goods carriage. So goods carriages, guys, very simple. Here, in case SSC who carries the business of plying, hiring or leasing goods carriage, who owns not more than 10 goods carriages at any point of time during the year. Any point of time during the year. So if you have more than 10, you cannot claim under 44AE. Which should have not more than 10. Means what? Less than or equal to 10. You own 9 goods carriages, right? Or let's say you own 8 goods carriage and you have 3 on hire purchase. Allowed or not? 8 you own, 3 hire purchase. Why not? You can be a hire purchaser. So what do you think? Allowed. People, what they were doing? They were having 1 owning, 40, 50 they were hiring and claiming under 44AE. Why? It is allowed, no? That's why they changed the law. Right? Yes. In the explanation they have given, see point number 6. An SSE in possession of goods carriage taken on installment or hire purchase for which amount is due in part or in whole also shall be deemed to be the owner of such goods. All this can be adjustments, question adjustments. Shall be deemed to be such owner of the goods carriage. That's all. What if you release? So the thing is, at the beginning of the year you have 11. Middle of the year 2, 3 you release. Then see the wordings again. Any time. Even if one day if you have more than 10, gone. Any time. Income shall be deemed to be 1000 rupees per ton of gross weight of unladen weight for heavy goods, 7500 for every other heavy goods vehicle. So basically you should take like this. Gross vehicle weight, if it is more than 12 tons, that is 12,000 kg, then it is 1000 per ton per vehicle per month or part of the month. So how much will you take as income? 1000 rupees per ton per vehicle per month or part of the month. So if you are using it for 7 months or whatever, if you have bought it only for 7 months, so at any point of time during the year, right, the beginning of the year you had 3 vehicles. During the year you added 6 vehicles. You added the 6 vehicles in January. So January, February, March, and all of them is heavy duty vehicles, 14,000, 15,000 kgs. So you will be 1000 into for those 3 months and 6 vehicles, 1000 per ton. Let's say 15 ton, 1000 into 15 into 6 vehicles into 3 months. Even if it is used for 1 day also per month, part of the month is also per month. That is what they are trying to tell. You bought it on 14th October 22 or you bought it on 14th October 23, used it on 1st March 24. Bought it on 14th October 23, used it on 1st March 24. Heavy vehicle, 1000 into 15 into 6 months or 1 month. Put to use or bought? Bought. Correct? It's very clear. Who carries on the business. It doesn't even talk about, it just says owns, doesn't say uses. You keep it there in the garage, I don't care. Which one? No, I never said he doesn't carry on. He doesn't use that vehicle. Doesn't use that vehicle. So that's the thing. And it's his choice. 44A is not a compulsion, it's your choice. You can do normally only, you may feel that, okay, since I'm not using it only, let me compute normally. That only is less, this is more. So I'll use that or normal. So example, you see, Mr. J has bought 2 vehicles which weigh 7,000 kgs. If it is less than 12,000 kgs, no, it is 7,500 for other heavy goods vehicle. 2 vehicles 7,000 kg on 5/4/22 and 2 vehicles which is 17,000 kg on 37/22. In this case, income under 44A shall be calculated as follows. 2 vehicles on 5/4/22, 2 vehicles into 7,500 rupees into 12 months. 2 vehicles on 37/22, 2 vehicles into 1000 per ton into 17 tons into 9 months. July till March. See, August, September, October, November, December, January, February, March, 8 months. 30th July, 1 day less, that's all. That will be taken as 1 month. Deadly. 9 months. Same, 30 to 38 not allowed, depreciation not allowed. So they will ask you this in 44 ADA, entire amount of income tax, all those things. So once in MCQ they asked, person who is into flying of vehicles use presumptive taxation and his income tax at the beginning of the year which he assessed was 7 lakhs. He did not pay any of the installments, but he cleared everything on 14th March, or let's say he cleared everything on 22nd March. Interest is 1% or 3%, 3%. Sorry, 1% or 1% only, or it is 1% into those 3 months for every single time. So is it from 16 to 31st or everything? So here we missed out because 44A doesn't have that exemption. Small points. Point number 5, guys. Point number 5. My notes has everything in points. The SSE covered, did you get it, guys? Point number 5. The SSE covered under 44AE is required to pay advance tax as per provisions of chapter 17C, all 4 installments. Only 44AD and ADA get this benefit, not everybody. Income to be calculated even if the vehicle is not put to use, as discussed. Done. Then there are other quick charts, we'll finish it off, quick ones. Presumptive taxation for non-residents and foreign companies. Quickly we'll finish this. So what is this? Shipping business. Eligible SSE, non-resident engaged in shipping business. What is the amount PGP? 7.5% of the amount specified. So, amount paid or payable, whether in India or outside India, for shipped at any port in India, or amount received or deemed to be received in India, carried out by the SSE outside India. So basically, if from outside you are coming and delivering goods in India, then also you need to pay, you have to consider that income. Or basically you have carried out everything outside India, but the income is deemed to occur or arise in India, which means you have a P here. So if you see there, Mr. Jim is a non-resident and is engaged in shipping business. He received 10 crore on goods which were loaded onto the ship from a port in India, of which 4 crore was received in London. He also received 6 crore for goods loaded at Miami. Out of this, 2 crore was received in India. So, 10 crore goods loaded from a ship in India. So, I don't care where it is received. Everything happened in India. So, full 10 crore will be accrued. In the other case, he did it outside India. In USA, he did it, for which 6 crore was goods loaded at Miami and 2 crore was received in India. Since it was received in India, 2 crore only will come into the picture. So, it is 10 crore plus 2 crore, 7.5% of 12 crore, that is 90 lakhs. You may raise a doubt with respect to another section that you saw, that is section 172. In the beginning of the class only we had discussed 172, that's what, if you don't have a permanent establishment in India, by the time you are going out only, they will recover the tax. So, what's the minute difference between 44B and 172? 44B is a charging section, 172 is a recovery section. It's not a charge, you are going out, I am recovering, that's the main difference. In 44B, it can be shipped at a port in India also, outside India also. That Miami example, but only 2 crore was received in India. But in 172, it should be shipped in India. Taxation, it is 7.5%. You can take as the income, and after that normal tax rates. Whereas here, flat rate 40% plus 4% cess, and wherever needed, surcharge. 44B overrides 28 to 43A, means it will override the depreciation, etc. Interesting to note, 172 overrides the entire Income Tax Act. Because you are anyway going outside India, you pay and go. Can that person going outside India say, I want to set off, carry forward losses? No. Like get out, you are one shot, get out. But here 44B, can you do set off? Yes, set off is in 70 plus sections, not in 28 to 43A. Will you get chapter 6A deduction for section 44B? Yes, because chapter 6A deduction is 80 onwards. Will you get any deduction for 172? No. And 44B is always assessed at the assessment year, whereas recovery section 172 is recovered in previous year. Assessment also happens in previous year. That was a change there we saw. part we'll see. So 172 will not apply whenever DTA is in force and all those things. And for 172 section, there is no concept of TDS. It's a recovery section. I'll recover the tax and you can move on. Operation of aircraft. And here what they were doing, here in this case, amount specified is there, no? That is the amount payable and all those things. So what people were doing, the ultimate amount is what? Amount specified. So if the amount specified is 10 crore in this example, so it's 10 crore. So to avoid 7.5% on 10 crore, I was telling only 1 crore is the services, 2 crore is demurrage, 1 crore is loading fee, 1 crore is something. They gave different names and they claimed only 7.5% of 1 crore. They changed the nomenclature. So finance minister changed the law, right? It said amount will include demurrage, handling charges, any other amount of similar nature. So you can take whatever name you want, I don't care, I will charge everything into tax. 7.5% will be the income on that normal rates. Profit and gains from business of operation of aircraft. Non-residents engaged in the business of operation of aircraft. PGBP, 5% of the amount specified. Same, any place in India, outside India, same way. You see the example here. Mr. Sandy, non-resident, operates an aircraft between Gulf and Chennai. He received the following amounts in the course of business. 2 crore in India on account of carriage of passengers from Chennai. Covered or not? Yes, received in India. 1 crore in India on account of carriage of goods from Chennai. Yes. 3 crores in India on account of carriage of passengers from the Gulf. Yes, because it's received in India. Fourth, 1 crore in the Gulf on account of carriage of passengers from India. Yes, activity is happening in India. Yes. So all these things you will get. Total expenditure incurred is 6.75 crore. So overall total turnover 7 crore and 5% will be 0.35 crore. Will he get any expenses? No. His expense was 6.75. So if you went to the normal route, 7 minus 6.75, 0.25. Here it's 0.35, which is better. 0.25 only is better. But you have to maintain all those accounts, everything there. So 44 BB is supplying services or facilities for hiring plant and machinery used in the prospecting for or extraction or production of mineral oils. So non-resident engaged in the business of supplying services or facilities for hiring plant and machinery used in prospecting or extraction or production of mineral oils. So if you are supplying services or hiring the plant and machinery, in fact, in the Godavari basin, when they were mining this Reliance, they used some Swiss companies' services for mining. Then they didn't have their own production facility to manufacture the asset to extract oil. So they used that. You can do it. So in this case, that Swiss company is earning money, right? By hiring out stuff. Yes, 10% of the amount specified. Same. Mineral oil should be mined in India, or amount should be received in India for something that is carried out outside India. Very, very simple. So it says here, no, services, supplying services. In the exam, they can ask you, manpower and plant and machinery is covered under 44 BB. What are the services? Manpower services and plant and machinery renting out, all those things. Whereas guys, for extracting oil, you need some engineering brains also, right? Know-how, you need expert services, how to extract oil. The technical services and the entire plan for extracting oil is not covered under 44BB. It is covered under 44DA and 115A, international taxation. Right. So when I say services, what services do I mean? Manpower and plant and machinery. If they ask you technical services for extracting and all that, you should not write this section. It should be 115A, that is international tax. Next, civil construction. Eligible SSE. Foreign company engaged in the business of civil construction or turnkey projects. Turnkey projects means what? I'll come and tell you, you do end to end. When the project is come to, where I have to start it, I'll just turn the key and start. That's what it actually means. It means quick ignition. Basically, made to order services, projects. So, with this business of civil construction or erection of plants and machinery, anything, any commissioning work in case of turnkey projects should be approved by the central government. PGBP is 10% of the gross amount paid or payable to the SSE. So, it is 10%. So, if it is less than 10%, 44 BBB will come, for which you should go for the audit, etc., because it says 10%, minimum 10%. If it is less than 10%, I can go with accounts and audit. If it is greater than 10%, no problem. If it is exactly 10%, if you have given exactly 10%, can AO check and tell it is more than 10% or it's whatever you have declared? Does AO have the right to check this, whether it is more than 10%, etc.? There was a case law where they said not allowed, because in the assessment procedure power, there is no power to check the accounts under 44 BBB, because accounts only are not maintaining, right? There has been one amendment to 44 BB and BBB, which is not there in your notes. We'll read. Both sections BB and BBB provide that assessee may claim lower profits and gains than the profit specified if he keeps and maintains books of accounts and other documents. We just saw here. If it is less than 10%, accounts and audit you have to do. Due to the above provision, taxpayers are able to opt in and opt out of presumptive scheme in order to avail benefit of both presumptive and non-presumptive income. That is what you told. 1 year this, 1 year that. Those restrictive provisions are only there in 44 AD, not in 44 BB. In a year when they have lost, they claimed actual loss as per books. In a year when they have higher profits, they have presumptive scheme to restrict to 10%. They were doing this. Conceptually, if SSE is maintaining books and claiming losses, then he should also disclose profits as per the accounts. There is no justification. Hence, BB4 and BBB3 have been inserted from 1/4/24, that is assessment year, to provide that notwithstanding anything contained in 32(2) or 72(1), that is your depreciation, additional depreciation part, and also your carry forward of losses. Where an SSE declares profit and gains in accordance with the provisions of BB1, BBB1, no set off of unabsorbed depreciation and brought forward losses shall be allowed for such previous year. Unlike 44 AD, this doesn't have a scheme that if you once you opt out for 5 years not opt out, that's not there. So here what they were doing, whenever there is loss, normal provisions and set off. And whenever there is profit, jump to this. So now what they are saying, no set off of unabsorbed depreciation and carry forward the day you are doing under 44 BB and BB1. So basically it will not be allowed in that previous year. So that you can just note down anywhere. No unabsorbed depreciation and no carry forward benefit. So apart from that, I have given you some important adjustments also here. Can go through. So these are all additional. We have covered most of it, but you see, British Airways, non-resident in India, earns 2 crore by way of charges for transportation of passengers and goods from Bombay to London during the previous year, 31/3. Expenses allowable under income tax amounted to 3 crore. Whether the loss of 1 crore in the previous year will be allowed to be carried forward. What will apply? BBA will apply. And PGBP of British Airways shall be 5% of 2 crores, that is 10 lakhs. So, will you be allowed to be carried forward? Loss, etc. What is the amendment that we saw now? Was it for BBA? No, it was only for. Is it for all the three? Check. Yes, it was only for 2 sections, BB and BBB. This is BBA. By the time we end, BBA, BCom, everything will do, right? Yes. Deadly. So next, that's what. These are important adjustments you can go through. Mr. A is an agent of Mr. B. During the year, Mr. B transferred certain goods on consignment basis to Mr. A. Title of the goods, however, remained with Mr. B. Mr. A effected sales of 200 lakhs as agent. This you see, I'll discuss this one part later because there is talking about, I've given it here, special cases. There are 2 here only, I'll show you quickly. I've added it here in the current notes. Here, commission agents. CBDT circular 1986, before all of us were born. It's called Kacha Aratiya and Pakka Aratiya. This is the name in Hindi. So, what is this? Pakka Aratiya is a principal to principal relationship for him. He will take into account all the losses. Pakka means Kacha is raw, Pakka is full blown. So, Pakka Aratiya is a guy, agent. It's like a Del Credar agent, if you remember. He will take over the, risk of any bad debts also. Basically, it's like a principal to principal relationship. There's no agency relationship. Kacha Aratiya, on the other hand, turnover does not include the sales affected on behalf of the principals. Only the gross commission has to be considered for 44AB. So, it will not include whatever he sold on behalf of the principals, and only the commission will be my turnover. Whereas this guy, Pakka Aratiya, it's like you have sold the goods to me and I am selling the goods to somebody else. You sold it to me, 1 lakh goods, you sold it to me for 1,10,000 and I am selling it for 1,40,000. So, my turnover will be 40,000. Kacha Aratiya will be very simple. You will sell 1,40,000, I will get commission of 20,000. So, my turnover is only 20,000. That's the difference. So, like that adjustments they may ask, you can go through that, no problem guys. Done. And last but not the least, there is regarding films also they may ask you. I have already released a video, just stick to that video, more than sufficient. That video is a 5-minute animation video, that's all. So, you can check about production or distribution of films. So, this also sometimes they will ask you. I do not have the time to sit and do everything, but sometimes they can ask you about this provisions relating to production or distribution. For all the things, like in the whole history, twice they have asked, that's all. About the production or distribution, what is the tax related. So, I have a video animated byte, you can go through that, you will understand that, no problem. So, that's about it guys. Finally, after 2.5 days, we finish PGBP. Now, if you see the questions, you will be able to answer that, not to worry. And there are other pointers also, of course, we don't have the time to sit and all this, you can go through, so that all the adjustments will be covered. So, we have covered everything in extremely in-depth fashion. So, after the break, we'll start off with capital gains, right? Okay, thank you. So, since there is just an hour left, so what I thought was, instead of starting off with a new chapter, capital gains, which anyway has to continue, we'll start it afresh in the morning. We'll find out, we'll do some hidden adjustments or other adjustments in clubbing of income and set off. because whatever time permits till the time is there, we'll finish it off. In clubbing also, every time there is 1 or 2 questions, and it's not going to be like normal, simple, straightforward ones. We need to figure out whether it's applicable or not. So in the clubbing chapter, which is there in my F1, F2, F3, we'll find the entire clubbing chapter, of which in the end also I've given some interesting applicability. So these are, if you study this, all the adjustments will come from these few pages. So we'll finish this off and also set off and carry forward the basics also we'll try to do, and then you can tomorrow onwards you can start off with capital gain. So finish this clubbing part and then we'll go to capital. So clubbing of income. So every time in every question there would be few areas where clubbing would definitely come. So it's a very small concept but important concept, and in CA final there are some additional adjustments is what we need to see. So what is clubbing? Basically when you have a huge tax burden, you tend to shift it to your spouse or related parties who do not have that income. So to curb that from happening, we have this clubbing provisions. So there are 2 types of clubbing. One is income without transfer of the assets, and the other clubbing is transfer of the asset itself. So if I am transferring income without transferring the asset, that is one part of the story. Second is I am transferring the asset itself. So when I am transferring the income without transferring the asset, it is either called revocable or irrevocable transfer. Revocable means what? I am trying to tell that I am going to shift the income to you. So, but I can cancel that shifting anytime. I can cancel that portion anytime. Irrevocable means what? Where I want to shift it to you, but then I do not want it ever to come back to me. In this concept, we had not done in the basics 2 concepts. So I would want to bring your attention to that. On purpose, I had not done it, which we'll do it now. This is diversion of income versus application of income. So in the basics chapter, last part, diversion versus application. So what do you mean by diversion of income? What is application of income? Application of income is what? You get your income and you will use it for whatever you want. You may use it to watch a movie, you may use it to have a masala dosa, whatever. That is called application of income. Diversion of income, on the other hand, is parting with the income at the source itself. Parting with the income at the source. This is also called diversion of income by overriding title. Means you do not even have ownership of that particular money. I'll give you an example. You tell me whether it is diversion or application. So there is a person who is undergoing a divorce, and as per the undergoing a divorce, not yet divorced. So he decides to pay some maintenance to the spouse. So the thing is, money will come to him and he will transfer to the soon to be ex-spouse. Now what do you think? Is that application or diversion? Application. What about this? I'll say I don't even want that money to come to my account. I'll tell my company who is paying me money, will say, when you are paying me, one part you pay to the ex-wife, other part you pay to me. Is that application or diversion? That is still application. That's not diversion. It's the same. Either you give it to me, I'll give it to her, or I'll tell my company to pay directly. That is still application. Then what is diversion? Diversion is where your title only is lost. Means you will not have any ownership on that money. For example, if a father tells that I will give in the will, I will write property in your name, provided, main condition, you will be earning some money from this particular property. In that 50% should go to your mother. If you agree to that, only then I will give you the property, which means you have to share 50% with your mother, otherwise this property does not belong to you. And the day you breach this agreement, you will no longer be the owner. Do I have a title on that 50%? Never. This is called diversion of income. So when any 1 rupee is also being earned from that property, my actual ownership is only to the extent of 50%. So 50% is going to my mother. This is the concept of diversion, that is overriding title. Same example I have given here. Both our examples are there. So what I am trying to tell is, clubbing will happen only when there is application of income, right? Because if it's diversion of income, it's not clubbing. Like if the court says that the amount should go to the mother 50% and you 50%, does it mean that I will get 100% and I am shifting my income to my mother and splitting the tax? No. That 50% belongs to my mother. Hence, that is diversion of income. Very rarely it results in clubbing. Diversion of income generally never results in clubbing. Application of income is the deal which results in clubbing. So rather than you giving it to me, I am asking you to give it to somebody else. Now that should be clubbed. Why am I asking to give it to somebody else? To reduce my tax burden. That must be clubbed, is what the lawmaker also says. So with this basic knowledge of application versus diversion, let us go into clubbing. Let us go clubbing. For other than CA students, it's different. Alright, we are dying here. Yes. So transfer, section 63. Income without transfer of assets. Income without transfer of assets. So here I am not transferring the asset. Section 60. It is always clubbed at the hands of the transferor, person who transfers. Second one is revocable transfer. I am transferring the asset here. Transferring the asset. I may transfer the asset to the spouse or the son's wife, or there can be some other cases of transfer. There can be some other cases of transfer. So what are the other cases of transfer? We will see. The other cases can also be called as revocable transfer or irrevocable transfer. Irrevocable transfer means what? I am transferring the entire asset to a person and telling that I do not want any right over that asset. Is that clubbing or is that gift? I am giving the asset to you and telling at any cost I don't want it at all back. It is yours. Clubbing or gift? Gift. I am actually transferring the title to you. So will clubbing apply there? No. Revocable transfer, generally, yes, it will. But then also I need to see in what cases clubbing will apply. So all this relates to CA final itself. Spouse. If there is only agreement to live apart, means there is a proper legal separation, then clubbing will not apply. Why? Because the title only goes to the other person. Annulment of marriage, the court orders 50% of the property to be given to the spouse. So hence, in that annulment, clubbing, will it apply or not? No. If it is voluntary in nature, where legal separation, but it is, as I told you in my example, where this is an agreement, voluntarily we are living apart. So in that case, whatever amount is given to you, clubbing will apply. If the spouse buys from the other spouse any asset at full consideration, market value, is there any clubbing? No. Clubbing will not apply. But if they buy for inadequate consideration, if they buy a house for inadequate consideration or other than house for inadequate consideration. So what used to happen was, in house property, you can only take 2 homes as SOP. More than 2 homes, if you have SOP, it will be called deemed LOP. Right? So if I have 3 homes, I will take 2 homes as SOP, 1 home will be deemed LOP. People were very smart. So the husband used to own 3 homes, but the 3rd home, he always used to take it in the name of the wife. So now the thing is, ultimate beneficial owner is the husband, but the wife takes the third house. So the question here is, clubbing will apply or not? As per Income Tax Act, if you own more than 2 homes, the third home will be deemed LOP. So here, do you own 2 homes or 3 homes? He is telling each person can own 2 homes. Let's say I have 4 homes. 2 I will keep, 2 I will give to my wife. So then in that case, you are avoiding what? House property tax. Because in SOP there is no tax actually. But then will clubbing apply? Any rental income that you are getting? What do you think? This was a question. So they amended section 27 of house property. Correct? And they called something under section 27, they brought about a concept called deemed owner. Under deemed owner, they say the moment you cross 2 homes, if you have 3 homes, 4 homes, and if you are shifted 2 homes to your wife or anybody close to you, relative, then you are only deemed to be the owner. Even though she is the owner on paper, and for all intents and purposes she is the owner, but beneficial ownership belongs to you only, and hence, what does it say? Basically, to SOP remaining to LOP. When you are already taxed under house property, will clubbing apply? No. So for homes, house, clubbing will not apply. What will apply? Section 27, deemed owner. For other than house, 6414, other than house, what will apply? Clubbing will apply. For other than house, clubbing will apply. Then actually many other laws will come. Benami provisions, Benami Property Act also will come. Prohibition of Benami Transactions Act. So there unfortunately in Benami transactions you can still hold it in the wife's name, no problem. It's not a violation of Benami. So here again I need to see the source rule. Do you really have the source or you are taking it in the name of the wife? So technically speaking, if you have the house in your name and then shift it to your wife, then 2 things will come. One is this one, the gift, inadequate consideration, right? So here we are talking about the revocable transfer, inadequate consideration. So if it is irrevocable transfer, then my 56.210 will come. 56.210 is what? Gift taxation, which we will do after we do capital gains, because that's how it's linked. So in your question, it depends on first off whether it is adequate or inadequate, and secondly when it was done. So technically if it is done at the beginning only, it is not violative of actually any other provisions. So it will not be considered as deemed owner. So that's why you can buy it in the name of the wife only. Even under Benami prohibition of Benami transaction law, anything bought in the name of somebody else, if you can show the source of that money, no problem. You can buy it in the name of the spouse or children, that is allowed. You cannot buy it in relatives' name and all, just your spouse and your relatives means some uncle, auntie's name and all, you cannot buy, right? Cool. Next, son's wife. So basically here spouse is covered and the daughter-in-law is covered. Adequate consideration, no clubbing. Inadequate consideration, house other than house. In this case, guys, deemed owner will not apply. Deemed owner will only apply to spouse, not to daughter-in-law. In the current scheme of things, they have to change this. You cannot just say daughter-in-law, you can add son-in-law also. But the thing is, this was 1960s law. So at that point of time, that was how it was, right? So please don't go all feminist on me. This is the law, right? I am not telling anything. So this is the law, son's wife. Why not, what do you say, daughter's husband? Yes. So other cases again depends whether it is revocable transfer or irrevocable transfer. Revocable transfer we have already discussed now. What about irrevocable transfer? These are all small adjustments I am doing in the adjustments in the question. So irrevocable transfer is not at all taxable at the hands of the transferor till the lifetime of the transferee. I am giving the gift to you and saying that I do not want it back only. You only keep it. The problem happens is if you die, what happens? It is revocable till the lifetime of the transferee, not my life, till your life. If I die before, good. Will anyway, I will transmit everything to you. But if you die before me, what is the thing? If you say till the lifetime of the transferee, yes, then it is taxed. So that's what we'll see. During the lifetime of the transferee, we'll see what happens. Generally, it is not taxable, guys. Till the lifetime of the transferee, it is not taxable because I have actually gifted it off to you. You can do whatever you want with it. But I did not intend to gift it. I have just taken it in your name, and this is not the spouse's name, somebody else's name. But all the benefits, who is getting? I am getting. This was the classic Jayalalitha and what is that Chinnamma's name? Shashikala. Shashikala's a classic case. All her properties was bought in her name, Shashikala's name. No source also for Shashikala. Both of them were in jail, right? This is for this reason only, actually. So they said, show me proof, misappropriated assets. How is it possible? Your source income is showing something, you are showing something else, crores you have made money. How is it possible? So yes, if it is done for the direct or indirect transfer benefit of the transferor, Jayalalitha, then it is clubbed in the hands of Jayalalitha. It is during the lifetime. That is what it is. Taxed or clubbed after the lifetime of the transferee. Now, the thing is, I have transferred to you, but you die. In that case, what will you do? So, I had given an irrevocable transfer to you during your lifetime. Till your lifetime, no tax for me, no clubbing. So, whatever income you enjoy, you keep the money, you pay tax, done. But now, once you die, the irrevocable transfer is only till the lifetime of the transferee. Now, if you die, then the asset will come back to me. Will it be taxable then? Yes, obviously, yes. So, there used to be one thing, I opened a trust. Invested some money in the trust. And some asset also I gave it in the name of the trust, some building. I opened a trust and asset I transferred in the name of the trust. That trust gave that building on rent. 1 lakh rupees, 2 lakh rupees per month was got. That 2 lakh rupees I distributed to, that trust only was for the benefit of my spouse. So, who are the trustees? Me, my spouse and my children. This is basic classic estate planning of the rich people. So, I have created the trust and that house I have taken in the name of the trust. Trust has given the house on rent, rental income 2 lakh, 3 lakh, whatever is giving. That is given to the spouse. Clubbed or not clubbed? All exam adjustments only we are discussing, nothing else. Clubbed or not clubbed? It was actually not clubbed, then they amended it. They added trust also. They said if you open a trust, transfer some property in the trust name, and then trust is now investing or rather giving it on rent and getting the money, clubbed or not clubbed? Clubbed in the hands of the main guy who actually transferred. Then that was one thing. Second type of clubbing is, let's see here, given it here only, this, see this example. Income of spouse arising to spouse, son's wife, minor child and HF to be clubbed. So, if you see Mr. Shah Rukh Khan along with his relatives, that is spouse, brother, sister, lineal ascendant, descendant, has substantial interest in a company, in an interior designer company. And Shah Rukh Khan has substantial interest in that company. What is substantial interest? more than 20% equity shares in a firm, more than 20% share in the partnership. So Mr. Shah Rukh Khan has substantial interest in the interior designing company, and this interior designing company employs Gauri Khan as an interior designer, salary of 5 lakh rupees. She is qualified. If she is qualified, is there any problem if she is earning 5 lakh? No. So will it be clubbed? No. But in the hands of this company, which is engaged in interior design, now that you have done with PGBP, which other section may apply? 48 will apply. In case that 5 lakh is not worth to be paid, she is deserving only 3 lakh in the open market, but then 5 lakh they are paying, 2 lakh will be disallowed. That is anyway, goes without saying. But will this 5 lakh be clubbed in the hands of Shah Rukh Khan? No. On the other hand, if Gauri Khan is not at all qualified, but she is joined as the interior designer there, then any amount paid 5 lakh rupees will be clubbed in the hands of Shah Rukh Khan. Plus full 5 lakh will be disallowed in the hands of the interior designer company. So isn't it double taxation? Yes. Correct, no? Double taxation. 5 lakhs I am paying to the company, to her. It will be added back to my income. And that income again is clubbed in the hands of Shah Rukh Khan. Double taxation. So clubbing, does it result in double taxation? Yes. Provided you decide to break the law. Otherwise, if there is no clubbing, then no point. No problem at all. Yeah. Yes, correct. That is only for the that there is no clubbing at 48. Now, at the time of, after marriage, the husband transfers an asset to the wife, and in a month or two there is divorce. Whatever she is earning, will it be clubbed? These are all decided cases only. So, at the time of, at the time of giving a marriage, when I transferred the property, you are married. After that, nothing. Yeah, so if you see, there is a case here, John Thomas versus C8, Supreme Court decision. The marital relationship between husband and wife should exist both at the time of transfer of asset and at the time of accrual of income in order to attract the clubbing provisions. Miss Alia received a gift of 10 lakh from her boyfriend Mr. Ranbir. After they both got married, Ranbir gifted Miss Alia another 5 lakh. In this case, rupees 10 lakh will be taxed in the hands of Miss Alia. There is no marital relationship. 5 lakh will be taxed in the hands of Ranbir as Mr. Alia and Mr. Ranbir and Mr. Alia were married and this was transfer of asset without consideration to spouse. All those things. So, one more example. The husband gives the wife a house, no problem. It's in the gift taxation, it's there. And then you will give it on rent, you will get some money. Is that clubbed? That will be clubbed, obviously. So, because obviously it's inadequate consideration, that's fine. Income will be clubbed. But that money I will use and I will buy some shares of a company and get dividend. Will that also be clubbed? No. So, income is clubbed. Accretion to income will not be clubbed. So, these are some of the hidden points. So, income of the asset transferred is clubbed, but not the income on the accretion to the asset. So, you give me, husband gives the wife 20 lakhs, wife goes and deposits in the fixed deposit account. correct, money, or she converts that into gold and she puts that in a gold deposit account for which she gets some interest. So she has converted the entire asset what I received into something else. I received cash. Cash is converted to gold and I put that gold in the gold deposit account for which I am getting 6%. What do you think? Clubbed or not? Change the entire structure. Cash is converted to gold. See this. Pelleti Sridevama, Supreme Court, all Supreme Court cases. Where an asset transferred by spouse is converted into another form, income derived from such converted asset also shall be clubbed. Why? It's a direct income. You may convert to anything that you want, but if you are earning income from the direct thing, yes. Is it an accretion? No. It's not an accretion. That's not an accretion. Like for example, I gave the gold, I got the money, that is clubbed. But from that money I bought shares, I got dividend. Will that be clubbed? No, that is accretion. Here, just because I changed or converted another form, it is not called, it is, cannot say that there is no clubbing. So it says, one more thing is, here if you see, it says adequate consideration, no clubbing. So the husband gifted to the wife and the AO said, I'll club it. Husband said, no, there is adequate consideration. How? Natural love and affection. Mind you, in Indian Contract Act, anything that you give out of natural love and affection, it is deemed to be adequate consideration. So is it the same in income tax? What do you think? See all this, yeah. Is it the same in income tax? Is it adequate consideration? Wife is, having knife point behind. Adequate consideration. What do you think? Yes or no? Right? So if you see, again, everything is, whatever I am discussing is not some figment of my imagination, all Supreme Court cases. Tulsidas Kila Chand, Supreme Court. Natural love and affection may be good consideration, but not adequate consideration. Judge is experienced. Yeah? Good consideration, but not adequate consideration for the purpose of 64(1). So that will definitely be clubbed. So Indian Contract Act is different from Income Tax Act. Then during demonetization, Modi told, no, if you have some money in your house, how much was that? Some 2 lakhs, 1.5, 2 lakhs, something he told. Up to 2 lakhs you can keep, 1.5 lakhs I guess. So demonetization scene, up to 1.5 lakhs in your house, if it is there, no problem, you can keep it and then you can exchange it. Up to 1.5, 2 lakhs you can exchange, no problem, because I understand he said generally the spouse gives some pocket money that is actually called pin money for the savings. So that pin money, is that also clubbed? No. So that is also R. Dalmia versus Commissioner of Income Tax, where the wife saves out of the money provided to her for household expenses, is called pin money. Amount will not be treated as an asset transferred by the husband and clubbing will not apply. All these things, it will not apply. Apart from that, some other provisions. If I give money not to the wife, but I will directly deposit it as a capital in the firm in which the wife is a partner. So the wife runs a partnership firm, I will not directly give it to her. Or even if I give, she will directly deposit it as a capital. Then is it clubbed or what? Capital contribution in a partnership firm, income derived, salary, no clubbing. Share of profit is anyway exempt. Since I am investing in capital, that interest in capital will be clubbed. On the other hand, if I invest in business, means I will not give it as a capital, but it is invested in the business. Then proportionate income clubbed if investment is forming part of the capital as on the beginning of the financial year. The beginning of the financial year, if it includes, then only it is taken into account, otherwise no. Not at the end of the financial year. Not at the end of the financial year, it is only at the beginning of the financial year only to be taken into account. Same for this also, you see. Mr. Bunn gifted his wife Mrs. Hun 2 lakh on 1/4/2021. Mrs. Hun ran an interior design studio and invested the gift received from her husband in a studio. She started her business in 2020. Opening capital on 1/4/21 was 5 lakh. Opening capital 5 lakh. Add gift received from Mr. Bunn 2 lakh. Total capital as on 1/4/21 7 lakh. Profit for the year 21-22 is 3 lakh. So for Mr. Bunn, of the entire capital here in 7 lakh, 2 lakh belongs to him. So what will be profit? 3 lakhs. 3 lakh profit I earned for entire 7 lakh, but minus 2 lakh. What is the proportionate profit? So 2 lakh into 3 lakh by 7 lakh. 85,715 is Mr. Bunn's amount account, which is whatever Mrs. Hun earns clubbed in the hands of Mr. Bunn. And for Mrs. Hun, it is the balance. Income of minor child also. Which one? Then what do you think? Will it be taken in that capital? No. That's why it's very clearly given here. You see. If it forms part of capital at the beginning of the year. If you give it in the middle of the year, that year will clubbing apply? No. Next year will it apply? Yes. Got it? Because it's forming part of the next year, opening capital. Income of a minor shall be taxable in the hands of either of their parents. When the marriage of the parent subsists, income of the minor child shall be included in the income of that parent whose income is greater than the two. If it does not subsist, then whoever is maintaining the child, it will go there. Now, child includes what? It includes stepchild also, adopted child also, but does not include any illegitimate child. So, it should be only stepchild or adopted child is what they say. There is a stupid exemption which is immaterial. How much? 1,500 exemption. So, this generally we miss out. Even the examiner has given a comment that whenever clubbing applies, students do not give this exemption of 1,500. So, for a minor child, there is a 1,500 exemption. So, if the clubbing income is 10,000, it is 10,000 minus 1,500 you should do. 8,500 only is clubbed. Minor won the lottery. Exemption under 1032 cannot be availed by the parent. Lottery you won. So, 1,500 will not be. So, in case they ask in the exam lottery winnings, 1,500 don't give. It's all MCQ questions. Income of minor married daughter would be clubbed in the hands of either parent. Next question is, why not the husband? What do you think? If he is a major. See, all these minor etc. you may say it is illegal, your marriageable age etc. But still in many parts of India it happens. That's why, and whether it's practically relevant or not for us, institute though will keep giving. Right? So, the thing is we need to study. Minor married daughter, ideally it should be clubbed in the hands of the husband only. If the husband is a major. Only when the husband also is a minor, then only it will be clubbed in the hands of either parent. Clubbing shall not apply if the minor child is suffering from any severe disability under ATU. And Prithvi Shah at the age of, or Yashasvi Jaiswal, the age of 15, 16 only, got 2 crore IPL deal. Will that be clubbed in the hands of the father? Yes, out of your own skill, right? So then in that case, obviously it will not be coming. Should have seen all these little champs and so many like music shows and all these acting workshops where young children act and they get money. So that will not be clubbed at all. It will be in their own name. But then will they have to pay the tax? Yes. Who will pay the tax? They won't even get the PAN, no. Sorry, they will not even get anything else. Like will they be able to do filing of returns? Yes, representative. Who will represent? Yes, guardian, legal guardian. Guardian will be parents or anybody who is a legal guardian. They will have to file on behalf of the child. Will it be clubbed? No. In whose name? It's a child's name only. But who is filing it? Guardian. So Yashasvi Jaiswal actually bought a 5 crore house recently, and let's say they are given it on rent. Will that money be clubbed? Minor is assumed, 17-year-old. He only bought from his own money, but income is getting clubbed or not? You see, any investment made out of income of the minor which cannot be clubbed with that of the parents. Interest income, any investment made will not be clubbed, but interest income earned on such investment will be clubbed with that of the parents. So investment will not be done. So if you invest in shares or invest in PMS, mutual fund, whatever return you are getting, that will be clubbed. No, not rent, interest income only. Again, interest income only, nothing else. Yes, because there you will not get interest, you will get a return. Correct. Only interest income. If he gives a loan as an investment and that if he gets money. Because earlier they used to show that the child only was earning out of his skill. And then from there they used to divert the funds. That's the reason why they have inserted that point at interest income. Again, it's illogical now. It was all 70s, 80s it used to happen. They have to change all this. In fact, salary also they should change the entire chapter. Still, unfortunately, transport allowance 800 rupees, children education 300 rupees and all is still there. 300 rupees per month. 100 rupees is there one. And Sodexo coupon 50 rupees per day. Uniform allowance, it's so stupid. So I really hope that entire chapter gets deleted. Just simple, keep it simple. Or whatever income you want, some basic 25% flat. It should be like that. Who will sit and study all that? To teaching also is boring. To teach that salary chapter, it's a pain, right? Horrible. So I hope at least Nirmala madam listens and does. She's told now in 6 months she'll change. They are telling since 6 years, 10 years. We'll see. Hopefully they'll change the law. It's good. They'll make it little simple is what they said. It will never be simple, that's for sure. Right? Yes. Probably be simple for us to understand, for her to understand a little bit. Yeah. All this you studied and went, then they asked one more question. When parents only die, who will file the return of the child? Obviously, guardian. So that is a notification. Guardian also not there. No, parents only died. Which guardian then? So they'll given the option grandfather and all. We'll click grandfather and come. Say this notification in 2017 it came. It shall be assessed in the hands of the minor. This notification has come in MCQ. Special case, assessed in the hands of the minor, not legal guardian, minor. First option will be legal guardian. I mean, relatively recent notification, yes. Yes. No. That's as per the CVDT. Again, MCQ question. So interest, dividend, rent from investments made by parents in the name of minor child, yes, it is clubbed in the hands of the parent who is not disabled. Income derived from manual work, it is hands of the minor alone. Income derived from minor activity of skill, minor alone, no clubbing. Interest on FD derived by minor child when money received by such minor is from manual work, etc. FD interest income shall be clubbed. This is again a different point, irrelevant point, but in the exam they will pick on this. So you will be wondering, when that income only is not clubbed, why should the interest be clubbed? And mind you, only FD interest. Parents, this happens in many cases. Parents are in India, children are studying abroad, and there's an asset abroad which has got nothing to do with India. Will that outside income be clubbed in the hands of the minor who is outside India? Minor basically is not a resident. Is it only for resident minor or all? Case law, Supreme Court decision, no, Bombay High Court decision. Income of a minor child of a non-resident cannot be clubbed if such income accrues or arises outside India. If it's arising in India, then yes. Such income is taxable in the hands of the minor only if he is a resident. First of all, it should accrue in India. Secondly, you should be a resident. You means the minor. Section 5 cannot override Section 64. Your residential status and all cannot. So here we said if both parents die, then minor. And if I have to club, it has to be clubbed in the parent's hands who is earning more. There was an interesting case where both the parents are earning equally. Exact same. They are running a partnership firm, everything is the same. Salary same, partnership firm, profit same, everything same. Nothing, no other income was there. Where will you club? Supreme Court said put toss. Alright. So you see, all these are cases, I am not even making it up. See, there is one more case which is this. SS Gulati, 1988, Punjab and Haryana. The husband or wife have equal income or no income apart from what needs to be clubbed. It cannot be established whose income would be greater. Clubbing will fail and the income shall be assessed in the hands of the minor. So, in the minor's hands, two things will come. One is this, one is if both parents die. An interesting thing, minor child's income from agriculture shall be included in the hands of the parent with the higher income for the purpose of aggregation. So, there is something called aggregation of income whereby though agricultural income is not taxable, it is aggregated into the mix. For example, if you are earning, let's say, 1 lakh other income, or let's say 4 lakh other income, and some 10 lakh agricultural income. If I pay tax only on 4 lakh and I don't even consider this, then I will pay using the slab rate. But what they said was, you keep this agricultural income 10 lakh first and on top of that you put 4 lakh. Now you see, this 4 lakh will directly go to which slab? 30%, no doubt about it. Whereas here, I would have got that 0 to 3 lakh, 3 lakh to 6 lakh, all that. I would have paid less tax. Here I am paying more tax. So, aggregation is a concept where first is they will calculate tax on this, then they will calculate tax on this, then they will subtract this portion and eventually I will end up paying higher tax. So if a minor is having agricultural income, you cannot say it is exempt and not club. You need to club. That is this case. Minor's child income from agriculture will be included in the hands of the parent. The higher income for the purpose of aggregation only, even though such agricultural income is exempt. So then HUF also same thing. When it's partitioning, you obviously need to plan for that. So clubbing provision shall be applied only when there is a transaction of gift. In case money is lent to another person, spouse or HUF, which creates lender-borrower relationship, it is not a transaction and subject matter of transfer. So one peculiar case, income will be clubbed. What about loss? Will club loss also? Does income includes loss? Yes. Point number 3, income for clubbing always includes loss. So when I do the clubbing, should I do the clubbing of the total income or the net income? Which means, will I first take the benefit of exemptions and then only club, or how is it? Or first club and then give exemptions? So these are all small points, right? So see the next point. Income which is subject matter of clubbing shall be the first computed in the hands of the transferee under the appropriate head with all the permissible exemptions, deductions, etc. The net income only shall be clubbed in the hands of the transferor. So where the husband transfers a capital asset without consideration to his wife, who in turn sells it for a capital gain. Capital gain would be first computed in her hands with all the relevant exemptions and deductions like 54F, EC, and then only the net taxable gain shall be clubbed in the hands of the husband. Cross transfers, a Supreme Court decision. This we can understand, cross transfers. So Shah Rukh Khan and Saif Ali Khan are friends. So rather than gifting it to wife, they'll gift to each other's wives to escape clubbing. So Shah Rukh Khan gives it to Mrs. Kareena Kapoor 10 lakhs, Saif Ali Khan 5 lakhs. So what happened? Income from the gift received by Mrs. Gauri will be clubbed in the hands of Shah Rukh Khan. So this 5 lakhs will be clubbed here, 10 lakhs will be clubbed here. Cross transfers, again very difficult to find out, but then yes, this is the provision which is there. All that people were doing to curb it from happening, yes. So these points now, 10 points are all adjustments which are asked in the exam. We'll go through one by one quickly. If I give you a loan and you will invest that, if husband gives a loan to the wife and wife invests that in something and earns money, clubbed or not? Not clubbed. So that's a loophole. The first one, for the chapter of clubbing, the clubbing shall continue to apply even if the transferee has converted the transferred asset in some other form, we know. For the chapter of clubbing, income shall include loss also. Therefore, losses are also to be clubbed. For the chapter of clubbing, the transferee sells the transferred assets, then capital gain also shall be clubbed. For the chapter of clubbing, income arising out of income earned or transferred is not to be clubbed. Therefore, if debentures are transferred to son's wife without consideration and she receives debenture interest which is invested in the bank FDR, the debenture interest shall be clubbed with the income of the transferor, but bank interest will not be clubbed. This is the accretion. So parent earns PGBP and transfers to the child to avoid tax. It will definitely be clubbed in the hands of the parent. Under which head? Or another thing, I give to the minor child or to the spouse an asset and she is earning income out of it, rental income for example. But husband gave his business income to the wife and using that business income, wife purchased the house and now she is earning interest. That rental income. Rental income now is clubbed in the hands of the husband as house property or business. See, those questions also are coming. Supreme Court. Clubbed income shall be retained under the same head in which it is earned. Therefore, business income of a minor child shall be clubbed in the hands of the parent under PGBP. The business loss of the parent can be set off against such income. So, it doesn't matter from which income the parent paid. It matters which income under which head you earned. So, you earned under income from house property. So, it will be clubbed in the hands of the parent in income from house property. Got it? It's not the other way around. So, clubbing the income, all the deductions will be allowed first and then only it will be taken. Clubbing will take place even if the assets are indirectly transferred through cross transfer, we have already seen. Mr. X gives an interest-free loan of 20 lakh to Mrs. X. Out of the loan, Mrs. X purchased a house and earns rental income therefrom. Here, clubbing shall not apply because loan is not a transfer. Clubbing takes place where asset is transferred by the individual to the spouse. Giving loan is not transfer of assets. If Mr. X gives 20 lakh as gift, then clubbing shall apply. The HUF is a partner in firm ABC through its Karta, Mr. X, and has 25% share in the profits of the firm. So, HUF is a partner only through the Karta. So, basically, who is the partner? HUF. And the Karta, Mr. X, is only there in a representative capacity, not in his personal capacity. Wife of Mr. X is employed in the firm ABC. In case, clubbing shall not apply because Mr. X is a partner not in his personal capacity but in his representative capacity. Clubbing applies where individual is a partner in his individual capacity and substantial interest portion comes. So, I told you about the trust already. If a trust is created for the benefit of a minor child, then the income of the trust shall be clubbed with the income of the parent under 64(1)(a). This shall apply even if the trust deed provides that income shall be accumulated by the trust and shall be given to the minor child when he attains majority. They have changed the law now, that's what they have said, that it will apply. So, that's all simple provisions. Any doubt? Yeah, tell me. She is running the business. Okay, TDS as in what way? Got it. No, that's a good question. Income only will be clubbed. So, TDS you have to claim refund. This fellow you has added and he has to pay extra tax because there you will deduct against the PAN, right? So, then it will be difficult to deduct that and then again give it to the thing. So, only clubbed is the income portion. TDS is anyway a recovery mechanism. So, that the wife should claim the refund, whereas husband has to pay additional tax. Done. So, 10 more minutes, we will just finish off the at least the basics of set off and carry forward. It is in G1 chapter, simple provisions, but yeah, set off, that's what guys, these are all the hidden points, anything they can ask in the exam. Yes, so there is something called deemed income. So, few examples. Cash credit. When any sum is credited in the books of the SC for which SSC offers no explanation or explanation is not satisfactory at all, then the sum so credited will be charged to be the income. This is section 68 which we saw in the basics one question. So, randomly you will get some money and when I am trying to explain what it is, I will ask you, you have no explanation to give. This all comes in scrutiny because you are showing 5 lakhs, but your bank statement is having 45 lakhs, which means there will be some credits which are unexplained. So kindly explain. If it is by mistake given to you, whatever, then I'll agree. So as I told you, income tax department has all data ready. If you see, the bank accounts also have to be linked, and everything is related to your phone number and OTP now. So they will analyze your bank statement with your whatever you have given. You are told 10 lakhs as the income, but your bank statement has credits worth 1 crore and all that. How is it possible? So they'll say, okay, maybe it's possible, tell me, explain, no issues. Explain, then it's fine. That is section 68. So in case of a closely held company, if the sum credited consists of share application money or share premium, explanation offered by such company shall not be deemed to be satisfactory unless the person in whose credit is recorded in the books also offers a satisfactory explanation to the AO. So here, if it's share application money or share premium, if it is in your own account, then it's okay. But if you have split it into various accounts, it used to happen that share application money used to go to various accounts. Actually, black money was converted to white money through this depositing to various accounts, and then closely held company said it is share application money. I'll anyway have to refund it very soon. So then they said, boss, nothing doing. In each of those accounts, all of you explain properly how the source came. This was section 68. So basically, there used to be, again in 68 also, the credits also they are talking to, and even including 69 also, investment, so to speak. So in the year 2016, they changed the law. If you remember, in 2016, they told that if you declare your income declaration scheme they made in 2016, Arun Jaitley. If you declare your income, 45% tax, 55% you keep, no questions asked. Many people didn't follow that. That's why immediately in 2016 he changed the law, created this 115 BBE and 271 AAA. Both sections put together. In case I find any unexplained credits in your account, 60% tax, 25% surcharge, 4% say 78%, and penalty of 10% on that under 271 AAA, which means 78 plus 7.8%, 86%, 14% why you are giving, that also you take, right? 86% tax, deadly. So basically this happened in a thing called Lovely Exports, where they went to slum dwellers, each of cash they paid 2.5 lakh, 2.5 lakh, 2.5 lakh, and then they said, you come and invest in the company. Don't invest, I will put it in the bank account and I'll issue shares. So these people are slum dwellers investing in shares of Lovely Export to the tune of crores, conversion of black to white. So then when I went and asked them, what is this credit? They said investment. Explain the investment. No, it's there. You can go and ask them if they want. Why are you asking me? They have invested in my company. You can ask the slum fellows. So when they asked the slum fellows, they said, I don't even know that I had 2.5 lakhs. Correct? It actually happened. So there was no such provision only in the entire Companies Act. That's why this entire series came, 68, 69 and all those things. And Supreme Court, Lovely Exports won the case. There is no section only in Companies Act. That's why deadly, all these sections came later. Now interestingly, there have been some amendments in these sections for Finance Act 24, which means last time 115 BBE, 271 AAA and all will come, it will be November 24. Minor amendments are there. There have been change in these rates actually, to be honest. It's no longer so stringent, which means last time ever our exam, November 24. Which one? That is all 1%, no, 1% into 3 months like that. Yeah, 100%. It was for so many years put together, then it will go. Yes, you're right. Where the SC has made investments are not recorded in the books of accounts, again deemed to be the income. Same unexplained money, all these things are the same. Similarly, unexplained expenditure also. You have crazy expenditure for which you have no proper documentation, nothing. That will be deemed to be the income, all these things. Anyway, coming to set off and carry forward, you can come to page number G3 for some general rules. Study that and we'll close. So again guys, summary, I am writing it here only, no problem. Income from salary, basically intra-head is there, inter-head investments are there. Intra-head means within the same head. Speculation business loss can be set off only against any other speculation business income. Loss of a specified business covered under 35 AD can only be set off against 35 AD income. We have seen this. Long-term capital loss can be set off only against long-term capital gain. Loss from the activity of owning and maintaining race horses can be set off only against income from activity of owning and maintaining race horses. So these are all normal rule. What is the normal rule? Within the same head you can set off. Means if it's a income from business, you can claim any business loss. But here, that's what I'm saying. If it's a specified business loss, only specified business income. And if it's a long-term capital loss, you cannot do it under short-term capital gain because both are in the same head. No, it's only under long-term capital gain. Income from lottery, card game, etc., you cannot set it off. Any loss from a source is exempt from tax. Agricultural income, that also not eligible to be set off. Similarly, if you see inter-head adjustment, generally one head, if there is a loss, you can set off against other head which there is a gain. But inter-head adjustment, loss under the head income from house property, self-occupied property, let-out property, etc. Such loss shall be eligible for set off against any other head of income. But it is restricted to maximum 2 lakh rupees. Income from house property can be set off maximum 2 lakh. Portion of unabsorbed loss, if any, can be carried forward to subsequent years and set off only against income from house property. So in an LOP, I have an interest payment of 3.5 lakhs. Can I claim full 3.5 lakhs? Yes. The loss is 3.5 lakhs, assume. But how much can I claim? Only 2 lakhs. Remaining 1.5 lakhs can be carried forward. How many years? Indefinitely. And it should be set off only against income from house property in the future. Loss under the head PGBP, including unabsorbed depreciation, can be claimed under any other head of income other than salaries, cannot be set off against salaries. Long-term capital loss only against long-term capital gains. Loss from speculation only against income from speculation. Loss from specified business under 35 AD only against income from specified business under 35 AD. Loss from activity of owning and maintaining race horses, again income from activity of owning and maintaining race horses. Short-term capital loss, set off only against long-term capital gain or short-term capital gain. Short-term capital loss is set off against long-term capital gain, short-term capital gain. Nothing else. But long-term capital loss, yes, only again long-term capital gain. Loss from any lottery, card game, etc., not eligible to be set off. And last point, requirement for carry forward of losses. How many years? Loss from house property, 71B, 8 years. To be carried forward and set off against income from house property. Earlier it used to be indefinite, now it is 8 years. Many years ago it changed, that is 8 years. So whether return of income to be filed for these cases, now this I will again connect in assessment procedure, don't worry. So whether return of income should be filed or not for this, nothing like that. Unabsorbed depreciation, indefinite period, it can be set off against any other head of income other than salaries. Again, no need for me to file the return of income. These two are important points. Without even filing return of income, you can carry forward loss from house property and unabsorbed depreciation. Because in that return filing, if it's a loss return, only these sections are covered. Means whether you file a loss return or not, I don't care. 71B and 32(2) can be carried on. Business losses 8 years from PGBP. Speculation losses 4 years only from income from speculation. Specified business 35 AD we saw indefinite period. Income from specified business. Loss under the head capital gain 8 years. Again short term or long term gains you can do. Long term capital loss only again long term capital gains. Owning and maintaining racehorses 4 years to be derived from that income. That's about it. Cool. So other things we'll see later, guys. So with that we will stop, and next tomorrow first we'll do capital gains. That will take obviously a lot of time. So many provisions are there. Yes, that is also an important area with all the discussion, and then we will do the other areas.